inflation reigniting, so that's really brought Treasury yields, moving much higher in the recent ranges they've been trading. I know you noted the 10 years over 410 now at around 411. We were as low as 394 at the end of last week. We started to see that flight quality last week was more around, the consumer or the fear of the tech stocks, as well as some fear in the private credit markets as well. So you've seen really a retracement of where treasuries were at the end of last week after a strong February month.
It's interesting because I saw that in your notes, and that particular sentence or paragraph stood out to me because how people were, you said most recently how the bond yields were moving forward, breaking below 4.0, and the crisis of confidence in tech stocks and fears with private credit. I mean, we know private credit is still very much an issue. Fear of tech stocks is also an issue. I mean, even this morning we saw Blackstone under some pressure here as people have been doing some redemptions in one of its private.
All right.
In the meantime, now they're running, and you are seeing that bond yields at 4.1 and change. Where do you think bond yields head in the next 2 weeks?
Yeah, I think if you see this conflict,
All right, hedge flows starting to move up a bit. We got negative gamma all the way down to 66.50, 66. What is this right here? 66.75. Well, the coffee's good. Good morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, March the 3rd, only the second day of trading for the new month.
So it's really going to be a situation where rates, really can sell off a little bit more from here. And then at what point does it get drawn out where you start to worry about,
Let's see.
Maybe you start seeing that safe haven status come back in. You could see it retrace back lower.
So at this point now, what do you tell investors? I know you have an ETF for fixed income exposure that you'll share with us. What is
that's major.
For 2026, or at least this first half of this year?
Yeah, we really like Treasury option income. If you like rates that trade range bound but volatile, the premiums that you can harvest within that volatility, and we have strategies that imply this. We have a core bond fund, intermediate type duration, but has an overlay of this Treasury option income. AGH is the ticker. You can extract some value. It's okay to have some volatility, and the key is active management in fixed income. If you're moving around these ranges, as I said, the 10 year has been trading at a pretty wide range lately, 4% to 430. We broke through a little bit. Now we're back heading towards the middle.
Okay. Thanks for sharing that, David. That's pretty wild.
Markets have been taking a leg down in the last hour or so. At this point now, the NASDAQ, Dow, and Russell are all down more than 2%. The S&P down 1.8%.
Don't be a hero.
Is that presenting any opportunity?
Don't be a hero. We'll see what we get, but we're below recent range lows at the moment. 6,800, below 6,800, things get dicey. Volatility's up. Private credit, they keep talking about private credit. Apple is moving higher. Apple's moving higher into the open. NVIDIA is bouncing. We got about 8 minutes to go. Okay, so crude oil is going to have continuous bid here. Looks like Iraq is shutting down production. They're having issues with ships making it through the Straits of Hormuz. I think it's going to be a short-term thing. If you have lots of cash, I personally am looking at what Brent has been talking about, that update in Gamma, the Gamma channel. I'm not going to be a hero. Because we could make it all the way down to 6,600. So short-term bounces most likely get sold into. until we see some firming. Markets are bidding defensive stocks. That should be pretty obvious by now. Since January, we had a nice bid. And SPHD, SCHD, what did that close at yesterday? SCHD. Okay, that's looking like it wants to move. That's on the watch list still. SPHD. These are longer term. These are longer term solutions for your 401k, IRAs, etc. SPHD, SCHD, DIV, another dividend ETF. These are all looking pretty strong. Futures are starting to climb off the low. Okay, shorts are covering. Shorts covering.
Appreciate it. And folks, we're just going to take a quick break and we'll further down to the countdown of trading. Where stocks are looking
Yep.
about 2%
Oil up.
this morning.
USO up.
Here on Wall Street, we'll have you covered opening
Crude oil. Okay, Exxon, Chevron, those stocks will be bid most likely. Palantir back into its range. Okay, Exxon Mobil. That's in the lower middle part of yesterday's range, Exxon Mobil. Okay, Murphy Oil. Apache, all those gapped up yesterday. XLP, consumer discretionary. No bid there. Healthcare, looking okay. Materials. Yesterday we saw USAR, and stocks like that starting to turn. Frano's looking at AVXX, right? AeroVironment shares. Let me see how that plays out today.
Welcome back to Opening Bell. I want to get started with the countdown of trading. When I woke up this morning, we were saying we were up off the lows around 5 a.m., but we've now resumed some selling here where we're seeing major averages down about 2%, and we're still selling abroad as well.
Okay, we got 4 minutes to go. 4 minutes to go.
Sam Bonus is with me. Taking a look at what's been going on in the big picture. I mean, it's just selling everywhere. Yeah, it is a global sell-off, and it really feels like this is the kind of
Oh, jeez. They're just repeating the same crap. A global sell-off. It's the end of the world. Looking for an opportunity. Stoke the fears. People will tune into their channels when they're fearful. Not so much when the markets are doing well. Sorry about that. Let's get this zoomed out. What's going on here? Okay. SPY. Okay. Let's get ready. I'm your host, Cousin Benny, coming to you from closingprint.com. We have 3 minutes to go for the opening bell. It is March the 3rd, Tuesday. We'll see if they buy this week. This short, initially shorts will cover. Okay. Looking for it to roll over. If it doesn't roll over and we keep rallying, that would be really unusual, I would think, at this point. We're down over, what, 2%? We're down 2% at one point. Yesterday, we were down 175 points, and we rallied back to even. So that could happen again, too. We'll be watching out for that. Let me fill in my S&P puts and calls. Let me do that now. S&P.
I don't think this thing in an isolated way will. I think there's some risk there's more inflation than people think. And that could be like a
Jamie Dimon talking.
If that ever happens. So hopefully it doesn't.
There goes NVIDIA. NVIDIA pop in there. NVIDIA.
So this right now will increase, gas prices a little
Today's
bit.
March 3rd. Let me grab some 0-day.
Major inflationary hit. Again, if it went on for a long time, that would be different.
That's Diamond on the exchange yesterday talking to our Leslie Picker about the Iran conflict. conflict and some of these inflation risks, Jim. We're starting to toss around the term skunkflation a bit.
But I thought that one of the takeaways, maybe I'm a little too optimistic. I'm not at this very moment.
CNBC with their catchy phrases.
Yeah, Jamie did say we're okay.
Netflix, a little bounce there. Netflix, look for Netflix to follow through. There goes Nvidia. Nvidia popping.
He did not give us that. And I thought that he could have easily lowered the boom on that.
Well, what most he said in recent days is I'm seeing people do dumb things.
Right.
Shorts covering.
I think that he would always say that there's dumb things being done. I know when you talk to Lloyd Blankfein, you got to see him again last night for his feedback. I mean, he makes a point. Look, it's going on real good for a long time. It's been really good for a long time, which is this kind of like, well, you know, it's been really good, meaning how long can it last? I mean, that's something like your mother would say. Hey, it's all great until it's not.
I know. I mean, the banks they compete with private credit. We talked a lot about a number of years ago when we started to see, for example, private credit finance.
Okay, 30 seconds to go.
The banks provide leverage to those same firms. Called back leverage, which kind of goes around the back. And so it's an important part of the business, too.
Nvidia. Okay, that's back. Nvidia, let's see. Extended hours. There we go.
We loved enterprise software. And all you have to do is look at MongoDB. I mean, this thing, you know, a lot of people, if you listen to ComSchool, they're like, hey, man.
Okay, we're open. Markets are open. Nvidia's on the move. Nvidia's scorching here. Nvidia. Netflix. Okay, let's see how far this goes. Keep an eye on Trace.
Extreme low, take alert. Low, take alert.
Okay, S&P on the move. People buying S&Ps. Okay, S&P is rallying. Nice little pop there. Nvidia's on the move. Okay, my son just bought NVDX. He's going to do this for a quick pop, probably. Let me just send him the broadcast. Okay, we're starting to climb here. NVIDIA, nice little pop. Okay, there goes Microsoft. They're buying these beaten down tech stocks again. That's pretty interesting. New York FANG components coming off the low. Okay. Too much hair on fire over at Schwab. The global sell-off. We've been due for this for some time now. If you've been around, you know that. The media just doing what the media does. Let's look at the S&P. Okay, S&P 500. We've been in this range really since October. Okay, and we're testing the low again. Do we bounce back up into this range? That'd be pretty remarkable if it does. Okay, so we could see some more weakness. Let's see how far we go with this. Microsoft still popping there, short covering. Okay, let's look at these New York FANGs. Apple, Apple trying to get above the 50-day yesterday, got rejected. Apple, Amazon, sorry about that. Let's see, Amazon. Okay, that's rolled over a bit. Google, the lower part of its range. Meta, trying to get above the 50-day. Microsoft, software, IGV, software. Okay, NVIDIA, inside day on NVIDIA. Okay, shorts covered initially. Netflix looking pretty good. Netflix holding up very well. Got a 120 price target from JP Morgan upgrade. Okay. Let's see what Trace is doing. Trace turned back down. Okay. Okay, looks like they're selling into strength.
Extreme low tick alert.
Well, 6750s are bid $20. 6750s, 0 day, 6750s. 6700s, what are those going for? $7, $8, $8 or 6700s. Okay, it is expensive. Okay, rolling right over. Red Rover, rolling right over. Okay, this is looking more and more like this put fly is going to start to make some money. That S&P put fly. Okay, one of our new members, Ursel, JDST yesterday. Okay, up 17%, up 17%. Gold.
Low tick alert minus 800.
Jeff, I got a sharp take on these target results. I put out my thoughts. I did my video. I went live on X Zone this morning as soon as you told it. I think the results suck. I think it's a show me story. They need to start stacking before. I think what say you on target? I think we're here a lot. How many USCG. Likely increase in gas prices. I think this backdrop is playing into the hands of Walmart fixed bottle. I think there are so many things that cars can do to improve that business right here, right now, no matter what happens in the Strait of Hormuz. Someone's in the other side of it, to be honest, right? It's ASTS.
RKLX, RCAT, MUU, RGTX,
TURB, NPT, RKLX, PLU,
PLU,
ONDG, ONDL,
BATL may resume in less than a minute. USCG,
STAK,
EOSU,
ASTS, CISS, EONR, COHX, ALUR,
POET,
ASTX,
ASTX, ASTS, RKLX,
NPT, RKLX, PLU, MOBX,
RCAT, STAK,
MARPS, STAK, MDBX, ASTS,
USCG, WULX,
ASTX, CERS, NPT,
FRGN may resume in less than a minute. BATL may res in 10 seconds. STAK,
STAK, CIFG,
TDW,
MDBX, ALUR,
low tick alert minus 800. USCG,
ASTX, CERS,
WULX, TURB,
DFNS,
ETSA, SE, RCAT, AAOI,
STAK, CIFG,
TDWRGN may res in 10 seconds.
RCAX,
RCAX, MDBX, WULX, TRE, TURB,
DFNS,
RCAT, extreme low tick alert.
BATL, MDBX, RCAX,
RCAX, TMDE may resume in less than a minute. BATL, SE, ASAN,
BATL, RCAX,
AAOI,
All right, so Microsoft trying to push a bit higher, Apple as well. Netflix pushing higher.
CGIO, TMDE may res in 10 seconds. TMDE, ASAN, RXT,
So far, we're holding this area.
SABR, VRAI may resume in less than a minute.
NPT, BATL,
GDXD,
Currently, we're looking at 11-1 down volume on the SPY, 11-1 down volume on the Qs.
IHRT,
Extreme low tick alert.
NPT, VRAI may res in 10 seconds. SABR,
NPT,
HKD, NPT. EDSA.
Jeff Brook and Ed, thank you so much. I know it's a very busy morning. I appreciate really important context here. Sir, I had some important context on operation after hearing from one person who this stage from navigating big policy challenges. I just want to mention for the what you're seeing in markets here right now. You're seeing the Dow close to about 1,000 points out of the block here.
SABR.
Selling pressure. I think that's fine for all prices.
GDXD. NPT. EDSA.
Holding up fairly well so far, all things considered.
STUB. IMB.
MOBX.
MDB. GDXD. UBIX. NPT.
Similar to what they did when they financed the acquisition of Paramount by Skydance. Same thing, came in at a far higher price as well at that point to where the stock was trading. But did want to note that stock has turned around after some enthusiasm around the name when they did seal the deal.
Yesterday, Fitch cuts the long-term debt to junk, $79 billion in net debt, right? And Sarandos, when he talked to Bloomberg over the weekend, said when you're 6 to 7 times levered, you're gonna have to make some money. And
Gold futures down.
Yeah. Now, I mean, the key for Paramount, and at some point, I'm sure we'll speak to David Ellison, will be delivering on the $6 billion in synergies that they
Extreme low, take a look.
a combination with Warner Brothers. If you can do that, you take the leverage down very quickly. In fact, they have a plan to get back to investment grade.
MOBX.
I am, by the way, now also getting.
We're below 6,800, so we are risk off.
I mean, honestly, God, I mean,
RGNA Residential
Yeah, why
LLC.
not? I mean, it's, so what are we supposed to live on here?
I saw $1 billion buyback. It reminded me here. I see you verse it, and I raise you Ziff Davis.
Oh gosh, you're going there.
Well, they sold a
We're really
vision.
going into the
They
lows
sold-
of market cap today.
Vivek Shaw sold a business for more than the company's market cap. That can do it. It's probably not done going
Wow,
up.
look at Z. You know what? I'll grant you that one. A stock up 63%. I don't care if its market cap was 1.7 billion.
Snowflake turning back up. Microsoft still bid.
No, I'm having dinner with him.
LLC.
Better.
UST.
By the way, he's had dinner with him, and then he just he ghosted me.
I ghosted him. But why don't you
Tough
tell
guy.
me? You know, I thought, I have to say,
ST.
I did not think Blackstone would be down big on whatever.
It's getting crushed. Blackstone, hold on, guys. I'm sorry, and the entire alternative asset manager.
The group again.
Blackstone is down 8%. Got Apollo down 5.7. Blue Owl down 6.5. Below $10 a share. I see it right there.
Yeah.
98. Yeah. It's and again, it comes back to what we dealt with towards the top of the show. The redemptions at B Credit, $82 billion.
Meta's holding up very well. Meta.
Credit fund, or 7.9% of the overall.
Meta's holding up
by actually having
for now.
like contribute money to the fund, or buy into it.
Microsoft climbing off the low. Microsoft.
Time that we've been discussing virtually every day now for weeks around credit, and I would come back.
Netflix.
Not necessarily around default.
Netflix continuation.
It's been around flaws, things of that nature. It's not been around the software companies that are so concerning. But if you believe, let's say in 3 years' time or 2 years' time,
Low,
some
ticker
software
at
companies
minus
will be
800.
unable to pay back, you may want to get out now. And so it becomes a real question around liquidity for so many of Blackstone's competitors, frankly, where it may be far harder for them not to put up gates.
Well, I'm watching people with this vibe coding where they're basically saying, talking to the machine. Machine then, this is Anthropic.
Yeah.
It comes up with a solution. It codes itself. And I'm saying, boy, I do not want to be in the crosshairs of this Anthropic. It's just too great. But the big ones, Zendesk, I don't know. But Anaplan is so thought it through. I think that these companies are part of a negative groupthink that is just horrendous. But I will say, when you worked at Goldman or Morgan Stanley or JP Morgan during this period, and you watch the money being made, and you watch the sport teams being bought, and you said, what am I doing in this?
The interesting thing about S&P right now is that at this level, we could see if this starts to cascade lower, we'll know that dealers are going to start selling. Hedge flows for now, they're selling. They are selling for now. We got a pretty big level down here at 6,700. 6,700. That wasn't there at the open, was it? No, that wasn't there. You see that? That's 7,000. That's 6,700 came in right at the open. So they're selling down there. Let's see what 0 day. 0 day, pretty obvious what's in play at 0 day. 6705, 6,700. There looks like a credit spread there. Dealer is long at 6,705.
Just something putting it out there is that now I think these guys are all oversold. I just thought that Blackstone was going to do better today. I really did.
Well, Dave's young. John Gray going to be a guest, obviously.
See if we can develop a trend at all today. The trend is down. You have those puts.
Low tick alert minus 800.
All right. Futures are slipping a bit lower now. Futures slipping lower.
Certainly not helping sentiment today. Dow's down 1,000. AD line.
Are watching in this sell-off.
Yeah, Nicole, this is actually a little bit different than what we've seen over the last couple of trading sessions where we had a rotation trade taking place. Right now, you are seeing every single sector selling off, and only 4%
Extreme low tick alert.
500 is in the green so far, so every single sector is not being spared for today. We broke down below the first key level that I was looking at, 6790. Once again, we are seeing an acceleration when it comes to volume, and we want to be below the 6700 level. If not, we continue to move forward.
The downdraft can take everything with it. Okay, so just be careful.
You need technology and communication services to really catch a bid in order to kind of offset some of these losses. That could happen. That's exactly what happened yesterday. But once again, you are kind of seeing this sell everything type of market. We haven't seen that actually throughout this whole.
Okay, the 200 days down here at about 6% off the high.
Volatility is still a tad bit elevated here, sitting at around 26 or so. So we are implying some pretty decent moves, but keep your eye out on the price action.
About 6%. A little bit more than 6%. If we get down to the 200 day today. Okay, so we're going to have opportunities coming up. Okay, so sit on your cash. I'm looking to do some TRBCX, adding to it. TRBCX, I'm looking to add to this in my retirement account. Waiting for this to fall a bit more. You've seen where we marked this up, where we're looking for prices to get to. TRBCX, let's see here. Okay, so we're looking for this buy zone down here. Trend line catching up. Everything's starting to line up for a move down there. So with private credit being an issue, volatility is higher. We got the Iran issues. Sit tight. The New York Fangs are holding up pretty well, all things considered. They bounced recently. New York Fangs. According to the media, all sectors are down. Let's see what that looks like. All sectors are down. You can see here. Okay, XLB's off the most. Big reversal on XLB. Yeah. Sit on your hands. Hold on to the cash. Netflix is holding up fairly well. Netflix. Gold short is working.
The other thing is we have a rising 200-day moving average that is now near crest of the price on the NASDAQ. So I think that's an important level for potential support in that particular index. But started to see a bit in the bonds last week. That is reversed because 10-year yields are rising based on inflation. So ideally speaking,
Netflix trying to rise some more. Netflix.
It's not necessarily from money printing, and that's being imputed into what's happening from the interest rate standpoint, but also the equity risk premium now, which essentially is coming down based on higher rates.
I'll also add in that Benzinga is reporting that in Europe, gasoline prices just
Metals and mining are down quite a bit.
the last time they've had some big moves was in March.
XLK, SMH,
When the Russia-Ukraine event turned
pulling
on,
back.
happened, and then I remember being there
Microsoft.
in Cyprus and living there in the summer. And
Microsoft trying to bounce here.
there where we saw
Still basing.
was unbelievable at that time. Dan,
Just got a break above 408 or so.
we're very interested in some of the moves in bonds. Could you share that with us?
So just sit tight with Microsoft if you're thinking about that one. S&P looks like it wants to keep going. Hedge flows. Let's see if we get any kind of bounce. We're right close to this level that came in this morning. This came in at the open, 67.05. That wasn't there. That wasn't there. Okay, so at the open, that wasn't there. Now it is. Okay, let's see if they test this or not. Okay, so yesterday we were talking about if you're going to short the markets or you're going to hedge, do it at the high of the day, right? So we pretty much recovered everything that we lost yesterday, and then of course we're rolling over again today. So if we get a nice little bounce, I'll be looking to add to the hedge that I have, the 66, 65, 6400 put flies. I'll be looking to add to this, okay?
Usually there's some dispersion between gainers and losers in sectors. Not the case. Money is exiting the market right now because every sector is down. Materials are the worst.
Okay, so I'll be looking to add to these put flies right here.
These are a couple of the leaders in the last few months as there's been some rotation.
I mean, it didn't seem like we could didn't seem like we could pull back to 6,600 until today. That was more. This is a hedge. So now it's looking more and more likely that we'll at least see 6,600. The 200 day is right below that, 65.75. Netflix pulling back in a little bit. Netflix.
Completely reverse the trade. So just look at your levels and stay nimble.
Gold short, JDST. Gold short working.
Technical analysis or fundamentals here at home. This is now a headline-driven market. So if you have heavy trading on a day, that doesn't necessarily mean capitulation. And I think that's a key point to make here. I mean, you have the Dow down 1,086 right now, and I think that's an important point. And people should stay nimble and be very prepared for a wild market. I'm really appreciative of both of you, Dan Grant and George Sillis. Thank you for being here. We'll continue to watch every element of this story. And I thank you for being with me here on the opening bell. I'm Nicole Petalides every single day here on Schwab Network at 9 a.m. and 2 p.m.
Okay, JDST, that's a gold short. Gold short JDST. That's up quite a bit this morning. JDST. Coming off the low.
Low ticker at -800.
Okay, up 21%.
Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market.
Market's holding up fairly well for now. Hard to tell what they're doing down here. S&P. S&P. Hard to tell what they're doing at the moment. Just sitting here. VWAP.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the
VWAP just overhead, watching MACD. MACD is drifting up.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free.
Expecting bear flags to break to the downside.
Mom, when my grandparents moved.
Let's see what VIX looks like. VIX.
I don't even know if they could envision it to leave everything behind, literally come across.
Okay, so those 2030 call spreads and the March 2030 call spreads, I'll probably start to take some of these off, maybe send some out to April. All right, VIX looking pretty good. If you're long VIX, the March 20 calls, March 2030 call spreads that we mentioned weeks ago coming into play. Volatility. Not quite at extremes yet. So we get to 30. If VIX gets to 30, that'll be the area where we'll start look for a resolute bottom. Let's see. NVIDIA. NVIDIA is holding up very well, all things considered. NVIDIA. Inside day. Microsoft. Okay, so the stocks that are actual companies that are actually bullish this morning, we got Target with a bounce, Walmart, not so much. CF Industries, we talked about fertilizers last week, was consolidating, just grinding higher. CF Industries, Mosaic, no follow through. Archer Daniel Midland, consolidating. Thomson Reuters, mentioned that one last week on Tuesday. Thomson Reuters futures trying to hold here. VWAP overhead. Watch for rejection at VWAP. Scare the children. Just keep talking like that. Scare the children. Oh boy. Okay, we're down 2% across the board. S&P, NASDAQ.
We're going to find out why and how a CEO that has been at Target his whole career since starting as an intern 23 years ago is the right person to lead the company out of this multi-year sales slump. I think the stock really tells the story. If you zoom out, just look over the last 3 years, Target against one of its big competitors, which is Walmart, has underperformed and ceded market share. But Fidelity told me this morning there is a big opportunity to differentiate and draw customers. We walked through here at headquarters some of the displays about how he is planning to change it up and already doing so on apparel, on beauty, on toys, home. These are the core categories that Target used to dominate. We're going to talk about all of it, talk about some of the consumer headwinds, including today's
okay, JDST.
War in Iran and more in just a few minutes, guys, when we sit down with Fidelity for an extended exclusive.
In the recent trend, the most this is up is a couple of days in a row. Just keep that in mind. Gold short. Or they're going to require even larger margins. They're going to increase margins. I'd be watching out for that. Margin increases on gold and silver. SLV. Silver gapping down too.
if WTI stays under 70, we can live with it. If it seems more open-ended and it has more altitude towards 75, then we have to reprice according to that. I also think this notion of, it's not going to be quick and surgical and necessarily.
Okay, ExxonMobil.
But to your point, I do think it's because
Everything's down for the most part.
Getting away easy, and I've been trying to talk about this for weeks. With how much internal volatility there had been, the S&P was kind of pulling a rabbit out of the hat and staying supported. Now, what do we have today? We cracked through the floor that had been in place for year to date.
Micron. Okay, Micron. Those puts finally coming in play. Micron.
So it starts to get a little trickier. Carl, you mentioned how negative breadth is on the S&P.
More of a hedge than anything. Micron.
Because we've been in one of these buy something to sell something.
Gapping down.
Minus 800.
So maybe that means this is the beginning of some kind of a flush. We're 3.5% off the all-time highs. Let's keep that in mind. So it's not like you're cutting into muscle just yet.
Netflix.
What clarity looks like here. If you just have to get kind of oversold, get a little bit of a sense that maybe there's going to be de-escalation, and then the stuff that's already been beaten up maybe performs, because that's what happened yesterday. Relief bounces in software, in some of the credit exposed names, and then you had Mag 7 kind of doing its little bit to try and support the indexes. Today, Mag 7 is outperforming, not by a lot, but it's outperforming. And software, the IGV is down
BlackRock.
market, and it's holding above $80.
This whole credit thing being discussed. Okay.
Is kind of going after the stuff that is crowded and has a lot of profits underneath it. The Korean market getting crushed. Yeah. After emerging markets, non-U.S. stocks have been outperforming for a year and a half. And gold and silver, right? They're not acting like shelter. They're acting like momentum. That's just a dollar effect, right? Largely, but that's sort of the same story because everyone was short the dollar. So whatever you were, short is rising, and so I do think some of this is those dynamics. And we've had this ongoing adjustment.
Okay, so some of these companies like Blue Owl, OWL, short continues.
Culminated at the end of 2021, that whole mini bubble, and then you had the Fed having to get a little bit more aggressive, a lot more aggressive in 2022, and you had an inflation issue. I don't think we're there, but the bond market is taking cuts out of the forward calendar at the moment, and the short end is going higher.
Mike, this journey you talked about under the surface, we've been talking about it for a little while. Single stock
Blue Owl.
we haven't seen in decades, right? Or something.
ARES. ARES. Aries. Whoops.
It's interesting. It can kind of break in a variety of ways. So it's not as if it's one of those things that says, oh, when dispersion is this low, it always means bad things.
All right, what's BX look like? Blackstone. Ooh, that looks terrible. Okay. Apollo, KKR, APO, KKR.
Broke out to the upside from in like late summer last year, and that would be a little more of a is the uptrend in jeopardy or not, as opposed to what we're doing right there. You see where the 200-day would come in right there, and that would be like a 7% drop from the highs, and not catastrophic, but certainly something that you would feel, and always comes with the question of is it just the beginning? Because it seems as if a lot of the premises that we came into the year with, which was a run it hot economy.
Okay, NVIDIA turning up. NVIDIA.
Minus 800.
This early cycle by industrials, consumer financials. Well, that hasn't really held up because it seems like only industrials are holding up their end of the bargain. And then credit cracks are late cycle, right? That's this kind of weird dissonance that we have right now.
NVIDIA still rising.
Hasn't really worked for a while. We haven't had a classic cycle in a very long time. You've had these kind of mini panics or financial crises that were nuked by Fed action. But I do think that's why it's a little hard.
S&P, very unusual. The way it's just sitting here. Because you know what dealers have to do? Dealers have to sell into weakness. Right now, dealer hedge flows are turning up.
Richard, good to have you back. Thanks for the help today. Thanks, bro. You did write over the weekend. You called it a questionable war of choice, and that was before the Secretary of State's comments to the media yesterday, which I think kind of backs it up, does it not?
both his comments and everybody else's. Both things. One, the war of choice. This was not a war we had to fight now. There was no imminent new threat that had emerged.
Okay, watching the hedge flows here. Futures are not plunging. They're just kind of grinding along. For those of you short that have puts. Okay.
Different explanations about what our definition of success is, what our war aims happen to be. I think that's one of the reasons you're seeing the markets doing what they're doing today. Is the United States is not projecting an image of confidence.
You also write about history suggesting that regime change, if that's what we're after.
Okay, those put credits, those put flies are up 30%.
Wants that, does he have to do it on the ground?
Yeah, there's no way we're going to send in ground forces to do this. Iran, remember, is a country of 92 million people. So the idea that we're going to send in a large expeditionary force and let it sit there for years in the hopes that Iran becomes a functioning democracy is just preposterous. That's not going to happen. I think the real question now is, to be blunt, is whether the United States begins to walk back some of its ambitious aims. Instead of talking about regime change, which we can bring about from offshore, all we're going to basically say we've affected a degree of leadership change by killing the Ayatollah and others. We've diminished their nuclear capabilities yet again, their missile capabilities. We set the table for potential regime change, but that's now up to the Iranian people. I think one question.
Nice trade, Russell. Nice trade, Russell.
Accepts the limits of what we can realistically do. And then the other big question is whether Iran is also at some point prepared to end this conflict. One of the things that's going on now is they're attacking virtually.
Mr. Big Balls.
And the question might be,
Russell out the cues.
what are their terms? What are their requirements for ending the war? So we have two big uncertainties.
Low tick alert minus 800.
More low ticks.
Richard and Sarah, I have to say I'm a little surprised to hear how critical you are, especially in light of what we heard last night from Steve Witkoff, the special envoy, in an interview said that in the discussions they said they controlled 460 kilograms of 60% enriched uranium, and they're aware that they could make.
Okay, the extreme low tick that we got at the open, that was a minus 1520.
A strategic opportunity, and it is.
What does that mean? It means 1,500 stocks dropped all at once.
Don't you agree that cannot happen?
I think it's essential that Iran not have nuclear weapons on long-range missiles. Mr. Witkoff's analysis of how close Iran is, I would simply say, Sarah, has not been supported or substantiated by any authoritative source that I've seen. I've just not seen that. Even the Israelis aren't claiming that. What's motivated the Israelis at this point is Iran's ballistic.
Okay, NVIDIA is still rising.
Not that they are a near nuclear power. Remember,
NVIDIA is still rising here, folks. Watch NVIDIA.
we probably didn't do that, but we set it back significantly. So I simply don't buy that Iran has that.
Apple now. Apple's starting to push. Are we going to get a repeat of what we saw yesterday? Remember yesterday? The New York Fangs all caught a bid. It was a little earlier than what we're seeing right now. It was closer to 9:55. We're starting to see everything turning up. Seeing that again. Okay, starting to see that again. Is it a concerted effort to push the markets a bit higher so they can get out into strength and ultimately the markets roll over, capitulate down at 6,600-ish near the 200-day? Personally, I'd like to see the 200-day tested so I could put some of this cash to work. Test it and bounce, put a base in. I know there's a lot of people that don't want that pullback, but we need to really, we need to test it. We're losing this low.
It'll continue to support proxies. I do not think, I'm sorry to say, that Iran is going to emerge from this as transformed.
Okay, it's starting to bounce so far. 200 days right there. It's only a 6% pullback. We've made 175% on TRBCX since the late 2022 low. TRBCX. Okay, so TRBCX, we made over 175%. To give back a little bit, to give a little back, 176%. 10% to date, we've given back. Another 10% would put us down near 178 or so. 180, somewhere in this range.
All sorts of concerns about now sharply higher oil prices and what that might mean for the consumer. Is that something that you'd be worried about watching the headlines right now?
Well, I'm absolutely paying attention to the consumer, deep students of the consumer, and
Trying to roll here, trying to roll up.
whatever the consumer backdrop is.
I assume we're going to see more bear flags. It's the S&P.
Today is a new chapter for Target, really listening to the consumers, because the consumers told us what Target looks like at our best for them.
Okay.
Design-led,
What's Chevron doing?
with style, pairing that with an incredible
Okay, everything is down right now.
that well, we think we're positioned to grow. And the consumer backdrop is one we'll stay close to.
That's what I really wanted to ask you. So you've been in the new CEO job for about a month now, but you've been at Target for more than 20 years. Why are you the guy to turn it around if you've been here for so long? A lot of people are wondering that.
Let's see what's actually moving. Anything. Look at the Dow Jones. It's only one stock up right now. Verizon. It's holding up very well, all things considered. Verizon.
The work we've been up to as a team over the last several months has been all about taking a hard look at the business. Where are we strong? Where do we have work to do? And that's led to real clarity on strategy. And with that focus comes the ability to move with urgency, where we have
Only Dow stock up.
I was going to ask, where did it go wrong? I mean, you just reported another quarter of Comscore sales that were
Microsoft, Verizon, no. Microsoft, Verizon.
string now of declining or stagnant sales.
Caterpillar's down 4%.
So when I spend time in stores talking with our
These stocks all look really good just a week ago.
things they want us to be great at, leading with merchandising authority, we're at our best when we create that
NVIDIA still pushing. Still an inside day, but holding the 200-day. Coming off the low. Buyers showing up for NVIDIA.
we need to pair that with an experience that's every bit as good. When we do those two things well, I'm confident it brings us back to growth, and that's driving every decision we're making in the business right now, where we're going to make investments,
Apple.
we're going to make choices to reclaim.
Apple's still below the 50-day. Tried to get above yesterday. Apple's about to go green. Apple about to go green.
And it's what? It's collaborations, it's new merchandise. Like, how do you get that new exciting feel?
Apple.
I remember I used to go to Target with
50-day.
That's where you used to see lines out the door. It feels like we haven't seen that in a while.
So I love
50-day is right here. Get above the 50-day.
in that question, Sarah. The work that we're doing to bring merchandising authority is about newness. You got the chance to see a little of it this morning. A collaboration with Roller Rabbit, like that'll set here within the week. The guest response to that already has been through the roof, and we're going to do more of that. So one of the changes we're making this year is we used to do partnerships.
Apple looking pretty good here. If it can maintain this relative strength and get back above the 50-day.
That's an example of bringing newness that guests will love, and that's an example of apparel. But we're seeing that type of change across the business. Take a category like beauty. We love the beauty business. It's a business that's grown every year for more than the last.
Futures still tickling the low down here. Futures looks like we could drop. Just watch it.
Well, I was going to say, you were with Ulta. You had Ulta deal that ends in August. So that is a big question, how you're going to keep that momentum going.
Yep, and you'll see change now, and you'll see change later this year as we make some of those pivots. But the change we just set, 3,000 new items, 60 new partners on our shelves. The early response to that has been positive from the guest, and that gives us confidence because some of the places where we've made the most change already is indicative of the type of change we have planned for this year. So when we get to this summer and we set our new Target Beauty Studio, which will be our expression.
435 on those put flies in at 3 average. They're at 435 now. $435 per contract. All right, looks like we're going to move lower here. Futures are grinding lower. As strong as stocks are, they could get hit as well. Apple, so, as strong as Apple is, if the markets start to drip and drop down through this level, dealers will start selling a basket of stocks. The key word being basket. That means a lot of stocks can go with it, even though they're showing relative strength. Okay, so here we got this level down here at 67.05, 97 percentile. It's 0 day. These are new. These were not here at 9:30. If I go back to 9:30, you can see that 6670 level wasn't there. 6705. Okay, 6705, that grew right there. We're just above it right now. We're coming down to test it.
Differentiate in a place like food or in a place like toothpaste or in a place like home goods because they all sell that stuff.
Well, retail's certainly competitive. The thing that I know is we have to be crystal clear on what our unique lane is.
Gold down at the lows, GLD, the gold ETF pulling back. Nvidia. Nvidia still stuck inside day. Nvidia.
You're going to be hiring more or paying more? Both, right now.
Investing more in payroll. The investments we've made in our team over time, I think, are incredibly important because part of what makes that Target store trip so magical when we're at our best is how the team is able.
Target being discussed. TGT. Target. Okay, almost breaking out there. Got rejected at the highs. Today is not the day. Today is not the day for these to follow through. They're going to get hit with the markets, most likely. ExxonMobil, lower. Palantir, lower.
Of retail in the categories in which we compete. And so that the universe of retail is broad. But in that universe, the thing that matters most for us is we have to know our lane. And when we're focused on that,
okay.
I'm confident that we'll be able to make the pivots to get us.
That's interesting. Best Buy is up, Target's up, CF Industries, Paychex, CBOE, Apache, Valero following through.
As we've talked about for many quarters, we've seen ebbs and flows of kind of what categories are strongest across the industry, and some of those discretionary categories have seen pressure in recent years. But here's what I tell you: as I look at our last few years of performance, I am not satisfied. We need to get back to growth, and it's on us to build a plan that'll do that. Regardless.
S&P is still moving lower. Okay, as we move lower, dealers have to sell futures. They have to sell futures, exacerbating down moves.
Well, and I'll say it's always more complicated than that. And so we study the consumer super closely. But as I think about for our business and the consumer, that means winning preference with consumers, family by family, guest by guest, and making sure that we've got the right newness, the right value, and the right experience to win their trust with what we're doing at Target.
But is it still a good consumer environment for spending?
As we look at the consumer now versus the last few quarters, I wouldn't note anything remarkably different than the same factors that we've been watching.
Low tick alert minus 800.
But we know that we have to work as hard as ever to win that consumer trip.
What about tariffs? Do you think tariffs are having
Extreme low tick alert.
We'll watch tariffs closely, and the team's done a remarkable job over the last year of navigating an awfully challenging and volatile tariff environment. I think we'll find out together what the next year holds on the tariff front, but I have a ton of confidence that the deep seasoned team that we have that has navigated tariffs well.
Okay, we can see dealers are selling.
You've heard us say before, raising price is our lever of very last resort, and I feel really good about the team's work over the last year, and that'll position us well for the year to come.
What about the refunds? Are you going
Market breadth. Let's take a look there, Sundog.
I think we'll have a lot to learn together.
Market breadth. A lot worse, actually. Worse. 19 to 1. Much worse.
Yeah, because you've paid a lot in tariffs, right? I mean, how have you put out how much of your merchandise comes from overseas?
we, like other retailers, have certainly felt the impact of tariffs over the last year. But against that, we got to control what we can control. And that means bringing great product and great value to our consumers every single day.
Okay, buying the dip had been working. Now it's not. So no better.
Competitors, there are now activists, circling around it. There's one activist that's built up I guess a 0.6% stake as of early 2026. Have you had any engagement?
No bounce yet. We're looking at breadth that's 22-1 down volume on the diamonds, 44-1 down on the Qs. They're selling the crap out of tech. Almost 20-1 on the SPY, 4-1 on the NASDAQ Composite, 13-1 on the New York Stock Exchange. So not a time to be a cowboy looking for a bounce. Okay, S&P. Look for bear flags. Okay, this level right here. Somebody's short right there. There was a very large put trade on the SPY posted last night. We posted that last night. In the PM update, there was, what was it? SPY, 25,000 contracts with a March 13 put spreads traded with significant premium. The 675 strike.
There's always rumors about Target, whether it would be acquired, by private equity as it's gotten cheaper in price, or even a bigger competitor as the retail landscape changes. Have there been any meaningful conversations?
The thing that we're focused on today is driving our strategy. I feel great about that strategy.
Is that a no?
Okay, looking for a bounce. Looking for a bounce.
No news on that front to share today because we're focused right now.
Still drifting lower. S&P still drifting lower. Just sit on your hands. If you got cash, got lots of cash, we'll put that to work soon.
How does that change the future of retail?
I think we're going to learn a lot together about how
VIX, do we have VIX at 30 yet? VIX at 30?
and we're making the right investments.
28. VIX at 28. Getting close. Getting close.
About kind of the way consumers find discovery.
Extreme low tick 1520, minus 1520. So we had a lot of capitulation this morning, perhaps. Still, we have a fade lower. Dealers really haven't, sold a ton yet. I mean, it's pretty calm. Markets are pretty calm. If you're looking at stocks that have a bullish tone to it this morning, even these have lost the highs of the day. See if industry looks okay. Verizon holding up. Verizon holding up very well this morning. What's T-Mobile doing? T-Mobile, we're looking at these to follow through. T-Mobile. Yeah, still consolidating.
We did take out that December 20 low of 67.20, which takes us back roughly to Thanksgiving on the S&P. Don't go away.
Okay, TRBCX. We could see 186 before seeing a nice base. I'm looking to put money back to work in my retirement account that I took off about 6 weeks ago now, I guess 5-6 weeks ago. We did put some money into SCHD, and that was back in January. This is starting to lose a little bit of altitude, so maybe reduce your exposure here. And we'll get back in if it dips a bit more. SCHD, SPHD. Okay, these are losing a little bit of altitude. SPHD, SCHD.
IONZ, RKLZ, RGTZ. UBXY. VIXY.
Okay, Bitcoin, valiant effort yesterday. Bitcoin looked very strong. Let's see if Bitcoin can do anything similar to yesterday. We have mostly risk-off indicators. We got IBB, biotech. This is a risky asset class. That could head all the way back down to the 200-day. Maybe sell some call credits overhead. Bitcoin. I would say it's kind of neutral at this point. Bitcoin could roll over. IWM, another risky asset class. That gap down. IWM. Okay, junk bonds. That gap down again today. Junk bonds. Junk.
RKLZ. BNAI.
Risk off. Sit on your hands. Okay, let the institutions do the heavy lifting.
Welcome back. Blackstone making headlines in the private credit arena this morning. The firm says it will fulfill 100% of repurchase requests in its $82 billion BCRED fund. This after investors sought to redeem a record 7.9% of the fund. Now, Blackstone is meeting those requests by increasing the size of a previously announced tender offer to 7% of total shares. It is stepping in alongside some of its employees to offset the remaining 0.9%. This, of course, is questions swirl around liquidity and valuations in private credit. Who better to talk to than Blackstone's president and COO, Johnny Ray. Thanks for coming downtown.
Okay, we're starting to bounce. Calls catching a bid right here off the low. Calls are catching a bid. Shorts covering. I don't know what's going on, but looks like a little bit of short covering here. S&P.
Well, I think it's worthwhile to step back. We created BCRED 6+ years ago with this idea that we could deliver a premium return to individual investors in non-investment grade credit. And we grew it, as you said, to more than 80 billion of assets, 50 billion plus of equity. We've delivered a 50% premium versus leveraged loans, 10% a year, 8% up last year. And when you think about credit quality, the 400 plus borrowers here.
Okay. Sorry about that.
Part of that because
Blackstone down 8% again today.
We feel pretty darn good. And you should. So my question is, what's going
Okay, we're starting to bounce. Now, institutions are going to want to sell into strength, okay? Reduce exposure. So I wouldn't be sucked into it. I mean, you get short term, maybe you get a little bounce. Here's Blackstone, the CEO talking on CNBC right now. Private credits and a bunch. All of these are moving lower. Private credit. KKR. All these look terrible. Okay, S&P is starting to bounce a bit. Okay, just assume, as long as we are below VWAP, assume bear flags. I don't think this is over with. I don't think we're going to jump back up to 7,000. I don't think anybody in the room expects that. We're getting a little bounce, so shorts are covering. That's about it for now.
And we also wanted more alignment here. We put in money from the firm and individuals. So I think the key is
there's this disjointed environment now between what's happening on the ground with underlying portfolios and what's happening in the news cycle.
Yes.
And ultimately, these things will resolve themselves. It doesn't mean there won't be individual credits that get in trouble. It's not investment grade credit. It doesn't mean that there's not disruption, which you guys have been talking about. But the underlying low leverage loans here and the performance of those loans, that's what's going to stand the test of time and will continue to outperform liquid
Right.
credit.
Okay. A lot of that concern, though, came about as a result of the focus on software companies that will be disintermediated by AI, despite the fact that, as you point out, many of them are perfectly capable of paying back their loans right now. The question becomes, well, what about 2 years from now? And why shouldn't I get out now? Which leads me to...
All right, let's see what hedge flows are saying. I would imagine that they're buying down here. Buying a basket of stocks as this rises. 0 day, non-zero day. Here's 0 day, non-zero day, same level. Finding support right in this area. Pretty large, 22 million. Non-zero day. 0 day, we got about 20 million at this level. In gamma. Now, if we remember what happened yesterday, we had a nice bounce from the overnight session, 175 points down, back to even by the close. And then we faded a little bit. But can it happen again today? Looks like shorts covering so far. Futures continue to see a bid off the low. I assume it's just shorts covering, not doing anything. Netflix showing some relative strength early, starting to bounce again. Nvidia chopping people up. It's inside day with Nvidia. So from what my son was telling me, he was long NVDX. He added some NVD just to cushion it. In case we dropped off, he's going to take whatever trade starts to trend and go with the flow. Okay, there's Microsoft catching a bid right now. Microsoft, a little bid. I'm not expecting a whole lot right now. The markets are weak. We had some early capitulation. 1,562 stocks traded down this morning all at once. Tick is just moving back above zero line. Tick is just moving back above zero line, so more shorts covering. You might actually catch a bid here. S&P, you got shorts covering, now catching a bid.
Performance, BREIT has delivered 65% above the public REIT market. Last year was almost triple at 8%. It's been paying out to shareholders now for the last couple
S&P
of years.
catching a bid here.
Exactly as advertised. And as bad as this is, and as painful as it is,
Back to VWAP.
stock go down and all this
Okay, Netflix pop.
We deliver for our underlying shareholders in this space. What we will see is they will be more loyal to Blackstone. If you look at our overall wealth,
Okay, Microsoft.
$300 billion, we have grown, consistently, and so BREIT's back in a growth
Snowflake.
mode. We talked about that yesterday. Came out.
It has influence. In fact, I do wonder, do you think that some of the RIAs who control this channel for the retail were taking people out of BCRED and putting them in BREIT?
Well, I don't know if that's happening dollar for dollar, but investors, when they get concerned about something, they may pause. I will tell you.
Okay, this is kind of a, what's the word? Not a very impressive bounce. Just looks like shorts covering. That's what it looks like to me. Shorts covering. Dealers buying down at the low. You can see the hedge flow line turning back up. Dealers buying. Dealers buying a basket of stocks right here. Microsoft appears to be in that basket along with Netflix. Those are rising right now. What I'm looking for is some levels overhead start to appear. If you go back to 9:30, you can see there was hardly anything on the board. And once I start to scroll forward, you can see the trades come in. Those are the new trades right there. These are 0-day. See up high. Those trades went away on the move lower. This trade up here. Okay. So we'll see if that builds up there. That's 0-day. Non-0 day. Okay, lots of support down here, starting to bounce off of this level. This might hold, actually. This might actually hold.
Does retail understand the product then? We had the same conversation around B-REIT.
I think the individual investors and financial advisors, I think in most cases do. I mean, if you look at the prospectus for these products, for BCRED, it's got 6 bullet points on the first page and a half talking about this. When you go back to the B-REIT experience, the product's been around for 9+ years. For 8 years, you got your money every month. For 1 year, it took roughly 4 months. And in exchange,
okay, Microsoft catching more of a bid now. Microsoft. Okay, watch Microsoft. Apple can catch a bid. That'll help. Microsoft coming off the low. Okay, so it looks like this base is actually going to hold. I don't want to speak out of turn, but a lot of relative strength in Microsoft. Let's see what IGV looks like. Software, definitely catching a bid.
If we do that, then the customers keep allocating capital, we keep growing. We will have near-term ebbs and flows like this, but it's performance. That's what matters.
Can I just ask you about the news of the day and the notion of whether a prolonged conflict in the Middle
Okay, software catching a bid. Whoa, there it goes. IGV. I do have IGV, right? I think I have a position. Pretty sure I do. IGV. Yeah, IGV. Okay, so that looks good. I have the June. Okay, IGV. I have the June 100 call. They were out of the money. Looking for a move back towards the 50-day. Robinhood. Okay, watching those. Thomson Reuters, TRI, Thomson Reuters. CEO is speaking somewhere. Thomson Reuters. Looking for it to break above this weekly pivot that we saw last week. Okay. Thursday, Friday. Trying to get above 104, 105. Thomson Reuters, TRI.
But I would just say, I think, again, a little bit of a pause. Focus on these longer-term mega trends. And by the way, we've got a strong U.S. economy. We've got falling inflation, which means cost of capital is coming down. We have this huge AI investment boom, and then we'll have an enormous productivity boom. That is actually a pretty bullish dynamic. We're right now facing some near-term headwinds. Yes, disruption's a concern. Certainly, this war near-term's a concern. But again, look at a longer playing field. That's what we focus on.
Let me come back to AI if I can, because you've been using it at Blackstone for quite some time, and spending a lot of time with the technology. You just spoke
Microsoft looking good. Microsoft.
Which have been sort of the key here in terms of the latest fears. What gives you that confidence based on what you...
Now remember, the majority of the market is very weak. Majority of the market is still very weak, so I'm not going to jump feet first in this. We're 12-1. We were 40-1 down volume. Now we're 12-1 on the Qs. That's still not that great, right? 12-1 down volume on the Qs, 10-1 on the SPY, 4-1 on the NASDAQ Composite, 8-1 on the New York Stock Exchange. That's 2,400 components. S&P. Okay, so looks like just shorts covered. Bear flag.
pivot towards some of the AI infrastructure. I think that's going to happen.
See if gold bounces now. Gold.
Software firms that get hurt there. But it's really, are you being thoughtful about this? Are management teams responding? And in the case of credit, are you senior in the capital structure?
And so you're not worried about the next quarter and redemptions on any number of funds?
I would say we're going to have to see what happens with these markets. What I will say is we're going to relentlessly focus on delivering for our customers, our alignment. And I would say if we produce a premium for our customers, that's our best protection. Hard to predict what happens in the near term.
Stock's coming off the lows of the morning, John, but I mean, it's down 30% this year. Blackstone itself, last 2 years haven't been much in terms of performance. How much does that, I don't know, how much does that affect your own psychology or those of your employees?
I think we've got a really long-term approach. The key for us, again, the confidence our investors have in us, the fact that last year we raised $230+ billion, the fact that our wealth platform, despite all this, continues to have incredible momentum, the fact that we made really important calls on where the future is, in fact, investing in some of the LLMs themselves, which has worked out very well. I feel terrific because we have the confidence of our customers and we're delivering for them.
All right.
Investors, markets, as you guys know, up and down.
Although that retail channel.
Yeah, AVXX, AV, looking good there, Frano. Off the low.
Yeah, we're going to keep going. We're going to keep delivering performance, and ultimately that wins. And people are going to focus on how many fans are in the stands. We're going to focus on the scoreboard. If we deliver performance, good things happen, and I feel terrific.
S&P still
John, always appreciate
need to see more higher lows, higher highs.
Thank you, Dave. Thank you, Carl.
You can feel the timidity in the market. People are not jumping in feet first. They're very wary. We got 1,520 stocks gapped down all at the same time this morning. 1,528 stocks out of 2,400. Okay, Snowflake is catching a bid. Snowflake, Microsoft. Starting to see a little bit of action here.
Dow's down over 1,100 points, and we are seeing Treasuries sell off as well, which is pushing yields up. The 10-year yield hovering below 4.1%. Materials, industrials, consumer discretionary, those are the groups that are leading the declines here in the overall market. Coming up next hour, don't miss an interview with the CEO of MongoDB. That stock getting crushed right now on earnings, down 40%. We're on top of all the big
Futures starting to tick higher. Futures ticking up. Futures ticking higher.
Where the Nikkei 225 falling 3% out in Japan, but again continuing to weaken in Tokyo trade.
Need to see these New York Fangs catch a bid. More of them. Microsoft's okay. Netflix is starting to bounce. Yeah, I'm not expecting much today. Let's see. RSP. Okay, so up until today, everything looked fine. We were trending along, and then we gapped down. We're gapped down to the 50 days. Is that going to be enough? We're going to build off of this level. This is the equal weight S&P 500. Breath. All of these indicators are saying the same thing. Just chill. I wouldn't be buying dips aggressively. Maybe a little bit. But the trend is definitely down for now. All right, junk bond alone. This indicator tells you when these traders are active, when they're okay with risk. When they're not okay with risk, you'll see them drop this, drop the bid. Gapping down for the last 2 days, below the 50 and the 200-day moving average. So this needs to firm up as well. Biotechs need to firm up. I don't see biotechs firming up anytime soon. Okay, that's below the 50-day. XBI, biotechs, and IBB. Bitcoin. Okay, Bitcoin's catching a bid. Biddy, like yesterday. We're getting a bid here in Bitcoin. Okay, if we get a run up like we did yesterday, BITX, IBIT, COIN, etc. Riot. Bitcoin coming off the low. Okay, let's see what that looks like. BITX. Coming off the low, BITX. This is 2 times Bitcoin ETF.
Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Netflix holding up fairly well. Netflix. JP Morgan with $120 price target. I do believe Netflix is going to be higher over the next several weeks. It's up, gapped up on Friday when they nixed the deal with respect to Warner Brothers. Let's see what Paramount Skydance looks like. Paramount Skydance. Paramount Skydance. Oh, big reversal on Paramount Skydance. Okay, so the decision to sell this on Friday into strength, into the 200-day, made a lot of sense. It was up, what, 23% at one point? Whereas Netflix is hanging in there. I think the Paramount Skydance is going to have some issues. Issues with debt, how they're going to finance that. Private credit is all down today, all down recently. Blue Owl, all of these are shorts for now. Blue Owl, Blackstone, KKR, Apollo, these are all down. All right, so all of these private credit companies are down. So how is Paramount Skydance going to finance this deal? Bonds? Are they going to sell bonds? What are they going to do? Bitcoin rising a bit more. BITX. Okay, inside day still basing. Okay, for Bitcoin to be interesting again, this is the 2 times ETF. It needs to break above these recent base highs, 1720 or whatever. Bitcoin needs to come out of this, get above 72,000. Once it does that, this base will be confirmed. Okay, S&P turning back down. All right, so they're selling into strength. AVAV, this is most likely a lot of shorts covering for now. Bitcoin, BITX, Bitcoin. Let's see how far this goes.
There was a story about like Valvoline replacing some CrowdStrike functionality and saving, $100,000 or so doing that. I think that's pretty small potatoes, but I think, AI capabilities in certain circumstances will force, vendors to just to make sure they're pricing their capabilities in line with the value they add.
Okay, I get what you're saying. I mean, especially as far as it sort of sitting on the fence here with the respect to the peer multiples. I mean, obviously we have seen this multiple compression. Obviously with respect to the valuations. I'm just wondering.
Okay, Bitcoin. Can you catch a bid like yesterday? Netflix has just been sitting here. It's a 15-minute. No wonder. 15-minute. This is a 5-minute. 5-minute trying to turn up.
That's going to stay out there. It's you're not going to be able to dispel the AI fears because they're kind of long-term fears. years. So I think we're probably sitting at, multiples here that are going to remain lower than they were.
Okay, Microsoft, higher highs, higher lows on the 5-minute. Microsoft, Apple, just consolidating. Amazon, Google, Meta. Yeah, these are just sitting here. So we should do the same. We should do the same. All right, Bitcoin. A little day trade there off the low. Need to see a follow through in Bitcoin.
Just because enterprises could use Claude Code to recreate, their cybersecurity suite or automate core workflows, they're not going to. The total cost of ownership is not going to be there, and they're still going to find a lot of commercial value in these software vendors with highly resilient models, and that certainly applies to the cybersecurity sector, which is especially more relevant when you have to protect your AI stacks and protect your agents and protect the access that those agents are granted as crowds.
Okay.
Yeah, it's all to do with the proprietary stuff and also that strength of your moat. Steve, really appreciate the setup. Thanks so much for that. Steve Koenig there, who's the US Head of Software and Services Research, Macquarie. Appreciate it. Let's trade this name now with Tom White, host of Fast Market. So an example trade for us for CrowdStrike this morning. Tom, just talk us through the approach here.
Yeah, the bar is actually low in this one, like a lot of software names, but cybersecurity names have been getting lumped in with this pullback that we've seen, partially due to potential AI disruptions. Now, if you look at their growth rate, it's been pretty good over the last several quarters.
All right, NVIDIA back down again. NVIDIA back down.
Plus or minus 6.5% move in either direction, about $25 either way.
Microsoft's hanging in there for now.
A directional bias on a name like this without having to be aggressive on it where you need a move. So I went out to the March 6th weekly options that expire in just 3 days. So this is going to be an earnings type of.
Verizon was higher this morning. Verizon still showing strength.
To take that directionally biased outlook to the upside, right? But you could actually be wrong and the stock can go down. You can still be potentially profitable on this type of strategy.
Verizon high of the day. What's going on with Verizon?
Sell the 355 strike put, and then again, because we want to stay risk defined going into earnings. We want to know what our potential downside is. Buy the 345 strike put. So a short $10 wide neutral to bullish put vertical. You're going to collect roughly about a 230 credit on it. That credit you collect is what you can make, $230 with about $770 in risk on this trade. But that's all the way below the break even of 352.70 to the downside. So you've got about a 7% cushion to the downside before you start getting hurt on a trade like this. The probability that short 355 strike will be out of the money at expiration, which is what you want, about 72% probability of finishing out of the money. So higher probability of success gives you that criteria where, hey, if the stock goes up, it stays right here or goes lower, but remains above that break even at 352.70, you're going to be profitable on this type of trade, and we'll see that vol collapse also, which should contract the price.
All right, so Verizon apparently, the new CEO Dan Schulman has driven renewed confidence through an aggressive subscriber growth strategy and a massive $25 billion share repurchase program. $20 billion acquisition of Frontier closed on January 20th. Expected to deliver $1 billion in synergies and add 30 million fiber passing, strengthening Verizon's total connectivity play. Market valuation, 4 to 5% targets for Verizon. Currently trades at 12 times forward PE. Seen as undervalued compared to the broader market. Verizon, that's one of the reasons why it's sitting there at the highs. Price targets of $50. It's trading at 50 and change right now. So that's not giving us much to go on. It is overbought presently. So Verizon's seeing a lot of reasons to add it as a value play if you're interested, Verizon. But it is a little overbought at the moment. Okay, overbought territory. RSI showing muscle. You can see lower highs as we're making higher highs on Verizon. All right, S&P is trying to turn the corner. Okay, so we're just sitting tight, right? We're just sitting tight. We're waiting for a trend to develop. For now, the trend is being faded. The trend down is being faded. We're starting to turn up. We're seeing hedge flows turn up. Hedge flows are turning up.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Not inside.
Hedge flows turning up more aggressively now. We could see a sustained bounce. Okay, this area has held. Okay, that area right there is holding. Okay. Red, when you see red on the screen and number of stocks trading lower, declining, the combination is telling you look for the bounce for short-term intraday trades, but the overall tone is bearish. No surprise there, right? So I'm not jumping into the markets long at this point. S1. S1. NVIDIA trying to bounce. Microsoft making higher highs, higher lows. I don't really see anything worth jumping into feet first at the moment. A lot of stuff got oversold pretty quickly.
We'll go through the latest news and the outlook for both studios in our 360 Spotlight. And Palo Alto Networks has been double upgraded at Arete from buy from sell. George Tillis will bring us the news behind that upgrade and also have an example trade for us in our disruptor. And amid the growing global tensions in Iran and the market sell-off, we will take a look at defense stocks and what lies ahead for the sector in our 360 round. Lots to get to and even more than I just teased for you there, but let's see how the markets are faring so far on this Tuesday morning. We're down pretty significantly across the board. The S&P 500 trading down more than 2%, 67.35 right now. The Nasdaq, similar story. We're down about 2.25% at 24,410. On the Dow, we're down the same, about 47,802. We've shed 1,100 points so far this morning. And the Russell 2KR laggard on the day now, down 3.33%. The 10-year moving higher. We're up to 407. The dollar also higher today, 99.32. For gold, pulling back significantly, almost 4%, down to 51.0450. Crude oil has ticked much higher, up 8%. We're at 76.93 a barrel, almost $77 a barrel. And Bitcoin still staying range bound, down 2% today, but still trading heavily between that 65 and 70,000 mark at 68.50 right now for Bitcoin. I do want to welcome Nicole Petalides into the show, host of Opening Bell and the watch list here on the network, to take a closer look at one of the stocks we see on the move this morning. Talking about Best Buy this morning, Nicole. Now, despite a bit of a mixed report here, it is one of the leaders of the S&P today. Can you take us through the numbers and why we might be seeing this move to the upside? Look, I get one of the few green names here on Wall Street. Good morning to you, Marley and friends. I'll tell you that we're looking at Best Buy here. It was up over 10% in the pre-market, up about 13% in the pre-market after its quarterly report. And what we did see in the bright spot and what people were really talking about was that profitability, growing profits,
Okay, Snowflake grinding higher
consecutive years of declines. So people
off the
didn't
low.
like that. We did see a beat on the fourth quarter earnings, a miss on the quarterly revenue for the last quarter.
Temper your expectations. If we start to catch a bid here, that's, you know, and get above VWAP, that's a different story. Okay, look at the volume starting to come in. MACD is turned up. Okay, we do see what hedge flows are doing. Hedge flows are rising, okay?
Memory chips and AI data centers and all that, and they're moving forward some of the inventory orders, giving vendors more time to get these products to Best Buy so that they can keep the costs down rather than seeing cost inflation because of shortages. So that was the bright spot where people were willing to spend and get into the next bracket and level of spending. On the other hand, when you looked at appliances and some electronics and home theater products, those were less in demand. Of course, appliances, you think about what's been going on in the home area, nobody's buying and moving homes. It's not a hot market right now for homes, and so that's affecting their numbers, right? People are not rushing to do new kitchens and all that. And the other thing is they were looking for
Okay, nice little rally off the low so far. There goes NVIDIA, turning up NVIDIA. Puts are losing the bid. All right, people are taking profits in their puts pretty aggressively here. Okay, so everybody, including myself, everybody's probably looking at that 200-day moving average thinking, oh boy, we could head down to the 200-day. And they start to reverse it. Then everybody chases it in the other direction. First day below 6,800. Okay, so we got a bid. The market's rising. Right through VWAP like it wasn't even there. VWAP. S&P right through VWAP like it's not even there.
Yeah, a good day for retail. Best Buy moving about 4.5% higher on their mixed report target. Similar story, mixed report here. Also trading closer to 4% higher.
Imagine if we got total surrender from the ISRG. Was that IRG? The Republican Guard. Imagine if we had a complete surrender. I mean, I can't imagine why they'd want to fight. There goes Bitcoin. Bitcoin's doing his thing. Watch Bitcoin.
You know, it's interesting. I thought the price action that we're seeing today would be what we should have saw yesterday. So I think the best thing for this market is for us to actually finish down near the lows and increase fear and flush people out. Because at the end of the day, I think when we look 2 and 3 weeks out from today, we'll look back as this has been an amazing buying opportunities in the right place. And what today does, in our opinion, is gives investors a second chance to position correctly for the investment theme that we think is going to win in 2026, which is bet on the U.S. economy and be very underweight.
Watch Bitcoin. Bitcoin's on the move. Check it out. Bitcoin is on the move. Bitcoin futures. Okay, nice little pop off the low. BTC USD. There it goes. Bitcoin BTC USD. Here we go. Back into the range.
So you're not the first person that has said that we saw a more tepid reaction to the events of the weekend than many people expected. Today, seemingly looking a bit more, I think, like the expectation. But if you want to enter this market, if you have the cash to play right now, you said to put it in the areas where you think will be successful. Where are those areas?
Yeah, where are those areas, Eddie?
So one of the areas that we have been buying on dips has been industrials. We think
Okay, Bitcoin looks good. All right, back to the S&P. S&P 500. Okay, we're through VWAP. Can we follow through? Watch that MACD. Volume. A little bit of profit taking there. One red bar. Okay, futures continue to rally up.
And then the other area, and this is a contrarian play, is housing. I think lending standards are going to lose
Okay, we got Netflix turning up. That's probably going to work.
Building and home builders have been beaten up the last couple of years, and these three areas have been doing very, very well relative to the Nasdaq and the S&P 500. And then lastly, I think with this big sell-off in emerging markets, this is a time to potentially start dipping your toes in. If you missed the big run in emerging markets, again, we're looking at this as a way to really reposition and take advantage of the momentum that started the year that has just broken down. We think 2-3 weeks from now, all these areas will be up from where we are today.
All right, Eddie. So if you missed the boat on international and emerging markets, and you
Yeah, let's take a look at some emerging markets and stuff like that. Emerging markets, a big gap. Whoa, big gap down on emerging markets. EWQ, France yesterday talking nukes, restoring some of their nuclear capabilities or something along those lines. Big gap down yesterday, another gap down today. I don't think the markets like what Macron has been saying. EWP for Spain, gapping down. EIRL, Ireland, gapping down. EWI, Italy, gapping down. Okay, so a lot of these gap downs are going to be bought. Okay, so buying the dips makes sense. ACWI, all of the world index stocks except for the U.S. U.S. is not in this, but all the big companies, some of the big companies around the world are in this ACWI. Potential there. EWS, Singapore, gap down to the 200-day. The Hang Seng, HSI, Hang Seng, not as bad. FXI, EWT, Taiwan, not too bad. All right, so buying the dips in some of those countries. Let's see what Brazil looks like. EWZ and Mexico, EWW. Whatever happened with Mexico? Last week we were talking warfare, the drug lords, one of them got executed or whatever. They're just like blowing stuff up down in Mexico. Okay, there goes Amazon. Amazon's on the move. Amazon coming off the low. Watch Amazon. Okay, so shorts covering in a lot of respects, I would say. Here goes Microsoft. Microsoft finally. Microsoft is going. Microsoft.
But that's not our thesis. We think that there will be a global effort, and we may hear something this week. I would bet we'll probably hear something this week on some type of global effort to try to stabilize the oil prices, because everyone knows that if you don't, that's bad for many, many parts of the global economy.
And Eddie, I know we've been having this conversation. You really started rotating out of tech before a lot of my other guests that I speak to. You were sort of ahead of the trend on that one. Is there anything that would get you back into tech?
Yes.
That's a good line, Mondo. I like that.
I still think it's a very crowded.
If you want to swing with the big dogs, you got to stop pissing with the puppies. That said, Russell trades with much larger size than I trade with. That's for damn sure. He's Mr. Grande Cojones. Okay, NVIDIA, nice reversal.
Probably late second quarter. So when we see that, and we see kind of that flush out, and we feel like we've bottomed.
Mr. Buchanan, that was pretty funny too.
But at the end of the day, we're looking at where we think money is going to do better moving forward in the next 3 months. And we think
Yeah. So that's why you look at price action, right? Price action saying something different. The commentators over at Schwab and CNBC, they're still saying the same thing. Okay, we're still 7-1 down volume, 8-1 down volume on the Q, 7-1 down volume on the SPY. NASDAQ Composites coming back to reality. It's only 3-1 down. And New York Stock Exchange 6-1 down. Okay, let's see how far they're going to take this S&P. Let's see how far they'll take it. I want to call this V-slap instead of V-wap. Slapped a lot of people. Okay, tick cumulative almost made it back to plus 800. Tick almost made it back to 800. All right, so at 2,300 points, 2,300 bips. Okay, yesterday was 175 points. Yesterday was 175 points. We were down 175 points before the market opened. We rallied all the way back to even around what, 3 o'clock or so? Let's see, what time was it? We had that stop run. Okay, volume coming in. Okay, you can see the volume there. Volume coming in. Looks good.
From the most iconic trading floor in the world,
Nice little reversal.
opening bell with Nicole Pedalides, live on
Volume.
the New York Stock Exchange, the countdown, the setups.
Okay, so far so good. Following through.
Minute-by-minute breakdown of the biggest headlines, earnings.
Yep, that's what they did.
Just the trades that matter.
Okay.
Markets react in real time. Opening bell live at the NYSE, right when it counts.
Oh, she's got your smile, Carl. Yep, your #1 broker's here to welcome your new little dependent. Actually, we invest with Schwab. They have everything we need, all in one place.
I can set up for college fund.
I've been learning about trading strategies. Schwab helps me generate.
Okay, futures going. Futures. New highs here.
Does somebody need a map? Invest your way with Schwab.
Yeah. Okay, we heard you. Let's see what they're talking about over here. What is he looking at? HCPG. What are you looking at? XME, metals and mining. Speaking of metals and mining, what USAR was coming off. Okay, inside day today, CRML. Okay, looking for these to turn back up, CRML and MP. MP looked the best yesterday. MP materials, inside day. All right, USAR and those inside day. Okay, futures continue to rally up. Sneak Sally up. Okay, we're going. A bit more. Volume. Okay, Microsoft looking really sharp here. Still going. Microsoft still going. IGV, XSW, sectors.
Target, a rare bright spot in the market this morning, despite reporting another quarter of declining revenue and traffic. Investors focusing on
A hammer? Is that what we're going to get? We're going to get a hammer day?
Target now projecting 2%
Daily hammer, SPX.
Three straight years, I should say, of declines. I did speak exclusively to the new CEO, Michael Fidelki of Target. First interview that he's done since taking the role. Here's what he said about investing.
On the daily, a hammer would be sweet.
One of the things that I'll be sharing later this morning is we're going to invest more payroll in the stores because we know.
Okay, so we got this low over here.
Have the resources they need to deliver an incredible service.
You're going to be hiring more.
Okay. So this low right here. Very nice.
We've made in our team over time, I think, have been incredibly important.
That was news because what Target has announced is about about $1 billion more in CapEx to improve stores and get new merchandise. And now he's talking about OpEx as well, boosting hiring and pay. I also asked him what gives him confidence in the growth forecast and where they've already made changes in the business. Here's what he said.
Two things: the confidence and the incredible team we have at Target.
Keys in that outfit. Okay. Okay. Look good, man. Nvidia is rallying. Google. Look at Google.
The categories that might spring to mind first are apparel or
Google on the move. There goes Google. Got a lot of work to do in the New York Fangs, but this looks pretty good.
And we know we're a destination with national brand partners to bring the newness that our guests love. We just reset a big portion of our food assortment, brought about 30% newness and wellness, and the early response there has been positive. And so we're out of the gates strong this year. We've seen growth in February already. And I'll be the first to say 1 month does not.
You know, it's fun to comment on the markets and, you know, think that things are over with. Just know that the structure below the negative gamma, we need to see some positive gamma fill in below. All right. So that's a work in progress. We could still see that. It's only the second day trading day of the month. But keep in mind, we want to see that. Okay, we don't want to get so cavalier that we think the markets are just going to go straight up from here. A hammer would be good, but I'm going to play the odds here.
Used to dominate, but he also sees room to take share from other places like specialty retailer, potential retailers like he didn't say this, I'm saying this, like a Kohl's or a dollar store, and they're making a lot of changes. And I think that was his main message here, Carl, today, which is, yes, I have been at Target for a very long time, but that means I have seen Target during the heyday when it was really growing and outperforming, and we lost that. I mean, I said, what happened? We lost the sort of newness and the delight that brought people in the store, the collaborations with designers and that sort of thing, and that's what he's going to try to do. And see if that can bring
There have been some on the sell side.
Okay, video looks good there.
Fresher set of eyes, bringing someone in from outside rather than a lifer. I will say, among the things that people are quibbling with today are digital comps, which have decelerated for the last 3 quarters.
Showing relative strength. Let's see. Let's see what's working right now. Let's see. Target. Okay. Initially, Target saw some selling. Okay. Initially, Target saw some selling. Okay. Now the dip is getting bought. ABCD pattern on Target.
Digital sales momentum going, especially when you're competing against, you know, the Amazons and the Walmarts with their giant
Walmart.
That's definitely part. You know,
Walmart coming off the low. Okay, Target looks good. Target finally breaking out there. Okay, looks good. ABCD pattern. Let's look at the weekly. Yeah, that looks good. It's riding the 10 EMA weekly. 60-minute is bullish. Daily is bullish. The dip was the best. You had a very good entry on the dip. Most likely keeps going, I would imagine. TRI. Thomson Reuters following through. Okay, TRI. Thomson Reuters, TRI. Okay, 60-minute strategy. TRI, 60-minute strategy is bullish.
nobody goes to Target for groceries. They might as well just get. I mean, what's
and it's a big part of the store.
in terms of footprint?
Yeah, in terms of footprint. Yeah, it's like that whole right half of the store.
It's almost like not even worth it.
Well, and the whole Foods is 2 doors down.
Exactly. Yeah. And then that's probably the case in many cases where Targets are located.
Yeah, the hoteling theory of where you establish
Yeah,
your
exactly.
locations.
There is another retail site that I want to talk about, which is On Holdings, aka the shoes, the On shoes. Do you remember? It wasn't that long ago that like you would see the On logo and you'd be like, what does that say? When they first came out, it was sort of confusing what they were, and now they're pretty everywhere.
They're the official sneakers.
Thomson Reuters.
I mean, they are.
We should look at pictures of the shoes.
It's Ons and Hokas, but I think there's more commuters.
I think that's right. The company's sales forecast for this year is a little bit below its own implied 3-year target that it set a couple years ago. So that's why the stock is down this morning. Yes. Well, I mean, it is why it's down. Do you own any Hoka? Any Ons? Do you own Hokas?
I have, I have pairs of both.
You have pairs of both?
I have to.
Do you wear your Ons? Why do you
Not
have
as much.
to? Wait, why do you have to?
I don't know. I just have a lot of shoes. Yeah, I don't know. Like, I feel like this is the thing. Like, men now have like 12, 15 pairs of shoes. Like, my dad growing up had like 3 pairs.
Yes.
And I have more shoes than my wife, I think. Wow. We're close. We might be at parity.
Yeah, we're in.
There's more seasonality, I think, with my wife, but like, yeah, it's a so I know I've got both.
My husband just has Hokas.
I prefer my Hokas.
5 or 6 different pairs of Hokas exclusively.
The thing with the Ons I found, I've had a few pairs over the years, is there's something about them that I just feels like is loose. Like the upper just gets like loose. And so it's not quite as, I don't know how else to say it. They break in weird, in my experience, for me.
In my experience, so I bought them when they first came out, and I felt I was running outside at the time. I'm not really running now, but rocks would get stuck.
Rock, paper, scissors.
But also I felt like
Okay.
plastic lower, and you feel that, even if it has the bubbles in it or whatever.
Yeah.
It's just,
MLB
I don't know, I'm trying to
BMNU.
CONL. I'd love to talk about running shoes more.
Okay.
My first job.
That's the
First real job.
was working at a running shoe store.
That's right. Many years.
My first job was working at the bagel shop at the mall. So we're on a bagel segment.
Bagels and running shoes.
Bagels and running shoes. That's great. All right, thanks, Miles. And coming up on Yahoo Finance, opening bid, executive editor Brian Stas is joining us now. Stas, what was your first job?
I was a golf caddy, Julie. And even on days, really bad days for markets, those golfers still showed up. The bottom has dropped out of futures here, Julie. I mean, this is looking like a really brutal recycle. We wrote down about it. We'll start with the down, but I think it's going to now. It's really getting ugly up there. So we'll come back last year.
Market continues to dig out from these opening losses. Let's get a news update with Pippa Stevens. Hey, Pippa.
Hey, Carl. Homeland Security Secretary Kristi Noem is on the Hill right now. Congressional appearance since federal agents killed 2 people in Minneapolis amid an immigration crackdown in the city. Her testimony also comes as her department has been partially shut down for nearly a month after Congress failed to reach a funding agreement amid a standoff.
20 EMA on Thomson Reuters, looking good. Going to add to that one pretty soon, I guess. All the New York FANGs are looking a lot better now, except for Apple. Apple's not joining the party. Looking good though. S&P still climbing. S&P.
President Trump has not endorsed anyone. And Minnesota is suing the Trump administration to stop it from blocking $243 million in Medicaid spending. The state argues it may have to cut health care for low-income families as a result, but the federal government claims the temporary halt is needed to root out fraud. Carl, back to you.
Pippa, thank you very much. CEO of MongoDB is coming up after the break, selling off to start the year, caught up in these.
Okay, still making higher highs, higher lows. We're at the upper Bollinger Band. S&P, nice retracement so far. The New York FANGs are cooperating. Puts have been sold. People took profits in their puts. We got all the New York FANGs moving higher off the low except for Apple. Apple's not cooperating. So if we can get Apple to go as well. Microsoft is leading the way. Can't believe I'm saying that. Microsoft is leading the way. It is still working on this base down below on the right. But looking a lot better. Looking a lot better. The whole software sector looks good. IGV. Okay, that's looking really strong. IGV, I'm going to add to this IGV. Okay, this is down here. I'm looking for IGV to give me about 20 points. IGV, software sector, looking for 20 points on this. That would be super sweet. Okay, what's going on here? No feed. Okay, IGV looking really good here. IGV. iShares expanded tech software. Looking good off the low.
It's Tuesday morning for markets. I'm Yao Finance Executive Editor Brian Sozzi, coming to you live from our New York City headquarters. If you were just waking up on the West Coast or have been studying markets all night long, here's market share. It stands to be another brutal day for the markets as investors reassess risk in the wake of Operation Epic Fury. Oil prices have ripped again. Goldman Sachs is out calling a pickup in inflation because of the war aftershocks, and the safe haven trade is nowhere to be found. Not good. Really seeing futures taking a dive here ahead of the market open. Let's get right into this with the opening big roundtable. Jeff Mackey is a veteran trader and retail expert, and he is here. Yao Finances and Isparay and Brooke DePalma are on the desk as well. Good to see you all, Jeff. We're going to talk about target earnings. I'm going to get to them in a second, but take us through what you're seeing in markets at this moment. I mean, the bottom has just dropped out here.
This is a crushing open, particularly in the context of yesterday, Brian. We saw the market open about this week yesterday. You know, and the bulls kind of run, and they were being a little smug at the end, and everyone wished they would have bought the open, and they felt cocky about that. This is the nature of bear markets. Whatever the outside catalyst is, when you have what we call an exogenous variable out there, and war is a super big issue.
Oh, these experts that come on.
It's not really gameable by anyone on the inside.
Everybody has an opinion. Just watch price action.
Wake up in the morning and see how the world has been destroyed while you slept. That's what we're seeing this morning, and I don't think we see a dip into this. It's a time to kind of be happy when you have cash, and just I like to step back and do homework.
Welcome back. Take a look at shares of MongoDB today. The company specializes in database software. Customers include Google and Wells Fargo and Novo Nordisk, posting a beat on the top and the bottom line in Q4, but some lighter than expected EPS guidance is dinging the stock today, now down roughly 40% year on year. Joining us this morning is the CEO, the first on CNBC interview, MongoDB's chief, CJ Desai. CJ, good to have you back. Thanks for coming on, even on a tough market day.
Excellent. It's great to be back here.
The general reaction from the sell side, at least, is that it's just a reflection of the sentiment right now regarding software. It's tough not to guide heavy.
I would say, at the highest levels, we had amazing Q4. We beat both on the top line and the bottom line metrics. Revenue growing 27% year over year, Atlas growing 29%, profitability at 23%. So it was a great Q4 and way ahead of what we guided exactly 3 months ago. And I know that the buy side expectations were a little higher, even though we had a very healthy beat, and hence I think the reaction. But even I feel very, very good when I look at the business, been meeting customers around the world, and I feel very good about the momentum we have. And so our guidance absolutely going into fiscal 27 was prudent.
The other thing that's been pointed out is that you guys are historically a pretty conservative guider of revenue, at least, that people have gone back and looked at your initial guidance on the year and where you ended up.
Okay, IGV, software sector.
So if we look at exactly a year ago, we guided for 13% revenue, and we beat that number by 1,000 basis points in fiscal 26. So going into fiscal 27, Carl, our goal is always to have, as we execute quarter after quarter, to beat. And that is absolutely our goal as we move forward.
I think that people, while the numbers may have beat, I think people were concerned about the deceleration in revenue growth to 20% and whether you can continue double-digit growth or ultimately growth at all. CJ, with the narrative out there around the SaaS-mageddon and whether Gen AI is going to ultimately destroy your business model.
So, Sarah, we are sticking to our long-term guidance. So first is that from a long-term guidance perspective, when we guided, the high end of our guidance.
So far, so good. We just get Apple to turn up. It would be nice. Let's see. NVIDIA. NVIDIA turning up. NVIDIA is turning up. NVIDIA killed the radio star, right?
The year progresses. We are 100% an AI winner. As in MongoDB is at the database layer. The database as an industry through every single platform shift, Sarah, has been around for 60 years.
Okay, futures turning up again. Futures looking good. NVIDIA turning up, looking good.
All your data, whether it's for classic enterprise or an AI native company.
Okay. So if we put in a hammer today, that would be freaking awesome. I'm having a hard time believing this is going to hold, but that's what it is. TRI, Thomson Reuters, looking good. Thomson Reuters.
From 21 to 23%, and 23% was at the consensus level. We understand
TRI.
And we don't see a risk of disruption. One last point. Our net retention rate in Q4 was 121%, which is considered world-class.
Yeah, because that's really the question that we're asking from software companies right now is how is your strategy changing given the new reality of agents and this potential for Gen AI to take a part of your business? It's one, what is your
Okay, tech cumulative is still pointing down, so give this bounce with a grain of salt. Give it a grain of salt. S&P showing strength. Volume's coming in, looking good. So far.
Database R&D innovation takes a very long time. So MongoDB is the most modern database. It was created in 2006.
Wow, we got puts that were bid at like $80, started down like $40.
65,200 customers. So from a disruption,
I'm holding on to those put credits. Remember earlier I was talking about you want to buy put flies, you want to buy those at the high of the day. You don't want to buy them at the low of the day. You don't want to buy put protection at the low of the day because VIX is very elevated. Target. I really like Target. I want to do something with Target. Target and Walmart, they get most of the sales out there, right? TJ Maxx.
Company that is using Mongo database. And Sarah, what I hear from customers, I've been in my job for 100 days. I met 200 customers. They are relying on MongoDB not only for core data workloads, but also for AI workloads. And that is definitely an upside case for us as AI gets traction in the enterprises.
Okay, let's see what hedge flows look like. All right, so a little hook there.
Headcount, for example, there's this
0 day.
theory that we're going to work our way to the midpoint of the year. Companies are going to be
Okay, got a little bit of positive gamma overhead at 6,800. Can we get through 6,800? That'd be awesome.
27, and that's when we'll see some dramatic, maybe
Core weave. A lot of stocks coming off the low.
Do you think that's possible?
From my standpoint, Carl, what I'm right now seeing is that when we speak to customers, so for example, the biggest parameter for me is software engineering headcount. Whether it's the software engineering headcount at a bank that is investing in AI technologies, or a healthcare company, or even for government for that matter. So the software engineering headcount, contrary to the theory that is out there, is actually on the rise. There are a lot of open jobs we are hiring because we do need great software engineers to innovate on AI and on our platform. So that's number one. Two, does the world become more productive? Sure. But at the same time, when I speak to businesses, they tell me that they have a massive backlog. They're trying to change that business and innovate on that business, potentially with AI, and they still need people with that understanding of the business and tech.
CJ, appreciate it very much. Obviously, questions, we got to wait for the answers on some of these things. It's good to have you on, as always. CJ Desai over at MongoDB.
Thank you, Colin, Sarah.
Sarah.
All right, a rare interview with Andreessen Horowitz's Ben Horowitz is coming up after the break. Live from the company's conference.
All right, VIX. Did VIX peak here? VIX peak. I was thinking 30 maybe.
He'll be joined by the CEO of Booz Allen Hamilton, and we'll be right back on Money Movers.
Okay, we got close. Yeah, VIX. VIX fading off the high. That's good. That's good so far. Okay. It's kind of fun, actually. Kind of fun to see this rebound. Works both ways. The bears very happy this morning. Looks like a big hammer. I don't know. I would love to see options fill in a little bit more. Just want to see options fill in. Okay, we're gonna grind up a bit more. Okay, this is S&P. Let me look at NVIDIA real quick since I have that symbol up. It looks okay. Netflix dripped a little bit lower. That's okay. Microsoft looking good. Holding at the high. It's got to break out of this base eventually, right? IGV says as much. IGV. Okay, that's looking pretty strong. IGV. Software sector XSW. Okay, watching those. NVIDIA. Okay, SPX. What's the Qs doing? Qs. Okay, IWM. Ooh, nice recovery on IWM. Can you see a nice 3-candle reversal on IWM would be nice. 3-candle reversal on IWM would be nice. Love to see that. Day 1, 2, 3.
Welcome back. With the war in Iran, attention being turned to investments in both aerospace and defense. For more on that, let's get back to our Morgan Brennan in D.C. Hey again, Morgan.
Hey, Carl, that's right. So I'm here at the American Dynamism Summit in Washington. I'm joined by Ben Horowitz of Andreessen Horowitz, 816Z, and Horacio Rosansky of Booz Allen, the CEO and chairman. Gentlemen, it's great to have you here. There's a lot to get to. We'll see how much we can get to. But Ben, first, I just want to start with the fact that we're having this conference, which is focused on the American mission, bringing more technology to things like defense and defense tech. And we have Iran and the Middle East conflict in the background here.
Yeah, so it's really interesting. You know, Alex Karp, the Palantir CEO, is just on stage. And one of the things he said is, regardless of what you think about the war in Iran, the thing that's undeniable is the U.S. has deterrence back. So we now, people will kind of listen to what we say because we can clearly act. And we have lost that during the Afghanistan conflict, and we've gotten it back now. And I think that his point is it's largely due to overwhelming technological advantage. And that's something that we've developed really recently.
Future's still tickling the highs here. S&P, sorry, I'll change the symbol. I'm not looking at NVIDIA at the moment. Sorry about that. S&P trying to push a bit more.
I have a personal stake in this conversation because I was sanctioned by Iran personally in 2018. But at the end of the day, this is really about our men and women in uniform and making sure that they have everything they need so that they can accomplish the mission, they can come home victorious, and they can be safe. And we're proud to participate in that across the world.
Okay.
AI is a critical technology for economic security, for national security, and we need to keep moving it fast and advancing it as a nation because we're in a competition.
Is AI and some of these newer technologies, are they behaving the way that they're supposed to right now? Especially when you think about some of the drama.
Okay, same thing with S&P, by the way.
When you work with the federal government on AI, the restrictions, the guardrails, the policies are the most clear of anywhere. So deploying AI in and with the federal government is actually safer than in the private sector. Even Anthropic themselves had some challenges last year, and they were very brave to talk about them openly, where Chinese actors hijacked their models to do bad things. By contrast, all of the work that we do in AI with the federal government is very, very highly regulated, very tightly managed. Can mistakes be made? It's true of every technology, but in reality, it's a safe use of all of these technologies and an important one.
I want to get your thoughts on this, Ben, especially since Andreessen Horowitz is an investor in OpenAI, XAI, some of these other companies as well that we do see moving more into the
VWAP.
situation here with the
Okay, hammer. Wow. Impressive move here so far off the low. Wow, look at this move.
High took alert plus 800.
The rules in the Department of War and the U.S. military are extremely well-defined and very stringent around all the things that have come up, you know, such as mass surveillance, such as autonomous use of weapons and so forth. And they're very well reasoned out. They've, you know, gone through the American process. And I will say, people
68. Wow, back to 6,800. That was fast. That was fast. Whew. MACD turning up. VWAP. VWAP is history down there. I don't want to get too cocky because you know the market can roll over at any minute. Volatility is up. VIX is fading, but same here.
Do you think the Chinese government is being restricted by DeepSeek on how they can use Anthropic's technology, you know, via DeepSeek? I can't imagine that. So I guess we're very sympathetic to the position of the Department of War on this.
As a key point, you just raised $15 billion across your funds to start the year. According to PitchBook, that's more than a quarter of all the capital the firm has raised since establishment in 2009. How will you deploy it?
Yeah, so I think that there's many opportunities, I would say, but the big ones for those funds are AI in all its forms. So AI infrastructure and the infrastructure supporting it. We're looking at a fairly serious electricity shortage, I think, in America, probably within 12 to 15 months. So that means the entire infrastructure stack has to be redone, from chips to the system software to the models.
Okay, VIX 20. Doesn't look like that's the case at the moment. VIX just keeps dropping. Good, good. I don't think VIX is overdone. I don't think VIX is done yet. I mean, there's very possible we could see more of this.
We're really working hard to make the United States the most advanced country technologically in the world.
They're still talking the same narrative. Stocks falling on Iran. By the time we finish today, it could be a big difference, big change. Markets are anticipating a lot. We are seeing more short covering. Futures are higher. Off the lows. There goes Microsoft. Microsoft looking really strong. So is Broadcom, Meta, Google, Amazon, Nvidia, Tesla, Netflix. Okay, Netflix looking like it wants to go. Netflix. Netflix.
And this is what motivated us to work together. We were already working together with a number of their portfolio companies. They have some great companies like Shield AI. We're co-developing things and so forth and trying to do it fast. And then the more Ben and I got to know each other, the more we got to talking. There's over 1,000 companies in their portfolio, the vast majority of which are not in this mission right now. And we can work together and co-develop things. We're working Databricks on air safety, for example. There's so many examples.
We have to leave the conversation there, unfortunately. We have to get over to the White House, just down the road from here, to President Trump, who's with the German Chancellor. We'll take you there now. Gentlemen, thank you.
Our deals has been very strong. We'll obviously be talking a little bit about Iran today, and he's been helping us out. We've been very nice, actually. And that is coming along, as you see, very well. They have no Navy. It's been knocked out. They have no Air Force. It's been knocked out. They have no air detection. That's been knocked out. Their radar has been knocked out. And just about everything's been knocked out. So we'll see how we do. But we're doing very well. We have a great military, and they're doing a fantastic job.
Amazon looking really strong. Yeah, these stocks look good off the lows, just like yesterday. It's a little later in the day, but let's take a look at the New York Fangs. TRI still going here. Thomson Reuters still going.
Special place, even from your standpoint, and you have some very special places too. And I look forward to being with you.
Thank you, Mr. President, for having me here. This Oval Office for the third time now. Yeah, really happy to have the opportunity to speak with you in these
German Chancellor Merz.
We are on the same page in terms of getting this.
I guess that Rubio talk over. Was it Rubio? Yeah, it was Rubio, right? Talking over in Europe last year.
We have to talk about our trade agreement, which I would like to.
Thomson Reuters.
As soon as possible. And we have to talk about Ukraine. There are too many bad guys in this world, actually, and this is an issue we have to talk about because we all want to see this war coming to an end as soon as possible. But Ukraine has to preserve its territory and their security interests, and well, we will talk about that.
We will.
Looking forward.
Thank you.
Thank you
That's some
for your
interesting.
hospitality. Thank you for letting me spending the night in your guest house.
That's right.
Very, very comfortable place.
You liked it, right?
Absolutely. Yeah, great place and a famous place.
That's
Yeah.
very
So
famous.
many former presidents.
That's right.
Yeah.
Very famous place. Any questions, please?
Good.
No, I might have forced their hand. You see, we were having negotiations with these lunatics, and it was my opinion that they were going to attack first. They were going to attack. If we didn't do it, they were going to attack first. I felt strongly about that. And we have great negotiators, great people, people that do this very successfully and have done it all their lives very successful. And based on the way the negotiation was going, I think they were going to attack first. And I didn't want that to happen. So if anything,
Okay, Thomson Reuters.
But Israel was ready, and we were ready, and we've had a very,
Excuse me.
powerful impact because virtually everything they have has been knocked out now. Their missile count is going way down. Amazingly, they're hitting countries that were, let's call them neutral, right? They lived together for a long time. I think they were surprised. I was surprised. I think, and now those countries are all fighting against them and fighting strongly against them. Someday they'll write a story and they'll say why they did that, but they hit countries that had nothing to do with what's going on. They were sort of leaving everything alone. All of a sudden they had missiles shot in, which shows you the level of evil that we're dealing with. They'll hit people that were actually at least somewhat friendly, and they had no problems with it. Also hitting only civilian places, hotels and apartment buildings, and we're hitting them where it is much more appropriate. We're hitting them very hard, and the big scale hitting goes now. They no longer have air protection. They no longer have any detection facilities at all left, and
Futures continue to rise.
they're going to be in for a lot of hurt. These are bad people. These are people that killed. I guess it's 35,000. It's coming out.
Wow.
35,000 over the last 3 weeks.
Their own citizens.
35,000 violently killed. So these are bad people, and the leader of the pack is gone.
The leader of the pack. Vroom, vroom.
That was pretty substantial also. So they're getting hit very hard, and we'll see what happens. A lot of people are coming forward. A lot of the people you would least suspect want to quit. They want to have immunity. They're asking for immunity, and probably at some point they'll be dropping, as you would say, laying down their guns. We'll see what happens. In the meantime, we're just continuing to go forward. Our military is the number one in the world by far, and we are. Everything's big in my book. Venezuela was big. This is big. The original hit, Midnight Hammer, was big. Everything you view is big, but it's not considered very big by some standards, by some of our standards. We have a military like no other military that's ever been built.
What's the worst case scenario that you have planned for in Iran?
Well, I don't know if there's a worst case. We have them very much beaten militarily from the military standpoint. They're still lobbing some missiles. At some point, they won't even be able to do that because we're hitting all of their carriers. We're hitting all of their missile stock. They built up all these missiles over the last few years. They had a lot of them. They've shot a lot of them, and we're knocking out a lot. I guess the worst case would be we do this, and then somebody takes over who's as bad as the previous person, right? That could happen. We don't want that to happen. It would probably be the worst. You go through this, and then in 5 years you realize you put somebody in who is no better. So we'd like to see somebody in there that's going to bring it back for the people. And we'll see what happens with the people. They have their chance. And we've said, don't do it yet. If you're going to go out and protest, don't do it yet. It's very dangerous out there. A lot of bombs are being dropped. But I would say that would be about the worst.
Do you have someone in mind right now? Because you said all the people you have in mind have been taken out.
Well, most of the people we had in mind are dead. So, we had some in mind from that group that is dead. And now we have another group. They may be dead also, based on reports. So I guess you have a third wave coming in. Pretty soon we're not going to know anybody. But we have, Venezuela was so incredible because we did the attack and we kept government totally intact. And we have Delcy, who's been very good. We have the whole chain of command, and they've been, you know, the relationship's been great. We've taken out 100 million barrels of oil already, and a big part of that goes to them, and a big part goes to us. And it's been great. We paid for the war many times over, and we're going to be running the oil. And Venezuela is going to make more money than they ever made, and that's great for the people. The relationship has been great. It's been seamless. Nobody's actually ever seen anything like it. If you look at Iraq, where very stupidly everybody was fired, the generals were fired, the military was fired, the police were fired, the fire departments were fired, and all of the government workers were fired. So after, you know, people would call, they had no idea. And by the way, ISIS was formed. That's where ISIS came from, all of the fired people. We don't believe in that. So we'll see what happens. But first we have to finish off the military. I guess he is. Some people like him, and we haven't been thinking about too much about that. It would seem to me that somebody from within maybe would be more appropriate. I've said that. He looks like a very nice person, but it would seem to me that somebody that's there, that's currently popular, if there's such a person. But we have people like that. We have people that were more moderate. You know, these were radical lunatics, and you know what they get? They get nothing. All they do is kill people. You've asked, so not your turn. Not your turn, please.
Mr. President, you've been taking the heat off the European superintendent, was it called on the allies to also help you?
What does that mean?
Well, you have to ask our Ruben if he says not to say so, but be helpful to you in this.
Well, some of the European nations have been helpful, and some haven't. And I'm, you know, very surprised. Germany's been great. He's been terrific.
Sorry about that.
Others have been very good, terrific. I think that the head of NATO, Mark, is fantastic. Mark Rutte. I think he's fantastic. But some of the European, like Spain, has been terrible. In fact, I told Scott to cut off all dealings with Spain. Spain, first of all, it started when every European nation, at my request, paid 5%, which they should be doing. And everybody was enthusiastic about it, Germany, everybody. And Spain didn't do it. And now Spain actually said that we can't use their bases. And that's all right. We could use their base if we want. We could just fly in and use it. Nobody's going to tell us not to use them. So we don't have to. But they were unfriendly. And so I told him, we don't want to. Spain has absolutely nothing that we need other than great people. They have great people, but they don't have great leadership. And as you know, they were the only country that in NATO would not agree to go up to 5%. I don't think they would have agreed to go up to anything. They wanted to keep it at 2%, and they don't pay the 2%. So we're going to cut off all trade with Spain. We don't want anything to do with Spain. And I'm not, by the way,
You're just pulling back now?
UK either. That island that you read about, the lease, okay, he made it for whatever reason, he made a lease of the island. Somebody came and took it away from him. And it's taken 3-4 days for us to work out where we can land there. It would have been much more convenient landing there as opposed to flying many extra hours. So we are very surprised. This is not Winston Churchill that we're dealing with.
What's your expectations towards Germany? What can Germany do and what should Germany do to help you?
Well, I think they're doing it. I mean, they're letting us land in certain areas, and that's, we appreciate it. And they're just making it comfortable. We're not asking them to put boots on the ground or anything. We're just, they're a respected country. I have a very good relationship with the country. We have, in particular now, with this leader, this new leader. I think he's an excellent leader. I had my differences with Angela. I said, you're hurting your country with immigration and you're hurting your country with energy. And we have a man sitting on my right that is, I think, pretty much the opposite of her on energy and the opposite on immigration. And I think he's doing very well. because it happened all very quickly. We thought, and I thought maybe more so than most, I could ask Marco, but I thought we were going to have a situation where we were going to be attacked. They were getting ready to attack Israel. They were getting ready to attack others. You're seeing that right now. And a lot of those missiles that are hitting in, those are stationary. Those were aimed there for a long period of time at these other countries. So I think I was right about that. We attacked first. And if we didn't, it could have been, look, we're really decimating them. They're being decimated. And if we didn't hit, and by the way, we have massive amounts of ammunition. We have the high end. A lot of it was given away stupidly by Biden, very stupidly for free. And I'm all for Ukraine, but they gave away a lot. As you know, when I give away ammunition, everybody pays for it. The European Union's paying for it. Then they can do what they want with it, but they are giving it, let's say, to Ukraine, and it's okay. But we gave away a lot of high end, but we have plenty. But we have unlimited middle and upper ammunition, which is really what we're using in this war. And we have really an unlimited supply. We also have a lot of the very high end stored in different countries throughout the world. We're literally storing it there, which is actually something that I insisted on in my first term.
GE got buyers at the low. GE still basing up here. GE Vernova.
Unbelievable amount of ammunition or munitions, as they say, we're giving away to. The Wall Street Journal incorrectly covered the story when they said that it was given away to the Middle East. Not to the Middle East, it was given away to Ukraine. The nations, because they're rich, they have a lot.
AVAB off the lows. AVAB. Nice reversal so far.
Look, it's a war that should have never happened. If I were president, that war would have never happened. But we have a tremendous amount of munitions, ammunition at the upper level, middle and upper level, all of which is really powerful stuff.
Oh boy.
How worried are you that the rising prices for gas and oil are damaging the American economy and also the
Yeah, sure. This is, of course, damaging our economies. This is true for the oil prices, and this is true for the gas prices as well. So that's the reason why we all hope that this war will come to an end as soon as possible. And we are hoping that the Israeli and the American army are doing the right things to bring this to an end and to have really a new government in place who is coming back to peace.
Yeah. Something had to be done. And it's been 47 years. They've been killing people all over the world for a long time. They would be
Core weave turning back up. That took a dip this morning. Most stocks took a dip this morning. Unsurprising.
I think it might be a different story today. They would have been much stronger and smarter than they are. But
Futures turning back up. All right, I'm going to take a 2-minute break. I'll be right back.
the people lost their legs, arms, had their face wiped out, just wiped out. I've seen some young people that it's so sad to watch. And that was almost 95% comes from Iran and was Soleimani. Soleimani loved it. His favorite weapon. He loved the roadside bomb. And when you see people walking around with no legs and no arms and a face that's been blown to hell, these people, what they have to go and the way they have to live, this is Iran. When you look at the barracks, the famous barracks, when you look at the hostages, when you look at a lot of hostages, when you look at all of the problems, they were really a purveyor of terror all over the world for many, many years. And it's something that had to be done, something. And I believe that if we didn't, because I see where Congress, if I didn't do this, guys like Schumer, who are losers, the Democrats, they're losers. That's why they're not here. Guys like Schumer would say, well, you should have done this. In other words, if I did it, it's no good. If I didn't do it, they would have said the opposite, that you should have done this. But most people feel, I'll tell you what, I have never had more compliments on something I did. People felt it's something that had to be done. So if we have a little high oil prices for a little while, but as soon as this ends, those prices are going to drop, I believe, lower than even before. Go ahead, please. Yes. Between who? And U.S. and who?
EU, European Union.
Well, we won on tariffs, actually. Somebody said you actually won the case. We won on tariffs. We had a decision that was wrong. It was a very bad decision from certain standpoints. From other standpoints, a very powerful decision because it reaffirmed all the fact that we have all these various forms of tariffs that we felt right, but it totally reaffirmed it. It said you can use all of these tariffs. So we have all these vast menus of tariffs, and tariffs have made our country very rich. We have to charge tariffs to nations who play with their money, like a yo-yo. We have to take
Okay,
care
this is
of
getting a little
nations
boring now.
that have been good to us and fair to us. And we're gonna take
Markets like it. Markets like it so far. Kind of stalling. It looks like the markets are getting a little bored with the media coverage at the moment with the president. So I'm going to switch channels and see if there's anything else going on here. Okay.
In the relatively near future as this goes on. They have put in place production agreements to the triple, quadruple production rates of a lot of these defense systems. So I think going forward,
Hold in there. Fangs did okay over the last hour or so. Microsoft probably the best. Apple needs to get above the 50-day. Apple just kind of languishing down here. Needs to get above the 50-day. Apple. Microsoft having a good day. Microsoft off the lows. Note the Bollinger Bands are almost completely closed now. RSI is rising. MACD stochastics rising. Volume starting to show signs of institutions coming in. It's about 150 million shares have traded hands over the last 6 trading days. All right, so once it comes out of this squeeze, my guess is it's going to be to the upside. No guarantees, but that's what it looks like. IGV, not UGV. IGV, software ETF. Okay, looking very good here. Okay, it's already starting to take out some of these pivots. So software as a whole looks really good. Nice volume. That's institutions. That's like 250 million shares trading hands over the last 6 trading days. IGV. Okay, if you're interested, I already have a position in IGV. May options. Trading mostly options at the moment. Out May, June, that time frame. And using spreads, using debit spreads so that my exposure is, my risk to reward is much greater. But yet I'm not exposed to the market's mayhem. If I had everything was shares, I'd be too exposed. I didn't want to do that. So better to participate on a smaller scale, but have leverage to help with the upside that I would get with shares if it was just purely shares. All right, Tesla rolling over. NVIDIA fading from the high. S&P fading from the high. S&P starting to fade a bit. VWAP is down here. Okay, a hammer so far. If we can keep the hammer, that would be good. 50 days way up there now. 50 days so far away. Like Carly Simon, so far away. Far away.
Tony, I know you're a stock analyst. You're not a military analyst, but having the experience that you have.
Okay, just being patient. Being patient.
I mean, how do you think this is going to play out in terms of how long this could potentially last?
my old squadron, VMFA 314, the Black.
Let's see what Brent has to say here. Let's see what this is all about. Beware of the put rallies, huh?
Or you want to monetize your position, et cetera. Now, the orange line is calls, and I think what's interesting here is you can see that call selling was very flat, and then around when the S&P rallied about 68.50, you see the calls are now coming for sale. So my initial point on this is that this rally is unstable because arguably what happened here was puts came for sale. They could have been longs that were closed short or short period, but when you sell those puts and the market rallies, those put values go kind of towards zero, right? I mean, not all of them, but they certainly lose a lot of value, and that makes the rally unstable. Whereas if these were calls that were bought, those values would be arguably picking up and gaining in value, and or you want to monetize your position.
Okay, that makes sense.
The orange line is calls.
Okay, that makes sense. People closing puts. Snowflake trying to take out the high of the day. Snowflake. Microsoft holding its own, looking pretty good. NVIDIA, man, I tell you what, all it would take is something like unconditional surrender from Iran, the Republican Guard, if they haven't already done so. I've been reading all sorts of propaganda. I don't believe half the things I see out there. I hear it from the president. That'll be a different story. We'll see it from the markets first. Once the markets sniff something, you'll see us probably take off to the upside. The bias is bearish at the moment. We got risk off because of junk bonds and IBB, all the risky assets like IWM. That's a hammer too, but needs to get back above the 50-day and rally back up. Biotechs, IBB. Looks okay. XBI. These are risky assets, and traders will exit these when they think it's a risk off situation. Risk off. Junk bonds gap down substantially because there was no bid. Now it's starting to catch a bid down here. Junk bonds coming off the low, catching a bid off the low. Got a lot of work to do. But this is risk off too until we get back, take back some of these losses. High yield corporate, same thing. IYG, HYG. Breath, let's see what breath looks like. So when breath gets bad, eventually we get to a point where we're ready to pivot and move in the other direction. So we're waiting for that pivot for it to all line up. Bitcoin had a little bounce, but didn't follow through like yesterday. Bitcoin, BTC, USD. Didn't follow through like yesterday. Did have buyers at the low of the day, though. So this could very well continue. I like the idea to the long side. BITX is coming off the low. The JDST, the gold short. Okay. Silver coming off the low. Below the 50-day. Silver. I don't know. It feels like most of the gains have been gotten for gold and silver. Maybe we see some more upside, but the risk seems much greater now as far as the choppiness, because the trend before, every time it would pull back, gold and silver would bounce while it was running 90 EMA. Now we're just building this huge base. I don't like it as much as I did back in October, November, when it just kept going. Okay, so there's gold, silver. Let's look at the equal weight index, S&P 500 equal weight. Long-legged doji off the 50-day moving average. Okay. That's the first time we've touched the 50-day since November when this rally started. Let's see, SPHD. Okay, these are recovering. SCHD, recovering. DIV, these are dividend-paying ETFs that have 20, 30, 40, 50 stocks in them that pay dividends. They're recovering. That looks good. Let's look at the New York Stock Exchange. I always like to check the New York Stock Exchange and all the indicators we built over the years. The volume oscillator is still at 0, so this is neutral. It's good to not at least not be bearish. You know what? XII. Let's check out XII. ARCA Institutional Index bouncing. There's the 200-day right there. Will institutions come in and start buying again? XII, the ARCA Institutional Index. This is the 75 stocks most commonly held in core portfolios, institutions' core portfolios. Always good to keep an eye on this one. XII. Okay, this is neutral to bearish to neutral. I wouldn't do much with this at the moment. Okay, let's look at the 1,500 stocks. 1,500 stocks. All right, new highs, new lows. Okay, the New York Stock Exchange, take new highs, subtract new lows. It's the first time we're below the 0 line since over here at the end of the year. Do we bounce back above? We'll know by the end of the day. Advanced decline was making new highs. Advanced decline was making new highs. New York Stock Exchange, that was off a bit this morning. Big drop off here. 2,400 stocks, 2,400 components, 70% of which are US-based quality names. 25% approximately are ADRs, American Depository Receipts, and about 5% are real estate investment trusts. Now, I haven't updated that list yet, but that was updated like a couple of months ago. So 70% are stocks in the U.S. So a lot of stocks dropped this morning. Not surprising. We came down, tested the 50. We're getting a bounce. Buyers stepping up. So if you had cash ready, some of these stocks are bouncing. AeroVironment got a triple downgrade yesterday. That's bouncing hard today. Here, it's just not even looking back. Frano mentioned this one this morning. AVXX. The Defiance 2 times long AeroVironment. Okay, that is up 23% this morning. Thank you, Frano, for that heads up. What else? Breath we talked about. Let's look at a few other things here. No, let's go to the S&P, right? S&P 1500 composite. All right, this is the S&P 500, S&P 400 mid caps, S&P 600 small caps. Okay, we want to see this line green and rising. Okay, so it's currently just turned red. So that's an early, well, it's a lagging signal, so it's a late warning at this point because we already dropped down below the 50-day. But the New York Stock Exchange, we're watching as well. You can see this rounding top, more red candles. We're below 0 on the histogram. So that's telling you neutral. Sit on your hands, neutral to bearish. I'd like to see the structure in the S&P firm up a bit. We have a March expiration. February is out of the way now, so we got a lot of calls and puts that evaporated or closed, and now we have to fill in structure underneath price action right now. I want to see more positive gamma. Let's take a look at that. Okay, so this is 0-day. So longer dated. We're starting to build some positive gamma. You see that here? Positive gamma building down below. Want to see more of that? Want to see more purple on the right side? You can see all this red. This is high volatility. It's telling you look for fast moves. Okay, I want to see this chart turn to more purple. Let's see if I go back a couple of weeks. Let me see what this looks like. Let's go back to the middle of February. A lot more purple in there. Let me just turn this down a bit. A lot more purple in here. That was early February. Let's see. See a lot more purple in here. Conversely, right now we got a lot of red, so that's telling you high volatility. Not surprising if you're paying attention. A lot of red in here.
I think that we think of Walmart perhaps as being
Target at the highs. Target. Let's go take a look at Target. I was thinking about doing something with Target. Oh wait, it's pushing higher right now. I don't want to buy Target on the run, like Paul McCartney. Banned on the run. Oh, he's still talking? All right, let's see. Oh, missed a couple of minutes there. Okay, futures turning back up. Target. These dips keep getting bought. Target. What's Walmart doing? Walmart coming off the low. It's going to go green, Walmart, shortly. Okay, Microsoft looks good.
We thought that, I thought it was going to be one of the easier ones. I've settled 8 wars, and actually maybe one more than that. But minimum 8 wars, big ones, potential India, Pakistan, big wars, very important, big ones. I thought this was going to be much easier than it is. There's tremendous hatred between President Putin and President Zelensky. Tremendous hatred. I've seen a lot of hatred in my life, but I think this is about top scale. I believe it's going to happen. Sometimes I blame one, sometimes I blame the other. I think it's going to happen, but it's high on my list. Not in that it affects the United States so much because it's very far away, but last week, I just see last week and for the last 4 weeks actually, 32,000 soldiers died. 32,000. And it's been averaging 25 to 30,000 soldiers a month have been dying in that stupid war. And I'd love to see it end. It's the worst that there has been since World War II. All you can do is do your best. It takes 2 to tango, and they have to get along. They have to be able to talk to each other. They hate each other a lot. That has an impact. It really has an impact. It's bad for both. The saddest is that if the election weren't rigged, my election, that war would have never taken place. And you know what else wouldn't have taken place? Allowing 20.
Apple's fading. Apple no follow through yet. We need Apple too. We need the banks. Let's see what the banks are doing. JP Morgan. Okay, big reversal. JP Morgan, Goldman Sachs. Need these back above. All right, Goldman Sachs hanging in there a lot better than JP Morgan. JP Morgan dropped off quite a bit below the 200-day. Goldman Sachs above the 200-day, but below the 50-day. Need to see banks firm. Wells Fargo.
Because you know what? They're sick people. They're mentally ill, sick people. They're angry. They're crazy. They're sick. Thank you very much.
Apple dropping off at the moment. Apple's dropping off. Okay, Apple.
The president addressing a number of topics, including the rationale for the strikes on Iran, refuting suggestions that Iran forced the president's hand. The president saying, in fact, they did not. I might have forced theirs, he said. They, the Iranians, were going to attack first. That alludes to a comment that was made last evening by the Secretary of State, Marco Rubio. The Wall Street Journal out with a report today questioning that in some respects. You also saw quite out in the open there frictions that do exist between the United States and members of the EU, including, as the president was talking about, Spain and the UK. The president saying that we're going to cut off trade with Spain. He's obviously still smarting, as you heard as well, from his losing the tariff case in front of the Supreme Court on oil prices. The president clearly seems to be resigned to the fact that they may, in the interim, continue to move higher, but that once this is resolved, they will move lower, perhaps even lower than they were heading into this conflict. You can see crude oil here is up by a little more than 6%. We'll bring in our senior Washington correspondent, Eamon Jeffers, Washington, to react. Eamon?
Scott, that's right. I mean, I think it was striking here that the president is saying more or less exactly the opposite of what the Secretary of State, Marco Rubio, said yesterday, as you pointed out. Rubio talking to reporters on Capitol Hill saying that the reason that Iran was such an imminent threat and this military action was necessary was because the Israelis were going to strike Iran, and if that happened, the Iranians would hit the United States. And Rubio said, rather than absorb that blow, the United States decided to get in alongside Israel. That comment sparked a lot of consternation, particularly on the MAGA right. Into this war by the Israelis, and sort of they had the upper hand. The president here responding.
Microsoft still pushing here. Microsoft.
Might have forced Israel's hand. That is, the president wants to be seen as the person who was the decision maker here. He doesn't like the implication that Israel was the decision maker and the United States simply followed along. In terms of the Iranian leadership and who's going to be next.
All right, Snowflake continues to rise. So is Broadcom. Meta catching a bid here. Higher low on Meta. Google higher low. Amazon higher low. Only Apple fading. It looks like somebody just took some profits in Apple. Not happy that Apple hasn't followed through like the rest. Microsoft looks good. Nvidia looks good. Netflix is just holding. Tesla trying to turn.
Clearly some disarray and some chaos in the wake of American and Israeli strikes on leadership there. And then finally, as you point out, on oil, the president said we might have a little higher oil price for a little while, but as soon as this ends, we'll have lower oil prices than ever before. So the president clearly prepared to grit his teeth and ride this out in terms of oil prices in the short term, with the idea that on the other side,
Futures trying to go here. Okay. The market's interpreting conversations more positively. I won't call them taco trade. I hate that expression, but some people think that's funny. So whatever. We are rising. That's the main thing. S&P is rising. We get above 6,800, things start to change. We got more things changing here. We need to see more positive gamma. More purple. We need more purple, less red. Volatility is still very elevated.
Down rather sharply off the open, but we've cut the losses about in half. As I saw on the last check, there's the S&P 500, still down by almost 1.25%, but nonetheless better off than it started this day. I've got the investment committee with me today too. Joe Terranova, Malcolm Etheridge, Sarat Sethi, Josh Brown. Joe, your thoughts first.
So there is no reason to define the volatility. The volatility is here. Understand that. I don't think we have enough clarity. I don't think we have enough confidence in the clarity to expect on a day like yesterday, where it looked as though you had the all clear and the market's going to break out to the upside, to believe that can unfold. I think the same thing is true this morning. I don't think you have enough clarity to believe that there's a significant deterioration that's unfolding. So what do you do in that type of environment? You try to find opportunities where you can create alpha. I said yesterday, CF Industries, that is a name, that's a equity that I purchased yesterday. That's where I believe you can create some alpha because of this situation. You maintain exposure to the refiners, diesel prices. They are soaring today. If you believe there is a supply disruption as it relates
Okay, what's Exxon doing? Are we bouncing Exxon? Not yet. Not yet. We're just above the 20-day moving average. ExxonMobil. Baker Hughes coming off the low. Okay, I'm not eager to jump in and do anything just because the market's bounced. I want to see how. Actually, want to see how tomorrow starts out too. We got a hammer. Do we get a follow-through day tomorrow? That'd be a 3-candle reversal. That would be a positive comment by institutions and portfolio managers on the market. If we can see that third day, 1, 2, 3 reversal. Looking at the chart on the right. Day one, day 2 hammer, day 3. Like to see this rally back up. If that can happen, we'll get above 6,800. I'll get a little bit more aggressive. For now, though, not a good idea in my opinion. Not a good idea to get too aggressive at this point. To that end, I do have S&P. I do have put flies. Do have put flies on the S&P. You know about that. Put flies, 66, 65, 6,400. Basically centered around the 200-day. Okay. So this put fly right here, 66, 65, 6,400. I meant to ratchet this up because the 50-day had run right through this. So I need to move this up a bit. Maybe 66.50, 65.50, 64.50, something like that. This is what I have for now. That was bid up to $4.35 earlier. Okay, VIX is rolling over pretty quickly here. VIX is rolling over. Apple dropping off pretty fast.
So, Rob, many of the strategists out there today aren't giving up their positive views of the market. Katie Huberty over at Morgan Stanley suggests that recent geopolitical events unlikely to change their bullish view on equities over the next 6 to 12 months. UBS saying as well, we expect only minimal or a brief disruption to global energy supplies. You know, obviously our eyes are on the Strait of Hormuz. What is happening there? They say, quote,
okay, all the New York fangs are catching some selling right here. Could be a basket being sold at the moment. NVDX, all right, NVDX. Let's see where I am with NVDX.
So I do think the market is still poised for an upward trajectory, but while we go through, to Malcolm's point, I think you're going to find good stocks along the way. You know, we're adding to Disney at these levels.
Netflix.
I think high quality companies that are going to be on for sale. That's where you really need to focus on.
Yeah, you know, energy obviously is where a lot of the focus continues to be. We can take another look at crude oil spiking again today on concerns oversupply over the Strait of Hormuz being closed, or at the bare minimum, some degree of disruption there. Josh, it turns me to you. Natural gas is in focus today too. You sold Devon Energy. Tell me why. It's still on your best stocks list. Malcolm just mentioned that name. Why are you selling it here?
I took a profit. Look, the energy stocks have been the place to be this year. It's a wild year in terms of dispersion. Citadel Securities put out a note a couple of days ago talking about this being in the 97th percentile of dispersion of returns going back 3 decades. And even if you're not looking at the data, just anecdotally, you look at open your brokerage app if you're a retail, if you're an institution, you're an asset manager, look at the sheets of your positions. It is unbelievable the degree to which stocks are diverging from each other. And what's most interesting is we're in an environment where more than half of all active managers are outperforming. Why is that? Because they look different than the S&P 500. The S&P 500 is not having a great go of it. However, you look at sectors that are tiny in the index, like energy, and that's where all the performance is. The energy sector, as of the
about 4% so far off the high.
In total return this year. The second best sector, materials, up 17%. Nobody owns these stocks in size. You can't. They're not big enough for the most part. So I'm out of Devon, took a profit. I am long ExxonMobil. I have not come out of that. I'm rolling my stocks higher. Look at put up the chart of that one.
You hear what he just said? Roll them higher. That's what we've been doing. That's what we've been doing. Rolling our positions higher. Chevron started at 155, 160, got all the way up to 195, 200. All right, we got a nice little bounce here in the S&P. So it looks like somebody took some profits. That's all it looks like for now. S&P starting to bounce. Watching MACD. Watch that volume.
The fallout from all of this may not be in the...
Not doing a whole lot today. Some things that have bounced. I like the idea. AeroVironment, that was way overdone. AeroVironment, way overdone. Frano mentioned this one this morning. AeroVironment, way overdone. Turning back up. Yesterday it was sold off. Today, regaining strength. It's 25 points off of the closing low. The close, yesterday's close. 25 to 27 points. That's a pretty big deal. Can we see more upside? You could try AVXX. That's one Frano mentioned earlier. Okay. That's up 24%. 24%.
Especially if CrowdStrike follows the mold of the rest of companies that have reported earnings.
NYMO is at minus 41. Finally, NYMO making a low. We haven't seen a minus 40 since September of last year. actually October, November last year, we saw a number NIMO minus 40 or lower, minus 50, minus 60. So we're getting close to everything being sold, capitulation selling, look for a bounce, take that cash and put it to work once we get a nice base to reference.
With access to our actual credentials, logging in on our behalf and making commands. That says to me that a company that's the category leader in cybersecurity right now, at least cloud-based cybersecurity, is going to be
Okay, Microsoft. Microsoft finally above the 20 EMA, and it needs to follow through. Could still be struggling. IGV looking better. The software ETF above the 20 EMA. That's starting to turn, maybe start to trend upward. Like this move downward. We want to see this. We want to see this. We want to see that 20 EMA turned up and price action moving higher. Right now, we're just turning the corner, so your trailing stop is under 80, 81 or so. Look for this to follow through. Okay, Netflix, of course, Netflix gapping up on Friday. Netflix, okay, consolidating right now, looking for it to hold this level.
Out their cybersecurity is the dumbest thing I've ever heard. And I've been on Wall Street 28 years. I still think that selling, staying long, believe in George Kurtz, believe in Falcon. And I think this thing under 400 is a screamer.
Pretty big jump into this space here.
So I took a small step back.
Apple short covering, Apple. The markets are starting to bounce too. All the New York FANGs look okay. They're green, but they have moved off the highs of the day for the most part. Microsoft's hanging in the best. Microsoft, Snowflake, lesser so Amazon, Google, Meta, and NVIDIA. Netflix is off a little bit. Overall, looks pretty good though. Let's see, what's IWM doing? Small caps. Okay, so the spike in the 10-year yield. Not helping. 10-year yield spiked up to 1.11%, 1.1%. Need to see this roll over. If we can get the 10-year to fade from this level, that should be good for small caps. Okay, futures trying to turn back up. Big range. Look at this range bound action. Chop, chop, chop. Buy the low, sell the high. Working up until today. Okay, BX. Private credit. Still weak. Apollo, Blackstone, KKR. These are all weak. Trending. You can see the 20 EMA is trending. Blue Owl Capital. This is the one that caught everybody's attention. That's quite a bit lower. Blue Owl Capital. When everybody was looking for private credit, Blue Owl was trading 25. Back in late 24, early 25. Now it's more than half of that price. AeroVironment, drones, got a triple downgrade yesterday. Big bounce today. So if you bought it earlier today, nice bounce.
Right now, they're sitting on in cash, which, if I remember right, is about the size of Cred. So what was once their Achilles heel is actually the thing that's looking like a strength for Carlisle right now. So to me, it looks like the
futures turning back up.
I guess, Josh, you would agree with that, considering it
S&P turning back up.
that you do own.
It bounced at one standard deviation from VWAP. VWAP plus one standard deviation. We just bounced right there. You see it? Okay, this level right here, that line that follows VWAP, that's one standard deviation. We're headed back up. Maybe we'll get this two standard deviations, take out 6,800. That's the hope, that we close on a hammer. A bullish hammer would look a lot better, green versus red. With a start tomorrow, bullish back towards the 50-day, that would be great. That'll catch a lot of people off sides. It's a good thing because everybody was bullish. Most people were bullish, including myself. Still got a lot of longs. But my longs are no longer all shares. Many of them are May, June options and spreads, debit spreads, so I could participate on bounces, but not be exposed to huge downside. Like yesterday, pre-market down 175 points, only to rally back up to zero. Volatility is too high to be holding on a lot of shares for me at the moment. Aside from, say, the longer term stuff like RGAFX or TRBCX, SPHD, SCHD, DIV, some of my longs, long only funds, those are fine. JEPI, JEPQ, getting hit the worst. JEPI looking okay. Futures turning back up. Highly volatile market. Very volatile market.
Says its highest conviction overweight is not in the United States. We'll tell you where it is next.
Okay, it'll be interesting to see what he has to say. Highest conviction overweight's not in the U.S. Okay, so where would it be? Let's go find out. Let's see if we can steal his thunder. Let's see if we can steal Wapner's thunder. He just said highest conviction long or something to that effect, and it's not in the U.S. Okay, let's go see what international markets say. World indices, let's just sort this by performance and see who's the best. Saudi Arabia. Interesting. Saudi Arabia. I don't know about that. Don't know about Saudi Arabia. World market, SPX, Nikkei. Nikkei's down 1.35%. Be interesting to see what he has to say. Nikkei. Let's see what the Nikkei looks like. Nikkei is trending. Look at the Nikkei. That's crazy. Since April, we had the reversal. We had the flip and the carry trade. The yen started getting bought. Outperforming, rather. Let's see. JPY-USD. JPY, not T. Dummy. JPY. JPY. Okay. Hanging out. So the US dollar outperforming. All right, so it'll be interesting to see what he has to say as far as what a particular investor is going to say. Nikkei looks pretty good, though. Nikkei's been trending. It just came out of a base beginning of January, starting to trend some more. So is he going to say Nikkei? Let's see. Nikkei's been trending, so buying the dip's been working since the 20 and 50-day, been holding, trending since May of last year. The New York Fangs look okay. I'm looking at a grid of the New York Fang components. Apple just caught a bid.
Unsettled market, but want to show you the Dow intraday because we are off of the very worst levels, down by about 1,200 earlier. So we've cut them in half as we try and work our way and get a little more constructive on these markets as we.
What happened to my? Where'd the volume go? He's talking, but no volume.
Highest overweight conviction remains emerging markets. where the narrative for another super cycle could be the ongoing diversification away from U.S. trade uncertainty. You can obviously think of other uncertainties.
Emerging markets gap down.
I think it's a reaction to the significant rally that we're seeing in the U.S.
Our highest
dollar, where
overweight conviction remains emerging markets. Well, emerging markets gap down. So I don't know what this analyst is telling you, but I see the Nikkei is doing much better. Nikkei is holding its gains, and emerging markets have gapped down.
I think you want to give consideration to increasing the exposure there. I think you want to think about oil and think about who is an oil exporter. That takes you to Brazil, the EWZ. If you could show that chart while I'm speaking too. You could also look at Mexico, EWW.
Yeah, EWW.
Exposure there as well. And back to EIS, which I announced yesterday.
Okay, so they're talking all of the things we looked at this morning. If you recall, we talked about some of these international ETFs. Okay, futures are going. Futures are pushing higher. Watch the futures here. S&P going. S&P trying to break out. S&P trying to go.
Said their highest conviction overweight continues to be emerging markets. The EEM only up 4.5% year to date, but that's still 4.5% at least better than what we've done here. Other markets all around the world have better returns to this point in this still young year than the United States does. What about these calls?
Yeah, look, I think this thing is going to have legs beyond just 6 months or a year. Over the last 15 years, we've really seen like these 3-month rallies, 6-month rallies. People have gotten very frustrated because every time you get pulled up on international, it like fades away and the Mag 7 come roaring back and you feel like an idiot again. And you're back to apologizing to your clients. Why do we have this 8% EEM sleeve, right? Like that's the thing that allocators are sick and tired of. I think the switch flipped. Some of that is structural dollar weakness. Some of that is onshoring. We're not the only country that recognizes the strategic need to invest in infrastructure within our own territory. And then some of that is just, plain vanilla growth initiatives happening at the government level that's sparking better stock markets overseas and more enthusiastic investors. But when you combine those things, Judge, you have to say this is probably going to be different than those 3-month rallies that faded away. This one looks like it has legs and there's a fundamental underpinning. And so I agree with what Joe said. We are long international stocks, international value, international small cap. They look unbelievable. They are lapping the S&P. I don't see why that has to stop.
Go back to Eamon Jarvis in Washington, who's following a developing story, of course. What do we know here, Eamon?
Scott, the developing story is the administration's battle against big law firms. Remember, yesterday, the administration reversed course and filed a motion in federal court asking...
Oh, who cares? Jeez, talk markets. Come on, guys. Stop with the freaking politics. Want politics, I'll go look at CNN or something. Please. Not that they're going to listen to me, but it is annoying.
Around GE is the valuation. If you look at the earnings multiple for this year at 46 times, next year at 40 times, you would say that that's lofty, and I would suggest, yeah, it is. However, one of the things you have to consider is that, what's its spider average earnings multiple, which is around 41 times. So it's splitting the difference between this year and next year, 46 to 41. But if you look at the earnings growth estimates for the forward 4 quarters, it's 16%. Historically, it's 8%. And if you look at the net profit margin of the business, it's increased by 1,300 basis points, or 13%. So it's becoming more profitable over time, improving scalability. But again, absent anything else, one would say the valuation is maybe fully valued. But nonetheless, it can, as a company, grow earnings into that rising price. I think this is what Bernstein is looking at with their call.
Okay, we're back up to the highs, starting to fade again. All right, so it's very possible we could put in a range. Okay, so a range here. Expected for now.
The stock's just below all-time highs, up nearly 70% over the past 12 months. So it's had a great run here, but maybe it should at this point, because if you look at their installed, engine base, it's like 45,000. So that's annual
recurring revenue because the services side of their business, which is the big margin side of their business, continues to expand at this point. So that is the good part of this story. The backlogs from the aircraft makers, whether it's Boeing or Airbus, continue to expand at this point. And that's going to expand the services contracts that they have on all these engines. So it's a good outlook, and I think it's been rewarded by the market at this point. Now, I looked at a strategy that's a little bit more passive because a lot of people feel like, oh, I've already missed the rally. It's already up 70% over the last 12 months. But there's still strategies that you can use, even if we do get a small pullback, that you can still be potentially profitable taking advantage of the option market. So I went out to the March monthly options that expire in 17 days, and I looked at selling an out of the money short, neutral to bullish put vertical here. So selling the March 320 strike put and then buying the 300 strike put. So a short $20 wide, neutral to bullish put vertical. You're collecting roughly about a $4.50 credit on it. That's what you can make, $450 per spread with about $1,550 in risk, but that's all the way below the 300 level at this point. So you've got that big cushion to the downside. Your break even, 315.50 to the downside before you start getting hurt on a trade like this. So in the situation where the stock goes higher, you make you're profitable. If the stock consolidates here, you're profitable. Even if the stock falls a little bit but remains above that 315.50 level, you're going to be profitable on this type of trade. Now, positive time decay or theta works in your favor also. So as you get closer to expiration over the next 2.5 weeks, on a daily basis, time decay works in your favor where it's going to contract the price of this. And then remember, we're at high volatility levels in the overall market. If implied volatility levels come down, that'll also contract the price of this. Now, the objective here is for the stock to remain above 320, and then you just get to keep that $450 or that $4.50 credit you collected and let it go out worthless. But as it contracts in value, it gives you that opportunity to potentially close it ahead of time, ahead of expiration, if the market's open and allows you to close it, and time decay or implied volatility levels start to come in, also contracting the price of this short neutral to bullish put vertical here in GE.
Okay, short neutral to bullish put vertical. That's the approach, the example trade approach for GE Aerospace. Interesting take, and we've got Bernstein again getting more bullish on this one with their increased price target on GE Aerospace. The shares under pressure, like the broad market. But again, as you pointed out, Tom, we are well off the lows of the session. We'll see what happens if we'll stage some kind of turnaround like we saw yesterday. The day still has some time in it. The S&P 500 off by just shy of 1.5%, down lower by 1.33%. Nasdaq 100 off.
It's the weakest of the three. That's probably not the one I would run to. LIN, very interesting.
S&P just staying in this range up here in the upper half of today's range.
Really important. It shook off the intraday weakness, rallied right back there, had a massive earnings beat the other day, and you could see a golden cross starting to form as that 50-day gets above the 200. In my column for CNBC Pro, I have the risk management levels for all three. If you're a subscriber, you could see where that trade might change. But right now, I think these stocks are all going to work.
So, Lindy, if you want to buy European and international exposure, you also want to buy our products, which is one we own, which is hydrogen and liquid gas. That's another one. And to Josh's point, it's something that's very under-owned. Most investors don't know about it unless you've been in the game for a long time.
We own it. Very strong capital allocation strategy. We also own Ecolab. They have very strong free cash flow as well. Balance sheets are phenomenal. Material space right now is a sector that you want to have ownership to, despite what you're seeing today from Freeport-McMoRan and Newmont.
I know what HALO stands for, but AF? No, I'm just kidding. Don't go there.
We're going to have to leave it there.
Don't go there. We'll have to leave it there.
We'll be right back.
We will have to leave it there. I do want to talk about some other stocks that are in the move. On the move, excuse me. Now I'm all flustered. Archer Aviation. They're calling for an adjusted loss before interest, taxes, depreciation, and amortization. Josh, you own the stock.
Yeah, look, I think it's not that complicated. These are highly, let's call them experimental technology companies. However, this isn't a big industry for the future. We don't know who's going to win, so I own this one. I also own Joby. I think I'm twice as big in Joby as I am here. These are not gigantic positions for me because I recognize it's going to take years before we see like cash flow generation to justify the valuations. But I'm still long, and I follow the news every day.
I haven't gotten your view, I don't think, Josh, on Netflix since they bowed out of the bidding. So, the big news for those who may not remember is that you pared back your position substantially after the news first and their bid first emerged several months ago.
Yeah.
Stock obviously went nearly straight down. Guys, can you show me 6 months? Better than that for me? Can you show me 6 months, please? Because that shows there you go. Thank you.
Judge.
It's all right. They adjusted. They're quick. They're good. 6 months shows the decline. Now what?
I got out of most of my position as it broke below 100. People, the street just hated the deal. They never liked the deal. I think it's probably a situation where the right bidder won the company. Like this, Paramount needed this. Netflix didn't need it. It would have been nice to have. They would have picked up a lot of like really great properties to do new shows and spinoffs, and they would have picked up their own studio lot, a gigantic one of the original studios, but they never needed it. And I think that's what you're seeing here in the chart. I did add a little bit in the 70s, not enough, obviously, in hindsight. But I think that this is back to being a constructive name. And I think this is a stock that if you miss
Nokia. All right, buyers at the low of the day. Looks like it's going to head higher. Nokia made a new high yesterday, a new high for the year at $8.37 at the high. Nokia. I have the 5 and the 7. I have less of the 5 left. More of the 7 call for April.
Toast, Value Act Capital just doubled their position in the stock right after the earnings report. I like it.
Okay, Sarat, Disney must be you.
Sticking with Disney.
Service now.
Yeah, that's look how it's trading as the world is melting down around us today. Maybe we finally have touched the bottom.
Well, we shall see. Joey T.
ResMed, all this volatility, a lot of people have sleep disorders like me.
All right, so let's see where this market goes over the next few hours, and I'll join you on the closing bell.
Scott, thank you very much, and welcome to the exchange.
Okay, Nokia looks good. S&P 500. Got a feeling we're going to get above 6,800 if we can. If we get above 6,800, things are going to change, I would imagine. Look at the hammer over here on the right. That's crazy. Okay, so we got a hammer. Hammer on the daily. Okay, let me just pull this down a little bit so you can see the actual hammer. Pull it down a little more. There you go. Hammer. Okay, it looks like we're going to take out the highs here. Futures are rising again. Yeah, there goes Netflix. Netflix turning up. Netflix, buy the dip. Buy the dip. If it fails to make it back up into most of yesterday's price action, then we can always reduce that exposure. For now, it looks like we're going to continue higher. Netflix looks good. Okay, S&P's breaking. Okay, here goes the S&P. S&P trying again.
What the worst case scenario would be in his mind for this military operation? Here's what he had to say.
I guess the worst case would be we do this and then somebody takes over who's as bad as the previous person, right? That could happen. We don't want that to happen. That would probably be the worst. You go through this and then in 5 years you realize you put somebody in who was no better.
Kelly, despite that concern that you heard the president voice there, that you can put somebody in who's no better than the person you just took out, the president did say that he's looking to break with the model that the United States used in Iraq, in which you remember that de-Baathification process in Iraq really removed all of the top layers of the Iraqi bureaucracy and really created a power vacuum. The president said that created ultimately ISIS because all of those people were out of power and angry and hostile, and a lot of them were armed. In this case, the president's suggesting that he has...
Snowflake making some new highs here. Snowflake, all right, so we're starting to retrace a little bit. Snowflake.
To run the government and sort of all the military operations.
Snowflake taken off to the upside. Snowflake. Microsoft. Very strong day for Microsoft. Very strong day. Following through on yesterday. Microsoft. Very strong price action on Microsoft. Thank you very much.
Yeah, that coming off of those comments from Marco Rubio, the Secretary of State, yesterday. Rubio said that the United States was facing an imminent threat from Iran because the U.S. knew that the Israelis were going to strike Iran, and when they did that, the Iranians would strike back at U.S. targets. Rather than absorb that blow, Rubio said, the United States decided to get in alongside the Israelis and their military campaign. That sparked a whole bunch of anger, particularly on the MAGA right, that the president had been led into this war by Bibi Netanyahu and the Israeli government. The president here...
They just can't help themselves. They got to talk politics. Talk about the financial markets, please. I'll keep turning them off every time they get onto the subject.
It's investors coming around to the idea of the magnitude of the potential impact of this war, just how long it might actually drag out for as far as this conflict now that's really sort of changed the psyche here as to, perhaps what they were pricing in yesterday, because we did see that degree of resilience. But as I mentioned, obviously there are some little pockets of strength, little bright spots within this. But I mean, take a look at some of the international ETFs as well. I mean, getting absolutely hammered. I think, the international performance was very, very telling. I mean, looking at South Korean Kospi overnight, down 7%. I mean, this has been our best performer, really been the poster child this year. I mean, this is the worst day it had since 19 months back or something. And you're seeing actually the EWY down 10% right now. You've got China K-Web, the internet shares also down almost 5% or so right now as well. I mean, that is in oversold territory too. So you are seeing international pulling back a bit today as well, given the outperformance we've seen very much for global stocks.
I think a really great summation of what we're seeing as far as beyond just the equities tonight. We do tend to just check in on the four major averages, but I think a great read on what we're seeing as far as the broader implications of the ongoing conflict. And you make a great point. It's all to me about the timeline of this. Impossible to estimate right now, but I do think the longevity is where we're starting to see more and more risk being just advised, because it could go much on. It seems like it's much longer than it initially had been anticipated. I mean, just in the last 24 hours. But we'll get to some of these stock stories here now. Target is up 6% on. What I will say, I'm shocked to see this move has held all day. I mean, even in spite of the broader market pressure, I looked at this report this morning, and I will say fairly mixed bag, but at least the expectations that we'll see improvement. But I mean, this has so not been enough for so many.
Okay, S&P breaking higher now.
We're also beaten down going into
Microsoft breaking higher. S&P trying to get through this level as well. Looks like we're going to do it. I don't know. It looks like we're going to do it. Doesn't it? Need more volume, though. We got to get more volume. Not enough volume right now. Okay. See the volume? We're lacking volume. Let's see if that builds up. Let's see if the volume picks up. S&P trying to push. Microsoft pushing the highs. Amazon. NVIDIA looks like it could go. Software doing okay. So we're breaking above 6,800 or trying to. We did that a few minutes ago. About 5 minutes ago, we tried to get above and got rejected. Let's see if we follow through. Watch that volume. MACD's turned up, so that's giving you a good signal so far for longs.
television interview, I believe, this morning as CEO in this role. But he's been talking about the new chapter for Target. I mean, he's been listening to the consumers, they say. He says keeping an eye on the consumer backdrop, given some of the concerns around basic kitchen table issues, you know, the sorts of things we read in consumer sentiment reports week after week. And of course, what is going on right now in the Middle East, and you can't ignore that with, you know, obviously some of the stagflationary pressures we could potentially be staring down the barrel of as well. He was asked also about the collaborations which you used to see that used to have the lines out the door, and what people used to call Target, of course. And he says, look, they're going to increase the pace of the partnerships as one of the changes that they are implementing. So I think, you know, it wasn't just so much about the numbers, but the narrative that Fidelity is putting up right now that seems to be resonating with the markets today, Jenny.
Hey guys, and gosh, you brought me back. I haven't heard it called Target in years, and it's such a good
Yeah,
point.
stupid.
That's what we always used to know it as, but we've seen it in a different Target, of course, now face us as consumers. It's expensive, frankly. It's why
So really look for that dislocation.
Okay, we're trying to push above this level. We'll keep getting rejected.
So I would not chase energy, and I do notice today, you know, oil's up a lot, but stocks are, you know, not up a lot. I wonder whether, you know, that's kind of showing some tiredness already in that area.
Peter, what would you say?
Well, even with this rally in energy stocks over the past month, it's been one of my favorite groups that we own coming into the year. It's only about 3%.
Come on, let's follow through. S&P looking good. New York Fangs. Okay, Microsoft making new highs. So is Snowflake. Looks like Amazon's about to go. Amazon, Microsoft, Snowflake, Meta, Netflix.
But I also think that the non-AI trade, which has clearly been a trend,
Amazon, Microsoft,
so I think focusing on other boring things like consumer staple stocks,
Snowflake.
Is also a strategy, and that the overall AI tech trade is exhausting itself, and investors need to look at other places for returns.
Yeah, like things that can't get Gen AI, and to use a phrase from Peter Bookvar, who was talking about this earlier on. Andrew, then just a final comment about some of the issues is we're probably going to hear from Ares and some of the other private credit vehicles for the remainder of this week. And, you know, I guess it's the impetus is on these companies to keep, I don't want to call it a panic, but to keep people from panicking, to keep these withdrawals from spreading. And to the extent they can say, you want your money back, you can have your money back, whatever we have to do to make that happen and keep this contained, probably the better it is.
Let's go. LETSGO. Let's go. Microsoft. I'm watching Microsoft here. Continuation on Microsoft. Okay, obviously making it through some levels today. Microsoft looks good. Microsoft looking good. Okay, daily looking good. Daily looking really super good. Finally, maybe getting that break to the upside in the next couple of days.
Stable. So I think this is an opportunity to take advantage of what the market has knee-jerk reacted to. Don't chase the, you know, staples that are done well.
Well, wait, just give me a quick kind of whether it's a name or a sector, Andrew. If you're not that big on, you know, energy or staples or technology, we're kind of ruling stuff out.
I like technology. So like, look at Nvidia.
Just not software.
I mean, Nvidia is trading at 18 times, you know, 20, you know, next year's earnings. I mean, for a company that's going to grow, continue to grow. And we've seen this movie before where they keep beating numbers and then people question the demand and it comes through and it goes up. I mean, the stock, you know, everyone says, oh, it's run out of steam. Well, the stock was up 40% last year. So I think this is your opportunity because they just came off a great quarter, but the market is focused on macro. So they're selling these big types of stocks. So I think
All right, pushing higher, pushing higher. Let's go. S&P is dragging its feet a little bit. Microsoft looks good, though. Amazon, Nvidia, Meta's trying to do something. Snowflake rising. Tesla's trying to take out that 393, 394 level.
Guys, thank you. We'll leave it there for now. Andrew Slim and Peter Bookvar talking us through these markets. You heard them talk about energy. are spiking across the board as the Iran conflict enters the fourth day. Crude up nearly 9% before pairing some gains. Brent above 80 a barrel. Even more extreme moves in that gas. Let's bring in Pippa Stevens with a run through. Pippa?
Hey, Kelly. So let's start here with oil because you are seeing some big moves off the best levels of the day, but still up about 6% with Brent at 82.12, WTI at 75.26. As ship activity in the Strait of Hormuz comes to a standstill, there is now more than 95.5 million barrels of oil loaded on tankers that are just sitting in the Persian Gulf with nowhere to go, according to Kepler. Matt Smith noting that Iraq has started shutting in production because they are out of storage space.
Yeah, these rallies seem somewhat fragile in some respects, especially like the S&P. S&P just reversed here. S&P just reversed from this level. Volume coming in. Very fragile rallies up to the highs. Need to see a little bit more of this kind of price action. People seem timid, reticent on getting into the markets at the moment. Not a bad idea. Just kind of sit back and wait, unless you're day trading.
Qatar is the world's second largest LNG exporter, and their production is offline after an Iranian drone attack. Now, last year, the U.S. accounted for some 57% of Europe's LNG imports. Finally, take a look at gas oil or European diesel, up more than 30% in the last 2 days. Diesel often called the workhorse of the economy since it powers trucks and trains. And those costs, Kelly, will get passed along to consumers.
That's like everywhere you look, really big moves there. Pippa, thanks. Pippa Stevens. Our next guest says as the closure of the Strait of Hormuz drags on, the issue becomes not just that ships can't leave, but that they can't even get in. Let's bring in Denton Cinquegrana, Chief Oil Analyst at OPIS. Denton, good to see you. What's the latest we know?
Hey, Kelly, how are you? Good to see you again. Yeah, kind of the same thing. About 900 ships just sitting there waiting to make their move. And like you mentioned, the issue necessarily isn't the ships leaving; it's the ships coming in. If this continues to drag on and on and on, you're going to see ships or countries have to shut in production because they're not going to be able to load barrels onto ships. It's going to back up into storage. They're going to use all the storage available. They're going to use all the storage tanks and pipeline line fill. And then the last resort is you have to start shutting down production.
Wait, I thought I saw some headlines about Iraq on that front earlier on. So, in the very, very short term, when you have, stockpiles being filled, it usually puts downward pressure on the oil price. But again, if they're going to have to stop producing because of this, how much higher could the oil price go?
Yeah,
I don't know, it just feels like people are quick to take profits.
But again, we've seen Brent go up $9-10 over the last, basically 48 hours.
All right, this hammer that we're dealing with, long-legged doji. Now you can barely see it on the daily. You can barely see this on the daily over here on the right. That hammer. Long-legged doji. Right there. The head of this. Okay, if this starts to build a green portion to this candle, that'd be great. We'll be able to see it a little bit better, and we'll cruise into yesterday's price action. That would be good. Get back above 6,800. Let's see what some of these other things like Nokia, these small caps, Nokia, AeroVironment, AVAV. Nice move there. At the high of the day, AVAV.
Some of the options potentially for the administration is obviously backstop the insurance costs, but also naval escorts to there. I think that can obviously get messy as this continues. So I'll just kind of have to wait and see what happens. But for now, with the straits being effectively shut, now Iran didn't do anything to shut it. It's basically the insurance company saying, "Hey, drop anchor and sit there."
Is there anything else the U.S. could do? I mean, obviously, we don't have a huge cushion in the Strategic Petroleum Reserve, and you need a very, very big one to get through something really prolonged like this. What else can we do to try to insulate consumers here from the fallout?
Yeah, I think there's several things that could happen. And again, I want to definitely make it known that U.S. refineries are operating just fine. We don't import as much crude oil from the Middle East as we used to. I think based on the latest EIA, 150,000 barrels a day that came from Saudi Arabia.
primarily that was going to a refinery on the Gulf Coast, I believe. But a couple things that the administration could do is, and this happened in 2022 with several states, but offer a gasoline tax holiday that would save consumers some. Additionally, we're in the midst of the switchover from winter grade gasoline to summer grade gasoline. Now, refiners are already starting to make some of that summer grade gasoline, but they could delay the start of the summer grade gasoline being available on the street. So that could be something else that they could do as well. I don't think a release from the SPR would actually do much, considering refineries don't necessarily need the extra crude oil right now. They're doing just fine. If anything, I think if there was a release from the SPR, that oil would ultimately be exported.
Right, exactly. And that'd be a hard case to make, I think, for national security. Although at some point, if it's moving the oil price, maybe you come back to it. Denton, thanks for now. Appreciate it.
Thank you.
Denton Cinquegrana joining us there from OPIS. Coming up, a reversal in the tech trade as software outperforms semis so far this week. We'll talk more about that and which horse to bet on ahead. But first, we'll talk the fallout for the global economy with traffic in the Strait of Hormuz grinding to a halt. You heard 900 ships waiting, as Denton just told us. How much longer can it continue? Get into that next on The Exchange.
This is The Exchange on CNBC.
WNR. CONL. OKLL.
NPT.
CONL.
NPT.
SLS. AEHR. CONL. OKLL.
NPT.
Market is off the lows, but defense stocks are on pace for being slightly in the red today as well. It actually be their worst day in about a month, and maybe that's a good sign. Or maybe
High took alert plus 800.
America's supply of missile interceptors crop up. Capital Alpha Partners says those fears are being realized as Iranian missiles are impacting Israel. And there are reports the U.S. is relocating missile defense units from South Korea. If American assets are pulled, analysts warn the allies will have to reduce their dependency on the U.S., diversify suppliers, maybe even build their own capacity. My next guest says those concerns are partly driving today's market action. Joining me here on set is Michelle Crusoe-Cabrera, the CEO of MCC Global Enterprises.
All right, so we're going a bit more now.
So it is a bit odd.
S&P taking off to the upside. Looking good.
Extremely concerned about what's what's going on, and yet the defense seems.
All right, all the New York bangs are turning. Even Apple's turned now.
So there's a huge difference between today and yesterday, right? The market seemed to take everything yesterday in stride, and now things are very different. I think that has to do with the report that you just said. So I think there's two reasons. First, Iran clearly sees this as an existential threat. The regime does, and like a cornered animal, they're going to do everything they can to survive. So what have they done? They've attacked their neighbors. But Bill asked, why would you attack your neighbors? It's not that they're attacking their neighbors. They are going after the energy supply for the entire world. They want the cost of this war to be very, very high. So they're cutting off supply in any way they can. And the second reason related to that are there are assertions, unproven at this point, that they have many, many more drones than perhaps originally expected. And one of those drones, if they are successful at perhaps taking out Saudi supply, you now have oil above $100, never mind above 85, right? Remember, the concerns about Iran have always been threefold. First, the nuclear program. Everyone is familiar about that. Second, their sponsorship of terrorism all over the world, as far away as Argentina for them, right? And the third has been their ballistic missile program, which wasn't covered under the original agreement under Obama. And afterwards, a lot of people agreed, geez, we shouldn't have just gone after the nuclear enrichment. We should have also gone after their ability to project that power. And they do that with missiles and the Navy. And that came to the fore a little bit with the President's State of the Union, where it seemed like he wanted to put front and center, look, this missile threat is now also, it seems, a more serious one.
Yes, they have been testing missiles, and there have been concerns, also assertions, unproven, that perhaps the Iranians were on the verge of creating an interballistic missile, which could reach the United States. That was the justification in terms of the national security of the United States. But they do have a strong and impressive ballistic missile program, short range, medium range, and that's what this attack is about, is trying to get rid of that. That's why you want to eliminate the Navy, too, because you can project missiles from ships out in the sea.
And so as perhaps we are figuring out how much supply they might have, if that number is bigger than we thought on the drones piece, the missile piece, what's going to happen to our allies? If some were saying that Dubai has 7 days left, for instance, of interceptors to defend itself, I don't know if that report is true.
Right. So the quick concern about interceptors are these are the things that intercept the drones. They intercept the missiles. These are the things that stop those drones. They're very expensive. They are limited, just like missiles are. If there are more drones out there, then we're going to need more interceptors. And how are we going to get them? And are there enough? Does this war become longer than what the president said? Because right now, if it's just an attack on missiles, that's contained. The reason a war can go on and on and on is if they decide they're going to have ground troops. There's going to be a ground war. The president has promised that that is not going to be the case. We've heard that repeatedly. And the Iranians know that, right? So they know that there's a short amount of time. This is the window. So in one way, it's good politics and important for the president to say that. At the same time, it's also, gives the Iranians a measure of what we're willing to stand.
It's like, in other words, people kind of wonder if we in Israel have enough technology to stop Iran.
That is the question. I would still always bet on the side of the United States. I mean, the military continues to surprise with the capacity and capability that people didn't realize. I mean, the arrest of Maduro was this unbelievable thing that people have come to realize just how strong our capacity and capabilities are. So, I would bet on the side of the United States.
You'd think, if nothing else, we could have some kind of broad-based capacity to keep manufacturing supplies. Whereas if the whole point is to take theirs offline, at some point you have to imagine that we have enough, we or Israel, to take those facilities offline.
That the U.S. administration and the Defense Department the Department of War has thought of these things as well. And I think perhaps the concern about the defense companies is, are they making the right stuff? Are we going to go to different suppliers as a result of the change that we are seeing in warfare around the world because of drones? We've had a drone war going on for a long time. It's called Ukraine and Russia.
Exactly.
And we have been learning a tremendous amount about what happens on the battlefield there. I would think the U.S. military, which has been involved there, understands what those issues are and how to confront them.
That's a great point about whether we're making the right kind of stuff. Also, Dan Clifton was on yesterday, and I was just asking him about kind of any fallout for Russia. We're talking a lot about the knock-on effect for China potentially. He said, look, Russia's drones are largely coming from Iran.
Mm-hmm.
And so if that supply is redirected or not available, could that lead I don't know, to some kind of positive development on that, or maybe that's thinking a little bit too optimistic.
No, I think it's certainly possible. Certainly possible. When it comes to Venezuela, when it comes to Iran, people have said, well, where's Russia? Russia is bogged down in its own war, right? That's why they couldn't help Syria when Syria needed help. So, yes, absolutely.
Is there a weird situation though, where if there were some kind of truce or something in that conflict, because they no longer had access to the drones, could they get more involved with, for instance, propping up Iran or something to keep that conflict going? Or is
I think they would try to help.
Yeah,
sure.
Yeah.
Still, even if there was a ceasefire, even if there were better relations with the United States, certainly they're a longtime ally of Iran, and I don't think that would change unless there is regime change in Iran, which is a whole other question that we're waiting to see.
And is there anything quickly on that topic you would add before we go? Because it seems regime change is an interesting word, because there's only one regime, right? There's been only one regime there for 40 years. It's hard to see what.
So the one thing I would say is, I think when President Trump talked about regime change, a lot of people said, oh, that's the goal. Absolutely, the president wants regime change in Iran. There's no doubt about that. I'm not sure that's the goal of these attacks. The goal is the Navy and the missiles. However, I think the message was, when he talked about that, was it's up to the Iranian people. We can't do everything for you. And to anyone within the
Okay, we're trying to push a bit more.
Try to mount a coup. This is your moment.
Right. Oh, man. We'll see if they can seize that moment and to what end. Michelle, thanks. Appreciate it today. Michelle Crusoe Cabrera. Coming up, why the battle between AI startups here in the U.S. could be driving more traffic to the competition in China. Big fight there with the Defense Department or War Department as well.
20th expiration. Looking at the 210.
All right, all the New York FANGs looking pretty good now. Cooperating. Apple even turning the corner. We've got Netflix at highs, looking good.
The max profit unlimited with a break-even point of $212.68. Now this gives you just a little bit of time. The week and a half, 2 weeks or so.
Nvidia bouncing.
See a very strong earnings announcement, having the stock move to the upside in tandem with those fundamentals that could align, and that's where you could actually be profitable within this particular trade. You do have the risk of the stock moving against you and the premium kind of being reduced at an aggressive rate as well. So you have to be mindful of that. But this is giving more upside potential, and obviously having the thesis that the earnings announcement is going to be bullish.
Yeah, and so, I appreciate that and all of the insight into two of these names, obviously both with earnings still ahead this afternoon and tomorrow morning, too, in our broader retail world. So appreciate that, Kevin Green, for all of that breakdown. And now coming up next, we'll dive into some of the expectations for movies as they release this year. And, of course, the broad streaming competition that continues to weigh on some of these big box debuts. We'll dive into that broader conversation coming up next.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey. helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
CONL.
Followed voices on box office performance and broader media trends to help us, of course, understand what is working in today's movie marketplace and what still needs to change, and what, of course, news is coming out. So, Sean, appreciate you so much for being here. Always like your takeaways and really great conversations we typically have. But I'm really curious your thoughts, because we've finally come to you with clarity on this saga.
Hi, took alert plus 800.
Between Paramount, Skydance, Warner Brothers Discovery, and Netflix. Netflix, of course, backing away, Paramount winning that superior offer. But how impactful could this be for the entire media landscape?
Hey, thanks for having me back. Yeah, I think this is something that the industry is going to continue debating for quite a while. The biggest source of comparison here is what happened when Disney bought out Fox about 6 or 7 years ago. And I think movie theater owners, studios, everyone in the theatrical industry and looking at the box offices is really wondering what that film output will be, particularly on the theatrical side. Prior to the Fox acquisition for Disney, we were seeing more than 30% of box office come from those two studios independently. Now under Disney in 2025, it was around 22%. So there's been a net loss in terms of the box office contribution. At the same time, though, the caveats there are COVID happened, streaming happened. Things are a lot different now in this world.
Okay.
I think the expectation is
Just running some scans,
that they're going to try to
looking at the markets turning.
output with Warner Brothers and their own films.
So do you think that this could take, this could change the way in which, we see the hiring, firing process behind Hollywood? Do you think that this has, broad speaking really implications? Or do you think this will be more like the Disney and Fox deal where we'll see it just quietly start to form another entity? I'm just curious, the way that two powerhouses really come together, because it feels like a long ways away as well still at this point.
Right, and I think there are so many complex issues that will go on. That unfortunately, the downside to this is a lot of people speculate the potential job loss that's going to come from any merger. Historically speaking, we've seen that pretty often. It's all speculation right now. I don't think we can really speak specifically.
Target still hanging in there. It's up almost 8% now. Target taking off to the upside. Okay, missed the opportunity to get in at a lower price. This dip early this morning, ABCD pattern. It's up $6 from that ABCD pattern, $6 plus. Target looks like it's going to follow through tomorrow, most likely. Walmart trying to hold this level. Walmart, Target, TJ Maxx. Okay, S&P continues higher. S&P. Note the Bollinger Band starting to come closer, coming into price action. Got a nice hammer so far. A nice hammer on the daily.
That's the expectation. In realist terms, we're probably looking what will be the best year on record since COVID and the shutdown and the recovery process began.
Okay, I love that optimism. So not to go back with a more pessimistic take, but how much are ticket prices, premium formats, and concessions affecting attendance decisions for consumers, if at all? And I know that you mentioned, of course, a pre-COVID environment for moviegoers, but I do feel like what I see is that pricing pressure and just the fact that it's so expensive is also part of that conversation now.
Right. There are so many elements. I think we look at premium screens. That's honestly going to be the most expensive option for going to see movies. The situation now is that's actually become the most high demand option for going to see a movie. We see those standard screens performing less and less relative to their pre-COVID standards. I think that speaks to how movies are being eventized, essentially creating an experience outside the home that can't be duplicated at home. And that's IMAX, that's Dolby Cinema, that's these premium screens like dine-ins. We're seeing more and more a shift there for the consumer choices. And at the same time, we are seeing a section of the audience that just won't come back. It has to be an acceptable reality at this point. A lot of it is part of the older audience. They're waiting to stream films at home. They know that the theatrical windows are not as long as they used to be. So all of this is just part of the new normal for the studios and for theaters.
I think that's such a good point too. There's that crowd that will never come back. I am not in that crowd. I still spend. I mean, I go to all the premium types of screenings because I think it's so important. Like IMAX, Dolby. I mean, it makes truly such a difference, and I'm sure you would agree having an expertise in this space. But as we do look ahead to the rest of this year, where do you still see some of the biggest upside opportunities for studios or just media as a broad reaching term?
Yeah, that's a great question. I think continued investment into premium formats. That's really where the future continues to go. I think reaching Generation Z, Gen Alpha, that's really important right now because we see franchises like Minecraft and Five Nights at Freddy's last year, among others, do really well with that crowd. And that's the future. That's the future of every industry. That's always been true of the movie industry. You have to keep bringing in the young people. You have to keep bringing in families. But you also want to stay true to the everyday movie fan. So that's just one of the continued ways I think theaters and studios are looking at what they can learn from the last few years, apply that to this year and the years going forward.
Yeah, and I like that take, and I like your optimism because I do think it's a lost art to be caring about obviously the movie theater experience, but just like that more traditional type of format, which I do believe is still so important. So appreciate it, Sean Robbins, founder and owner of Box Office Theory and the director of movie analytics at Fandango. Now ahead, we will discuss what the Middle East conflict means for IPO timing, why volatility matters more than the index levels, and how last year's weak tech IPOs are changing some investor behavior in real time. We've got the details for you coming up next.
High tick alert plus 800.
She's got your smile. Carl. Yeah, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. We have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
Schwab helps me generate retirement income. All this Schwab is everything you need is making me crazy.
Does somebody need a match?
Invest your way with Schwab.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Welcome back to Next Gen Investing. And despite the broad pullback we're seeing in markets, which actually, I mean, don't call it a comeback, we're seeing a really nice recovery, though, here intraday. There have been several emergent winners, like the move that we are seeing today in Palo Alto Networks, with shares up over 4%, following some positive sell-side activities. So joining me now for some more on the latest analyst commentary is Diane King-Hall, host of Morning Movers and Fast Market for the Schwab Network. So Diane, walk us through some of the optimism, and again, I think definitely aiding this move is
High tick alert plus 800.
here in real time.
Absolutely. And also, well, to your point about there being pockets of green, this is one of those spaces that we've been watching, the software spaces where there has been some nibbling after that tech wreck that we've watched throughout this year, particularly in the software space, the term they use, the SaaS apocalypse, where cybersecurity had been caught up in that one. So we've been looking at Palo Alto Networks, those shares.
S&P still climbing, looking good.
It is on the receiving end of a double upgrade. So not only is this analyst moving from bearish, they're shifting from not to neutral, but to bullish on this one. Arete upgrading it to a buy from a sell. Their price target is $185. So they see upside from here. Previously, their price target was $156. So they just didn't just get, mildly constructive here. They see runway from here. One of the things they said that shares are pricing in both integrate.
Are we at peak or not? Some of the arguments are it's just so big it's hard to get more money into it. Like, I get all of that. At the same time, though, I've never seen it. It certainly hasn't been this cheap, especially relative to the broader semiconductor industry, probably in a decade, maybe longer. And I mean, numbers are going up. I still think we're early on the AI ramp. I still think that worries about peak are overblown at these valuations. Yeah, I'd be an owner. Absolutely.
Can both of these things be true, that we're early on the AI ramp, which seems kind of obvious, but also
Microsoft, Nvidia taking off to the upside. There goes Meta, Google, Amazon. Apple turned the corner completely now, headed back up. Wow, what a nice reversal. Day 2, similar to yesterday, except later in the day.
The drivers of this, the compute, but you sort of look at this divergence between the two of them, and one of them presumably is wrong. It's unlikely, in my opinion, that what is getting priced in for memory or semicap or whatever can happen if the compute names, if the scenario that seems to be pricing the compute names actually happens. So I suspect that there is opportunity for normalization one way or the other as we go forward. And again, I'm a big fan of NVIDIA here.
Yeah, today that normalization seems to be resolving itself in favor of NVIDIA, in that direction. So we'll see. Stacey, thanks for now. Appreciate it.
Yeah, you bet.
Stacey Rasgown, Bernstein. Coming up, OpenAI and Anthropic turning the AI trade on its head. But is China about to flip the script on them?
Very nice. Very nice there.
Contract could give way to Chinese AI dominance next.
Very nice move. All the New York FANGs look much better. Apple's going to go green here shortly. Okay, Apple would be green shortly. Okay, New York FANG components. Okay, looking good. Looking good. Okay, S&P coming back off the high briefly. Apple's about to go green. Still down $2, but looking good. Meta doing well. Okay, FBL shares, bought those and added to them yesterday. Okay, I was questioning that entry. Okay, Reuters looks good. Netflix, CoreWeave. Okay, Chevron. I want to see that back up at the high. Chevron. Okay, nice reversal on Palantir. Palantir, nice reversal. Good job there. Palantir. Okay, Palantir looking pretty good. Nice reversal day for Palantir. Okay. Completely different look than it was this morning. It looked like we were going to just keep going lower. And of course, the markets start changing direction. New York FANGs were holding their own, except for Apple. That finally turned. Tesla finally turned. Looking pretty good. Looking pretty good. All right. So S&P 500. Okay, just off the highs. VWAP down here. VWAP. Watching that MACD.
Welcome back. The drama between the Pentagon and our AI companies is highlighting the broader risk for the U.S. that China's unified strategy in military AI will give it the ultimate edge. Deirdre Bosa has more in today's Tech Check. Deirdre?
Hey, Kelly. So the AI trade, it was built on a core assumption, American dominance, but that is falling apart just as geopolitics are picking up, and Wall Street is noticing. Investors have already been asking whether the trillions of dollars being poured into American AI infrastructure will pay off. Now, at this, the American AI labs supposed to justify that spending are fighting with the Pentagon, they're fighting with each other, and they're losing users to Chinese competitors in real time. The government, of course, not helping. Instead of building a coherent national AI strategy, the Pentagon is blacklisting American companies over safety guardrails while fast-tracking a deal that even the winner admits was rushed. Now, even worse, America's AI infighting over the last few days, it is accelerating this shift. When Claude crashed Monday after hitting #1 on the App Store, an executive at Chinese AI lab Jipu posted that traffic to their model was surging to absorb the users. Then DeepSeek saw its U.S. downloads jump 20% in a single day, according to Sensor Tower data. And of course, its next major model is expected next time to China's biggest political meetings of the year. You also had Emil Michael, Undersecretary of Defense, who was on our air this morning, essentially writing off Anthropic, one of America's top AI labs. The contrast, Kelly, with China's unified strategy, it could not be starker coming out of the events of the last few days.
Important reminder, Deirdre, as this goes on. Deirdre Bosa, thanks. In today's Tech Check. Coming up beyond the lows of the day, but our technician says stay on the sidelines for now at least. Those details next.
Hi Tickler plus 800.
MOBX.
SLS. MOBX. ALOY. MOBX. ASTS. SLS. EOSE. ASTS. SMCX. CCUP. MOBX. CCUP.
Welcome Welcome back. Stocks are paring their losses today. The Dow is only down 305 points right now. But my next guest says she doesn't see today's sell-off as a buying opportunity. Let's bring in Katie Stockton, Fairlead Strategies founder and managing partner and a CNBC contributor. Katie, it's good to see you. And I don't know if the market action has already kind of changed your view on that at all. Welcome.
Thank you. Today is really not a breakdown, but nor is it something that's generating short-term oversold conditions. The S&P 500 has been range-bound for several weeks now, and that range is still intact as long as support, which is right around 67.50, remains intact. We've upheld a neutral short-term bias. So that still stands, but of course we've seen momentum deteriorate over all different time frames, short-term, intermediate-term, and even long-term now. So we're somewhat concerned by that, and we don't think it's right to rush into the market, especially with the volatility pickup that we've seen. The VIX, which we of course track as a gauge of transactional sentiment, has broken out to the upside, and that's a contrarian negative for the S&P 500.
And while many have been talking about broadening or going small, you're actually saying the small cap action could be even worse.
When you look at the ratios of the small cap proxies like the Russell 2000 index to the S&P 500, they've done very well. The 200-day moving averages have turned to the upside, meaning that the phase of outperformance is likely a significant shift favoring small caps. However, the ratios got a little overextended based on our measures. The DeMark signals that we track flash sell signals recently to suggest that we'll see not only a pullback in absolute terms, but also relative terms, small caps versus large caps. And I think we saw inklings of that this morning when referencing the S&P. You would see that the oversized.
Okay, I ran a bunch of scans.
What about this sort of semis?
Ran a bunch of scans.
No one's making people choose sides.
Let's
But do you
see.
find it
At the moment,
the way that like Micron down 7% today, Broadcom, I think they have earnings coming up. What do you think?
I think it's really interesting. I mean, it's been the ultimate pair trade, right? To be long semis and short software. But finally, we're seeing signs of exhaustion that are more than just short-term in the ratios. If you take SMH as a proxy for semis and IGV as one for software, the ratio has a new sell signal to suggest that we'll see 9 weeks of counter trend performance.
it is March the 3rd. I'm your host, Cousin Benny, coming to you from theclosingprint.com. Market's nice reversal.
It's also a gap down, and the gap down to me looks somewhat of the breakaway nature, meaning that we should see immediate downside follow through, and that would then jeopardize Micron's 50-day moving average and put next support almost 15% below, which is simply a function of how far and fast Micron had rallied ahead of
Midday mover on NRG. Okay, big gap down, NRG. Okay. Netflix looks good. Netflix.
Yeah, we've expected crude oil prices to rally for some time. I think
Pinterest.
now with these gaps up and all the volatility out there.
Pinterest. Let's take a look at Pinterest. Pinterest, nice looking stock there. Pinterest looking good.
Signs of short-term exhaustion there, but we believe that these are major breakouts in the energy complex that we've seen. Natural gas is more of an oversold upturn and does look poised for short-term upside follow-through. And if you zoom out on nat gas, it does appear to have maybe a trading range or basing phase in place, but it's those short-term swings that traders seem to want to take advantage of with the volatility in nat gas. And this next swing we think will be to the upside.
Or maybe look to alternative sources like coal. My words, not yours. We don't have to get too in the nitty gritty here, but you can kind of follow people's line of thinking as they look to energy shortages and what usually steps up to fill the gap.
Pinterest looks good. Check your 60-minute 20 MA as well for your stops. This looks really nice. Pinterest. Okay, I'm probably going to take some Pinterest here. They do a good job. Management's been doing a good job. So I'd expect revenue to continue. Let's see what Pinterest looks like here. Pinterest, P-I-N-S. Pinterest. They're not growing as much as they were, but it does look good. Pinterest. technically speaking,
downside exhaustion, but
60-minute, 20 EMA.
no real major relief in terms of downside momentum from anything more than a very short-term perspective for Bitcoin. But gold, you would think, would be kicking in here as a safe haven asset class. It had inklings of that, but it had run up pretty nicely ahead of this news, and now we have a gap down and some downside today that would lead us to not want to chase the rally that we've seen in precious metals. There's some signs of exhaustion there that we think are meaningful and inform for more consolidation over the next few weeks, if not longer.
All right, I'm getting defensive after this. I'm going like a turtle, hide out in the software names. Who would have thought? No, Katie, thanks very much. Appreciate it today.
Of course.
And that's it for us here on The Exchange. I will join Brian Sullivan for Power Lunch right after this quick break. Look at these reversals.
Okay, looks good. Pinterest looking good. All right, let me get rid of that. Pinterest. Looking at Pinterest. Pinterest. Yeah, that looks good, Pinterest.
CRCA.
Elliott Management investing $1 billion in Pinterest. Okay, that looks good. Pinterest. Elliott Management. Okay, I'm going to buy some Pinterest. I just need to mark this up and send it into the trading room. Okay. All right, let me go ahead and buy some Pinterest here. Pinterest. When is their earnings again? Earnings are May 14th. All right, let me go out to May then. Let me go out to May, April, May. Okay, let's see, May. Let's go to a 40 deltas are 360. What? I'm in the wrong. There you go. I was looking at GE. Sorry about that. Pinterest, May. These are fairly inexpensive. Maybe just go straight calls. The 20 call. Yeah, that looks good. About 3,200 in open interest. Buy. Okay, I'm going to low bid this. Low bid this at $2, $1.99. Pinterest, I bought the 20 strike for May. $1.99 filled. Okay, looks good. Looks good. All right, so let's see if we can't get a follow through. Palantir still rising, looking good.
It's a wild day for investors and the global markets. Oil, gas, nat gas, even food moving higher, but we are seeing a reversal in stocks. We'll tell you more on why in moments. Dow is down, but at one point it was down 1,200 points earlier. Big tech getting
Pinterest.
as well. Energy prices, they're higher, as really maybe the only thing that may matter to global markets and the economy is when ships can safely steam through the Strait of Hormuz. We have some breaking news in the last minute or two on that topic, and it is sending buyers back into the market.
Quickly keep an eye on Treasury yields as well as the Iran conflict enters its fourth day. The 10-year popping above 4.1 briefly. Traders are grappling with the idea that inflation could heat up again. We've got an all-star lineup of experts on deck to help you make sense of everything today, from policy fallout to corners of the market where you might be able to make some money right now.
All right, certainly there is a lot going on, Kelly, obviously, and this breaking news from Politico, we're going to get to the reporter in moments, that maybe the U.S. is considering military aid to help ships get through the Strait of Hormuz, something we've talked about. I think that's the only thing that may matter to stocks, and that's what we are well off our low.
Big reversal. We were down almost 1,300 points earlier on, down 335 in the Dow right now. There's the intraday chart, well off the low of down 1277. Traders are beginning to worry the U.S.-Iran conflict could drag on longer than anticipated. Here to discuss amid all this uncertainty, Ali McCartney is Managing Director at UBS Private Wealth Management. Steve Sosnick is Chief Strategist at Interactive Brokers. It's great to have you both here. Ali, kick things off for us. We were just talking about, look, there might be a little bit later liquidity this week. I mean, there are a lot of conferences going on, to your point, and the VIX is popping, but a lot of other things, like Katie Stockton, are showing signs of breaking down. Well, those that had been so strong this year. So that's the backdrop now for the events of the day.
Yeah, exactly. So first of all, we saw really muted
Exactly.
volatility on an index level relative to what's been happening underneath the hood. We've been talking a lot about that, the broadening theme, how much dispersion there is under the hood. And now we're starting to see it on an index level. And if you talk about all the themes that we came into this with, although the last 2 days has been really myopically and should be focused on the conflict in Iran, there's a lot of leverage in the system. And so that's also going to increase the volatility that we're seeing. But at the end of the day, from a technical perspective and from a fundamental perspective, I haven't heard anybody talk about, we're expecting 12% earnings growth this year. We got some earnings this morning from a company that talked about both situationally and idiosyncratically and structurally how much
Target or
I'm not allowed to say some stuff.
Oh, thank you. It has a logo that is a red bullseye. Yes, following. But in other words, that to you was a data point that in the earnings is a data point that fundamentally things are still okay. It's just that
fundamentally,
but this oil price shock could be real. I mean,
the oil price shock could be real, and that's why I think, to Brian's point, the conversation really is the tenor, and that's the $1 million question that nobody can answer. And so we have a year-end price target of 67 on oil. If that is where we end up, and if this is both short-lived and supported by our government in some fashion, and mind you, we live in a country that has had years of oil independence as opposed to the last time we were in a similar situation, then I think we'll get back to fundamentals really quick.
Steve and Ali, I know you guys were getting on set. There's some news out of Politico that's moving markets, and I'm not going to say that we're going to end the day higher, but we are well off our lows. The Dow's only down 350 points right now, almost turning into an average day in the market. Politico, Steve, moments ago saying U.S. considering military support for Middle East oil and gas supplies, sourcing 2 people close to the administration. The story just out. One of the Politico reporters will join us in moments to get more on this story clearly happening.
All the New York FANGs are up now.
I have argued
Apple finally joined the party.
through that region, that choke point is going to be what moves the markets. To Ali's point, earnings growth is good. The economy is good. This is the risk. I'm kind of putting you on the spot here, Steve. What's your take on that story, but also the relative importance of getting that choke point moving again?
Well, Brian, that is the key element. I mean, that's really what should be the concern here, and that's what differentiates this event from some of the other geopolitical events that the stock market was able to shrug off pretty well because Venezuela, they weren't really part of the global oil discussion anyway to a large extent. Iran and the Strait of Hormuz and cutting off, let's say, LNG from Qatar, things of that nature. That is crucial, and that is why you saw bonds not have a flight to safety bid yesterday, but have a sell-off, is because of those inflation fears. So if you can keep the straits open, that reduces global inflation. Otherwise, you get into a situation where we have to worry about the grinding of the gears in the global economy from very strict, very difficult energy supplies moving through a crucial choke point.
Yeah, I think the relative importance, Ali, right now, because nothing has changed today for technology, for earnings, for the U.S. consumer, minus slightly higher gas prices, gasoline, than was the case 1 week ago. This war, this Strait of Hormuz issue, sending oil and energy prices, natural gas, fertilizer, food prices, all higher. We somehow figured that out. Do we go back to where we were before and start talking about NVIDIA earnings, or will this still be on our mind?
I think this will still be on our mind, and this will still be on our mind because it's proven sort of some of the tenuousness and some of the linkages that currently exist between the oil market and some of the economic decisions. For example, one of the things that has been concerning markets, in addition to disruption of AI in other areas and CapEx spending, is how are we going to fuel from an energy perspective all of the data centers, et cetera, that we need as our future power. So as we have that come up and it's being looked at now, I think that will still be there. But again, I think that we have a lot of narratives that we've sort of given a break, right? We saw software pop yesterday, whether that was sort of a technical covering of shorts.
It's outperforming today too.
So I think that we are focusing. We are myopic today, and we should be myopic today. But as this administration has proved, whether we go back to last month and Greenland and Davos, or whether we go back to
we're back to Greenland.
or whether we go back a year to Liberation Day, we focus on politics when
Palantir at the high, starting to fade a bit.
can make meaningful changes. We usually walk back, we usually negotiate, and then we usually go back to the fundamentals. And so that's why for me and for UBS, this can be a very interesting buying opportunity, given that we see 12% upside from where we ended yesterday.
We were talking a moment ago about Broadcom earnings and to what extent is that the real tell right now? But I'll tell you what I think will matter is what else we hear from the private credit funds. As we start to get more of those filings this week, whatever the redemptions are, however much they're able to meet them, if we can kind of make this a 1 week story instead of a story that continues to build where retail investors panic and go, wait a minute, I want to get my money out, that then has knock-on effects to the broader financials and markets.
Yeah, I think that's true. I think there are a lot of overhangs to the market out there that don't have a quick fix that people are looking for. And certainly that's from an individual perspective. There's going to need to be another season of earnings. There's going to need to be some commentary about what we're actually seeing in software, for example, in terms of earnings going forward. Should it be 30% off in terms of terminal value? Private credit, certainly another place where we just need more information. So an emotional response either to what we're experiencing now today or to a lot of these issues, I think is short-sighted.
The S&P, Steve, has come back a bit. It's down 0.9%, now down only 0.4% on the year. Small caps and mid caps, by the way, are up 7% this year. We don't know where this is going to go, the war in Iran. We don't know where any of this is going to end up. But there are buyers, I would imagine, in this market who have wanted to see prices come down a bit. It is outside of this. It's a midterm election year, which means that we tend to fall almost 20% at one point on average. Where are your clients and customers coming in and buying right now?
Oh, Brian, we saw customers buying late last week into those.
Netflix trying to push a bit higher. All the New York banks are seeing a little bit of profit taking right here as the S&P falters a little bit at this level.
Up with the Straits of Hormuz close on their bingo card. Nvidia has been
Woo! Didn't catch that one.
By far the most active name and the most heavily bought name in trading through yesterday. So that's pretty much a post-earnings event. But in general, what we're seeing here is the buy the dip mentality remains very strong. We saw it yesterday. It's also very technically driven. The buyers came in right around the 100-day moving average yesterday, and the buying ended pretty much right at the 50-day moving average. I'm speaking S&P terms. We also never saw VIX really get into backwardation, which is where you have short-end futures trading above long-end futures. That's a sign that there's a shortage of available volatility protection. We haven't gotten there. Today, we broke below the 100-day moving average pretty convincingly, but we stopped right at the lows of late December, 67.15-ish. And now the highs, at least so far, have been the 100-day moving average. And also, we've been in a pattern where we're seeing lower highs, lower lows on a short-term basis, but it can indicate a bit of a change in trend. And as I know we've spoken about before, volatility does tend to increase around turning points. And so this all part and parcel of the same feature. One of the things that drove VIX today was a very high correlation. Speaking to Allie's point about dispersion, we saw a lot of that, and that has kept the lid on index volatility. In the last couple of days, we've seen a lot of correlation with stocks moving together, where at one point we were 10-1 decliners to advances, although that has eased. So it's very technically driven. But again, people just are conditioned. If they see a viable dip, they buy it. And if it starts to bounce, they chase it to some extent.
That said, it's such a counter trend day. Everything that has been working so far this year is down, and the Mag 7 is up. And I just wonder if people are going to stay there, hide out there, whatever, if they're going to have a little bit of a second life here, even just for a little period of time.
You know, one of my rubrics about geopolitics, and you and I have discussed.
Apple making new highs now. Apple making new highs.
That's the worst of geopolitics.
Apple pushing back above VWAP.
What is this going to do for Microsoft? Because they have such earnings power, they're in every part of the world. You know, is this going to affect them negatively? And you know, to a certain extent, what's going on if if missiles are being fired in various places, it doesn't do much to Microsoft. If there's a global inflationary spike or an economic pullback as a result of a global inflationary spike, yeah, that does affect Microsoft and the other Mag 7s. Yeah. But I do think over time, this has evolved to be the equities version of a flight to safety trade is going into these tried and true names with great earnings power. We can go into whether these remain the best places to be, but from a behavioral point of view, that's why we see some relative outperformance in these places.
Now, evaluation reset, Alex. We got to go, but it's Microsoft is the new goal. That's my takeaway from the market action today. Allie McCartney, UBS Wealth Management, Steve Sosnick, Interactive Brokers. Really appreciate you both here to kick off the hour.
All right, so stocks, they've come well off their lows, but they are still down. S&P down just under 1%. But the irony is, as stocks fall, bonds are also down.
Still off 60 handles. S&P still off 60 handles.
Joining us now from Chicago, Rick.
Are they going to keep buying here? S&P. Apple looks good. A little doji under the 50-day. It needs to get above that.
Well, you know,
Apple popping a bit more now.
Look at a 24-hour chart of Tues, and everybody's talking about how we hit 359 about 6:30 in the morning, this 4-hour time zone, and the high yield close of the year is 361. But really, the story here is how narrow of a closing range the 2-year is at, and how it's still so calm. You know what the entire range for the year for a 2-year is? Okay, it's 361 on top, 338 on the bottom, 23 basis points divided by 2. The midpoint is exactly where we're trading. 349.5 is the midpoint. The real story is that treasuries have been compressed. The 10-year is a 35.
Apple pushing a bit higher
on a closing basis for all of 26. And if you look at how the 2 years trading against the dollar or how the 2 years trading against oil, you see the very high correlations. It's a very strange time that we don't see more of a edge in the treasury complex with the volatility in the equities. And the only conclusion I can draw is that we should be buying equities because this isn't going to last. I think the treasury market is pretty smart about that.
Wait, Rick, you should be buying equities because the conflict isn't going to last and the treasury market is seeing past that? Is that what you're saying?
Yeah, I just don't see, you know, if things were so bad in the equity markets at their worst levels was something we're going to see ongoing, then a 2-year note should be at 350, okay, or the 10-year should be at 350 instead of 405, but we're not seeing that. We're not seeing a big flight to safety for a reason, because I don't think investors really believe that they need it.
Yeah, or to quote Steve Sosnick a moment ago, equity markets are the worst at geopolitics.
I couldn't agree more with Steve on that comment. Totally agree.
All right, 10 years telling us maybe not all clear, but we'll see. After the break, oil and gas prices are higher for a second day, but new reporting indicates the U.S. is considering military protection for oil and gas tankers traversing the Strait of Hormuz. We will talk to that reporter next.
FSLY.
TURB.
TURB.
Markets continue to move higher.
TURB.
Of scenarios where, hey, after a week or two, maybe everything goes back to normal, and Iran is contained at this point, and there's less uncertainty in the Middle East. I think that's the big concern. The asset classes are still moving. Like this is a fluid type of situation where there's going to be no resolution probably over the next few weeks at least at this point. So you got to take that into context. Yes, all the stocks are more than 1% off of their session lows. I mean, the S&P 500 was down 2.5% at its lows, now down less than 1%. So, yeah, it's good price action to see that capital is willing to get back into the equity markets and risk on assets. But at the same time, you've got to have that degree of maybe being a little bit more cautious that uncertainty, volatility will probably remain in the near term. But we're supposed to hear some more commentary on energy markets tomorrow out of the administration. That might appease some of the fears that are out there. But yeah, just you've got to take it with a grain of salt because volatility is here, at least in the near term.
Yeah, and of course, I think private credit is still something that's looming. It's something we were talking about a few weeks ago, last week. Now this week, we've had a Blackstone story. Obviously, the Blue Owl story. And that's something that just brings questions to this market as well. The liquidity, is it drying up? Blue Owl closed, shutting down one of the funds, not able, folks can't do their redemptions if they'd like to. I think that brings a little nervousness in this market. So David Shazevsky was talking about that. Let's talk about.
Okay, starting to head up a bit more. There goes Apple. Apple recovering. A close above the 50-day will be awesome. David, we're looking for a close above the 50-day. Here goes the futures on the move again.
Out of this name, I mean, it's still only about 9% off all-time highs that we hit just last week, up over 104% over the last 12 months. So it's had a great run, right? But at the same time, maybe it should be because it is
Netflix, looking for that to break higher right now. Netflix. NVIDIA just kind of sitting here waiting for that to go. NIMO hit minus 40 and change. It's at minus 29, so it's starting to reverse a bit. NIMO. Air environment, we're looking for that to pop as well.
Taiwan Semi to manufacture those chips. So everything's been going well.
Love when I hear people say Taiwan Semi. Do you say semi or semi? What do you say? I say semiconductor, not semiconductors. Do you say semiconductors? It just sounds weird. Maybe I'm just weird. Semiconductors, right? Taiwan Semiconductor, not Taiwan Semiconductor. That's hard to say. Anyway, who cares? Netflix is trying to push here, watching Netflix. Okay, Apple is definitely on the move. Apple's going to close above the 50-day, it looks like. We got an ABCD pattern on Netflix. That's pretty obvious. It should be obvious to you. Here's A right here. Okay, here's B. Whoops. Here's B. Oh, got a higher low. Here's C. And looking for D. Okay, so why does that matter, Vinny? Okay, so we're always looking for this pattern. If you're a new member, always looking for this pattern, ABCD pattern. It happens very often. So if you can catch it, if you happen to tune in and you see it, pretty good odds that the trade's going to work for you. Okay, this is Netflix ABCD pattern. Let's go see Netflix on the 60-minute time frame. Next, Netflix on the 60-minute. We know that We're well above the 60-minute 20 MA. Trailing stop is the low of the day or that 20 MA once you get close to it, right? For now, the stop 95. You could even put it on the last hourly candle around 96. See if this follows through. 100 is our short-term target. JP Morgan has a target of 120 short-term on this one. Overweight. Apple's going. Apple on the 60-minute, we need to see it above the 20 EMA. Trying to make higher lows, need to get above the 20 EMA 60-minute. Microsoft, same thing. It's finally above the 20 EMA 60-minute time frame. Use your 20 EMA for your trailing stop. Once it starts to pull away from it, you want to keep an eye on those hourly candles, right? Or 30-minute or 15-minute candles, whatever you use. Short-term entries, exits. Okay, Apple is going here. Apple, well, we just said that needs to get above the 20 EMA. Netflix, we just talked about. Broadcom, AVGO. No. Snowflake. Okay, trying to do something. NVIDIA, trying to do something. Netflix, we just talked about. Amazon trying to turn the corner. Meta, trying to turn the corner. Google, these are all turning the corner here. But Apple looking good here. Apple, a little bit more on Apple. S&P 500, big range. What's the top of the list? Workday, top of the list on the NASDAQ 100. Workday. Okay, this is good. Workday. There's your 20 MA 60-minute. You can take it for a ride now. I just started a trade on Pinterest. I bought the May 20 on Pinterest. Look at Pinterest. PINS. Just turned the corner. Okay, so stop underneath. I would say 2 hours from now. Previous, so like 1850 or so. If it drops down there, I'll be out of Pinterest. But this looks pretty good. Pinterest. Elliott Management taking a position in Pinterest. Okay. $1 billion investment. Looking good. Okay, I got to grab a bottle of water. I'll be right back.
Going beyond running shoes and giving it a go. It's just a tough business too, and a tough environment. Let's talk about American Airlines. Yesterday we were saying how as oil was heating up, right? That's not great for trucker, shippers, airlines, or anything in transports. And then also, they're having to reroute, and that costs things. And the last earnings report from one of the airlines wasn't particularly great. So let's hear a little bit about American Airlines.
Yeah, the stock's actually relatively flat now, and it was down over 3.5–4% earlier on in the session after sliding pretty significantly yesterday. The Middle East conflict rattling global aviation, that sector in general, causing a lot of headwinds for the stock. You look at the industry as a whole. There's been a lot of cancellations. There's been rerouting. There's been closures of specific airports. Now, those are mostly overseas based, but it still impacts negatively the domestic carriers like American, who have a lot of international flights also. And then you start taking a look at what crude oil's done, so far this year and so far this week. We're only up about 4% in crude oil. But at the same time, this is really going to hit their margins moving forward. Those are razor thin margins. And when you get decreases in fuel prices, jet fuel prices, it really helps them immediately. While you're seeing the opposite play out right now, where crude oil prices are spiking on this uncertainty in the Middle East, and that's going to negatively impact a lot of these airlines moving forward. Not only the flight disruptions, but also those jet fuel prices. But we did see some bearish activity in here also, maybe setting up for some more weakness in America. And this is out in the April monthly options. So about 45 days to expiration. The trader bought 60,000 of the April 10 strike puts. Paid an average debit of only about 30 cents on these. Really inexpensive. This is a cheap stock. So the breaking where this trader starts to profit is below $9.70 over the next month and a half. That's only that's about 22% below the current share price. So on a dollar basis, it doesn't look like a lot, but on a percentage basis, it is a lot. Put volume about 3 times normal daily average volume today, but it's made a nice recovery today. But I think this trader is either setting up, speculating that we might see some more downside for American, or maybe hedging a long stock position with some inexpensive out of the money put options.
All right, I'm looking at the Jets ETF, which is also down today and on a downtrend. Tom White, thank you so much. Always great to see you. Really appreciate it, Tom. Coming up, we'll discuss crypto, the reactions to the fighting that we've been seeing in the Middle East, and how Bitcoin and other tokens can react if there is a prolonged conflict. One of our guests today liked Ethereum, for example. He liked XRP. Let's find out what our next guest says. We'll be right back. Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live.
All right. A little Dr. Pepper to switch it up. S&P, Netflix, ABCD pattern on Netflix. Looking for it to break higher. S&P, just kind of in this range up at the high. Apple. Apple consolidating at the highs. Bollinger Band starting to come together.
Trading at Schwab is powered by traders to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Nicole Petalini, and we're live on the floor of the New York Stock Exchange. Stocks are up off the lows of the day, and we have a few more movers for you right now to check out, including Target, which is higher, 7% higher after posting an earnings beat and issuing strong full-year guidance. Fourth quarter comp sales fell 2.5%. But looking ahead, the retailer expects comp sales growth of 2% in 2026. And then there's MongoDB, which has been down, and it's down 20%-ish after issuing soft first quarter earnings guidance. The company expects adjusted EPS to come in between $1.15 and $1.19, which is below the consensus estimate.
Watching Apple at the high. The New York Fangs look like people are participating on the reversal. Apple's still got an inside day. We need to get above the 50-day by the close. It'd be nice. Close above the 50 days would be good for Apple. Bitcoin grinding a bit higher in the top of yesterday's range, upper half of yesterday's range.
Particularly as we have a war in the Middle East. Your thoughts, Mike?
Yeah, thank you, Nicole. I think it's always a good sign to buy a scarce digital asset. So from our standpoint, long-term positioning, these are buying opportunities. Bitcoin and a lot of the top 10 cryptos are off anywhere from 40% to 60% from their highs. And definitely buying opportunity. I think technicals point to a further dip, but the fundamentals continue to strengthen, so we like it here.
So I think about something like Ethereum. Tell me about that.
Yeah, Ethereum is one of the largest platforms, protocols for decentralized financial applications. So it distinguished itself as one of the top 5 crypto companies in the market. So we like it because it along with Bitcoin, it has a name presence. Solana's more focused on ICOs. XRP is more focused on replacing the SWIFT banking wiring system. And so they all have the crypto top 10, which we focus in on, all have their little niches on how they play a role in the decentralized financial superstructure we see us transitioning over to. So again, Ethereum is off hard from its highs, and we think it's a buying opportunity.
So tell me about Ethereum and the blockchain. I mean, not every AI company is going to survive, but this is how communication happens. So it's sort of like you're sure to get the winners because they'll be the ones using the blockchain, right?
Yeah, so you want to go with the protocols that
All
are
right, starting to fade a bit. Apple off the high of the day. Futures continue to fall off a bit. Still not a bad day so far. Still down quite a bit. 60 handles plus. Netflix pulling back to the high.
So Ethereum benefited from that, and they're the most widely known and adopted cryptocurrency other than Bitcoin in the market. And because Bitcoin's already run up to 100,000, a lot of people, their position is, hey, look, I'd much rather buy a crypto that's a couple $1,000s and try to get the run up. And I think that's another draw to Ethereum. But Ethereum has the largest number of followers, and it's the most established outside of Bitcoin. So that's the draw there.
I hear a lot of portfolio managers and the big banks and all that say have some crypto, have some Bitcoin or Ethereum or whatever, but don't make it more than a couple of percent of your portfolio. Does that sound right to you?
Yeah, I think Bank of America recently came out with guidance of 1 to 4% in their client portfolios. I think you're going to see that as a trend on Wall Street. That's the further strengthening of the fundamentals of these scarce digital assets that are brand new to the market, really brand new to Wall Street. Been around for over a decade outside of Wall Street. But I think that the technicals are still showing that we could see Bitcoin dip down into the 50s or below 50, I should say. But the fundamentals continue to strengthen as these institutions adopt these 1 to 5% allocations. And really, we see on a weekly basis announcements made by these different institutions that Bitcoin is now available and crypto is now a part of the asset allocation. So 1 to 3%, very normal. 4 to 5%, a little on the aggressive side.
I want to hear a little more about the
All right, descending pattern on the S&P for now. Descending pattern on the 1 minute chart. Okay, so we keep descending a little bit at a time off the high. Okay. MACD, watching MACD, still drifting lower. VWAP is down there at the bottom. Here's VWAP. We're above standard deviation 1, so we hit standard deviation 2 and got rejected. Looking for a follow through tomorrow. Okay, looking good. All right, we got almost a hammer. We got more like a long-legged doji now. Doji, long-legged doji. We'll just keep it. Hopefully, we'll close on a hammer. Okay. Okay, let's see what we close on. Apple, S&P. Let's go back to Apple. Apple turning back up. Oh, that was not expected. There goes Apple. Boom. David, there goes Apple. Boom, boom, boom. There it goes.
crypto. So in our world, we think the S&P 500 should dominate client portfolios. It's very difficult to beat. There's a reason Warren Buffett's $1 million standing bet. He's never lost over a 10-year period. And so we think...
Boom! Look at Apple go. Holy crap, what's going on with Apple? Boom. That was a nice little pop there. There go the futures. Futures popping.
To moderate to conservative sides, anywhere from 5% to 25% crypto.
Oh, that was nice. That was a nice little spike there. Okay, so much for that little descending pattern on the S&P. It's still contained, right? Nope, it just broke above it. Okay, cool. All right, this is a fun day. It's a fun day. Watch that MACD, VWAP, volume spiking there. Is there some news? Is there any news? Okay, we're above 6,800. Can we get back to 6,900? That'd be kind of cool. All right.
Definitely have a problem with that, and I think we're seeing that lobby right now in Congress. So stablecoins, though, in general.
Okay, what's going on here? What's going on, Alfie? IBM, big move off of IBM. IBM was down lately. IBM. Okay, IBM looks good. IBM, good for entry. Is Frank around? Doc, are you around? Okay, so IBM turning the corner here. Look at IBM. This looks good. It's up off the low. IBM reversal potentially underway. Okay, that looks good. U.S. Navy to begin escorting tankers. Okay. Okay. As Eddie Murphy would say. Okay. The thing is, they got so many. They got so many assets in the area. Anytime you fire a missile, you're toast. You might as well just kiss your ass goodbye because, there's just too much going on over there in the Mediterranean and in the straits there. This thing's going to be over with pretty soon. Being ex-Navy, I have to tell you, to see the changes in technology as I was exiting, sonar was changing so much, sonar. And just to see the Combat Information Center, I'd love to see what's going on in there with all the electronics and the radar changes and just the missile systems they have. The new Navy is just, forget about it. And the Air Force, every branch with some advance. I'm not trying to be a warmonger. I'm just saying, I was thinking about this last night, how much technology has changed. The computers they're using now compared to when I left, it's like, oh my gosh. Here goes the S&P. S&P turning back up. This news is only getting more bullish for the markets as more news comes out, as more decisions are made to protect commerce, to protect the maritime shippers, to protect all these different entities. The more news we get that's positive in that respect, the more the markets are going to like it, I would imagine. Futures continue to pop higher here.
Came today during opening statements in a civil antitrust trial, hoping to break up the company's alleged monopoly. The defense rejected claims and said the companies face fierce competition in the industry. Two top aides to Labor Secretary Lori Chavez-Derrimer were reportedly forced out amid an internal watchdog investigation into alleged misconduct. According to the New York Times, they were given 24 hours to resign after the White House said to fire them.
The New York Post previously reported that the aides were placed on administrative leave following a whistleblower complaint accusing the Secretary of travel fraud and an inappropriate relationship with a subordinate. The Trump administration was barred today from its attempts to end New York City's congestion pricing program. A federal judge ruled that Transportation Secretary Sean Duffy does not have the authority to revoke federal
First class, Corey. That's like a Army. Let's see, first class. That's E6, E6, Army. That would be a staff sergeant. Staff sergeant.
Insurance and guarantees for the security of all maritime trade passing through the Gulf, especially for energy. He said that it's available for all shipping lanes and that if necessary, the U.S. Navy will begin escorting tankers through the strait. He said ultimately, no matter what, the United States will ensure the, quote, free flow of energy to the world. Of course, Brian, a lot of people watching this right now, and the president was scheduled to meet with Secretaries Wright and Bessent today. We don't have a readout from that or if it happened, but this coming just now that they will be providing insurance guarantees. Guys?
Pippa, thank you. We're showing WTI crude, which is almost about to go lower on this. Think about how insane this is. Brian's like, don't get out of yourself. Look, it's up 1 or 2%. We are way off the highs of the morning. And so two things are happening here. Jump in, Brian. Two things are happening here. Number one, the president in this Truth Social post is saying, if necessary, the Navy will begin escorting tankers through the Strait of Hormuz as soon as possible. Number two, and this is exactly what we were talking about top of the hour, he's ordered the U.S. Development Finance Corp to provide political risk insurance and guarantees for the financial security of all maritime trade, especially energy.
And we've said this, and I said this a little bit yesterday. I've been hinting around about it, talking to insurance executives, shipping executives, oil executives, people in the administration. We kind of hinted around about it yesterday that the insurance issue, Iran is not, quote, closing the Strait of Hormuz. It's not a canal. It's not a gate. Doesn't have a lock. What Iran can do is make it so expensive and risky that no ship is willing to go through there because the insurance canceled their war risk premiums. I've been talking to insurance executives the last 2 days, and I can say right now, as I've kind of hinted around, we'll say it directly, that there has to be a solution on the insurance side. One of that might be the government backstopping insurance, and it appears that's exactly what may be happening right now. And it is possible, Kelly, that crude oil goes negative today and the stock market goes higher by the end of the session.
Dow's down about 245 points, only 0.5% right now. But can you illustrate the economical difference of what you're talking about? I mean, to get a ship through, which some people were trying to do the last couple of days, could cost, what, $500,000 compared with 10, 15 grand?
No, it's $423,000 a day.
A day.
Exactly. A day for a VLCC, very large crude. Put that in perspective. It was $15,000 a day in peacetime. 15,000, now $423,000 a day to take a crude oil tanker in that region. There's no cost to go through the Strait of Hormuz because there's no insurance. You've got to cover the insurance issue. Iran can threaten and make threats and raise costs and risk. But let's be clear, Iran has no power to close it other than simply saying, if you go through it, we're going to lob a missile at you or try to mine it like they did in the 1980s. Solve the insurance problem.
Okay, we're headed higher now. All right, the markets are definitely heading higher.
The market is smart enough to know they will
They like the new
plus 800.
high tech.
He's saying he's ordered the Development Finance Corp to provide, quote, at a very reasonable
High tech alert.
I'd love to know the precedent for a move like this. Political risk insurance and guarantees. So the onus is still on these organizations to step up and figure out how exactly to do so. The quicker they can, of course, the quicker we can potentially.
Let's guys, we're going to produce. I'm sorry to try to jump in. They call producer from the chair. I've been highlighting this a little bit more. Lloyd's of London, they've got really the decision-making power here. They have boards that are comprised of a bunch of different insurance companies. You got brokers like Aon and Marsh, who are the ones out there trying to find insurance. Right now, there is no insurance because they canceled that war risk premium. You know when you book a flight and it'll say, like, would you like to insure this trip or hotel? That's effectively what's being done at a spectacularly high level with ships, but they canceled that. So no ship owner is willing to risk the life and hopefully the lives of the humans are a lot more important than the material goods, but there is a profit motive here for people too.
All right, the S&P. All right. The Bears only have a chance. Bears have a chance for a couple hours a day. Crazy market. Crazy market. Okay, it looks good. Hey, good to see you, Frank. Back. Okay, good to hear. Prayers with you, Frank. Prayers and thoughts your way, buddy. Okay, NVIDIA back up to the high. That's crazy. That's almost 10%. Oil dropping off. Okay. Okay. Getting DMs from my buddy over at UBS. He's still at UBS. Okay. CoreWeave. Robinhood coming off the low. Robinhood still basing. Robinhood. Microsoft. Such a good day for Microsoft. Man, I'm very happy. This is finally starting to show some interest. Institutions showing interest. Baran. Okay, Pinterest. A lot of these stocks looking good. Netflix, nice turn. Still hanging out at the highs. Netflix. NVIDIA needs to get back above that 20 EMA. S&P, spiders, range bound, but big reversal today.
Still down right now, but the Dow is only down about 250 points. In some ways, a spectacularly average day.
40 handles to go to get back to green. Can we do it? We got plenty of time. Hour and 10 minutes. Actually, I thought there was more time, but
Try to establish some mechanism to backstop insurers who would then insure the ships to go through the Strait of Hormuz. Moving from one S ships to another, semiconductors. Let's talk about semiconductors. The chip stocks, Micron and others. Christina Partsenevelis, I don't want to steal your thunder. You're here to tell us what's going on with the semiconductor stocks.
Yeah, you mentioned those names, Micron, Sandisk. Those are the same ones that were the market's biggest winners this year. But Sandisk, Micron, Western Digital, we're all up roughly, 40% through Friday's close. Sandisk has literally more than doubled up until today, and now they're among the biggest drags on the S&P 500. Broadly, every single name in the SMH, which is a chips ETF, is in the red today, except Synopsys. NVIDIA's off about 1%. The Middle East conflict doesn't necessarily directly hit chips, but it could actually ripple through. Defense spending could pick up, which is good for chip makers with heavy aerospace and defense exposure. Think Analog Devices, Texas Instruments, Microchip. On the industrial side, we could expect companies to start building inventory buffers. That's a tailwind for STM and Infineon. And there are some reports out of the Economic Daily News, which is an Asian outlet, that Israeli
okay,
foundries are
Snowflake. These all look pretty good. If we could just hold on to these gains. I wouldn't want to be short. I wouldn't want to be short. I guess some people will probably get short up here. But I wouldn't want to be short because all it takes is a little bit more news like we just got, the U.S. Navy escorting ships through the Straits of Hormuz. Anybody firing a missile? I forget the name of the plane with the big dome on top.
All right, Christina, thank you very much. By the way, folks, if you're just joining us, there's a lot going on right now. Stocks are down.
What is that? That AWAC E3 Century, Boeing E3 Century, AWAC. They're flying around. They just see anything leave the ground, pinpoint it. Next thing you know, it's gone. Of course, I gotta believe fanatics aren't the brightest people in the world, you know. So they believe they're going to heaven.
Right now, we have been saying for a couple days that ships going through that little 20-mile strait that we
Still,
talk about every decade or
put the
so,
sane ones
may
left.
be the key to the entire stock market.
You know, just eliminate more and more of that threat.
In the short term, you're absolutely right, Brian. And I think it's wonderful how you said there's 10 guys sitting
Okay.
around London. It's probably some
Surely you
And they're
digress.
Lloyd's of London, and they're deciding which ships to insure and which ships not to insure. So what the president is doing, he's saying, look, I'm going to make it easy for those guys to make that decision. I'm going to guarantee it, or he's going to just do it himself. He's going to insure it. And the U.S. Navy, if necessary, will escort the ship. So we have a lot of tools at our disposal to solve the Strait of Hormuz problem.
Mm-hmm.
I'm, and evidently we did this.
Yeah, we got tools that no one even knows about except if you got the clearance for it, if you're in the military.
Chris, how much this might ultimately cost taxpayers, but it reminds me a little bit of like the Fed with muni bonds, or to some extent the government with Fannie Freddie. Once the guarantee is there,
Okay, S&P coming back in now off of that news.
and in a best case scenario, it doesn't really have to go to that backstop.
I wouldn't be shocked if we made money on the deal, Kelly, in the sense that we'll collect hundreds of thousands or low millions of dollars, and there won't be an incident because we're also going to send the Navy and have air power there. So my guess is that oil prices will slowly come down, and that we'll keep chugging through.
Yeah, the Terrorism Risk Insurance Act has cost taxpayers $0.
Right.
Because again, once the backstop is there. So okay, so
Palantir, a nice move on Palantir's part.
In the meantime, this large question about what to do with energy was the best performing sector into the year, but now it's looking at it's so ironic, right? The very moment that oil's breaking out.
Yeah, I see it. I see it, Corey.
Gains in the energy space. So
Yeah, we just tagged it.
I think in this case are kind of right. I think that historically,
What I'm looking at is a big range.
On the incident instead of beforehand.
Okay, let me just zoom out a little bit.
And I think that's probably especially going to be true in this case.
Okay.
I think if you look through,
So if you just look at the range.
Last weeks, not months, there's a decent chance that energy prices are going to be considerably lower now in 2 months.
Okay, so we basically got a range here. Right down here. Okay, that's the high of the range, low of the range, mid part of the range. Okay, so that's what it looks like right now. We're coming up off the lower half of the range, back up to the midpoint of the range. Can we get back up to the highs? We'll see. Not expecting it, but a lot of stocks are on the move, so this looks good. A lot of stocks on the move. Breadth needs to improve, obviously. Okay, so big hammer on the daily. We were off more than 4%. We were off 4% on the day at the low, reversing back up.
You should buy shares of publicly traded marine insurance companies, Chris. I'm not kidding, and I'm not sure who they are. I'm not going to recommend stocks on the air. It's not my job, but I will say they're going to print money, and because they're already raising their insurance rates anyway, and they're probably going to the backstop now of the United States government. So they might get backstopped for any losses as well. This is truly a remarkable development if, and there's a big if.
Chubb, Tokyo Marine.
If it happens.
Allianz, maybe AIG, Zurich. There are some names in the public market.
There's some names, but also, I don't think the risk is quite what folks think it's going to be if the U.S. Navy steps up to bat, and I think they almost have.
Chris, really appreciate it today. Thank you.
Sure, good to see you guys.
Chris Grisanti with MAI.
All right, more Power Lunch right after this break as markets fight hard. Come back.
All right, getting a little bounce. The New York FANG stocks are hanging in there. Hanging in there. Very nice. Very nice. Okay. Oracle. And not much going on there. CoreWeave. T. Rowe Price. Thomson Reuters, rather. Sorry, T. Rowe Price. Thomson Reuters having a good day today. Big reversal. Got into this on Tuesday. The first big candle there when it showed up on most actives. That's something to say about most actives, all right? So here's Thomson Reuters. And last week on Tuesday, this showed up on most actives. So if you're just watching, a lot of you asked me this question. If you're just watching what's the most active stocks percent up on a daily basis, just check out what's going. Target was one. I almost took Target, and I missed the opportunity. That first dip over here. The first dip. Let me just go out 2 days. Okay, this first dip this morning, Target showed up, and the CEO or the CFO, whoever, somebody was on CNBC or Schwab this morning. This pullback, that was the opportunity right there. It was trading at 116. It's at 121 now. The high of the day, 122. So a 6-point move. Just watching the most actives, right? So if you just watch the most active stocks, a lot of times you can catch a winner. This is what we did with Thomson Reuters. Not really a big fan of the company, but the stock looked good. Same thing here with Workday. That's probably going to follow through tomorrow. It looks very similar to Reuters last week. Okay, so I saw the same thing, and volume was coming in. So there you go. There's Reuters. Okay, here's Tuesday. That's the first bit bullish candle. That was around 82 entry. It's at 105 now. It's a good way to pick up something that you're looking to look for follow through. Intuit that had earnings. Intuit had earnings. Look at it. The last 4 days. Very nice. Look at the volume. That's institutions. Intuit. Did I buy into it? I think I did. I think I bought into it, didn't I? No, I did not. Okay, I was thinking about it, though. Thinking about it and taking it. Didn't do it. Didn't do it. It's okay. JP Morgan, looking for more follow-through. Merck, looking for a bounce. Pharmaceuticals.
Here are some of the names to keep an eye on that could potentially have exposure to Lloyd's and others moving with the president's backing to write more insurance and help companies kind of get through the strait. Beasley, Hiscox, Lancashire.
Yeah, so just check out the top 10 market movers. This is the S&P 500. You can do the same thing with the Dow. Dow only had Verizon this morning. Look at the change. Verizon was the only one that was green this morning. Look at CRM coming off the low. Here's another one. CRM coming out of a base. That's probably going to do well. I just don't want to take on too much risk at the moment until we get finished with the whole RAN issue, right? But all of these look good. If you want to take one of these for a ride, pick one. Walmart already have a position, so looking for Walmart to follow through and take out that upper Bollinger Band. Okay, that's Walmart. Microsoft, got Microsoft as well. That looks good. Microsoft. IBM, no position. Looking for IBM. CRM, no position. I got 3 of these. 3 of these I have positions in. American Express. There was a big trade on American Express yesterday. I posted that in the trading room. I think, let's see, American Express. American Express. Let me go ahead and buy some American Express. American Express, they were looking at what? The March, that was this March 13th. 2 weeks. 340 call. AXP 340 call. When do they report? AXP. Okay, they're fine. 314, American Express.
And the president said during this press interaction in the Oval Office that he told his Treasury Secretary, Scott Bessent, that we don't want anything to do with Spain. We're going to cut off all dealings with Spain. So the question is whether or not the president meant that he's imposing a trade embargo of any kind. Here's what he said in the Oval. Take a listen.
They were the only country that in NATO would not agree to go up to 5%. I don't think they would have agreed to go up to anything. They wanted to keep it at 2%, and they don't pay the 2%. So we're going to cut off all trade with Spain. We don't want anything to do with Spain.
So the president there suggesting, or seeming to suggest, that he wants to cut off all trade with Spain. Scott, I can tell you that I've been in contact with or reached out to the Department of Treasury and the U.S. Trade Representative's office. No answers yet to our questions about what the president meant in the Oval Office and what exactly the status of U.S. trade with Spain is at this point.
Eamon, there's also the obvious question, and it was asked of the president today in the Oval. What led to these strikes in the first place when they occurred? Can you discuss that at all relative to what the Secretary of State had to say last evening? Because there is some level of inconsistency there.
Yeah, there's been some real confusion about exactly what Secretary Marco Rubio meant yesterday when he was talking to reporters on Capitol Hill. What Rubio said was that the imminent threat presented by the Iranians was that the United States knew that the Israeli government was going to attack Iran. And in that case, Iran would respond against the U.S. So rather than sit there and absorb that punishing attack from the Iranians, the United States decided to go in alongside the Israelis into this attack on Iran. Now, that provoked a lot of controversy, the idea being that, wait a second, is the Israeli government in charge here or is the U.S. government in charge here? Who decides when the U.S. goes to war? The president today adamant that it wasn't that the case, that the Israeli government tipped his hand. It might have been that he tipped their hand. That is, that he was the one who made the decision. The president really anxious to dispel any notion that any government other than his was the decision maker.
Thanks for that update. Appreciate
Okay, we're just kind of consolidating here. Nice hammer.
the oil spike today. Pippa Stevens is watching the entire energy complex, as always, joins us now. What's the latest here?
Hey, Scott, so oil is well off the
All the New York fangs are a little bit off the highs, except for Amazon. Amazon's at the high of the day here. Amazon.
Insurance for tankers traveling through the Gulf, and that if necessary, the Navy will begin escorting tankers through the strait. WTI at 72 now after earlier trading as high as 77.89. But European natural gas is still the big mover as Qatar LNG output is shut in. TTF adding 66% in 2 sessions, now at $54, more than 6 times as high as U.S. Henry Hub prices. New Fortress Energy, Next Decade, and Venture Global holding on to some slight gains here since they have exposure to LNG and are seen as potential beneficiaries in a supply slowdown. Scott?
All right, Pippa, thank you for that. That's Pippa Stevens. Travel-related stocks very much in focus again, especially the cruise lines. We turn to Contessa Brewer for that part of our story today. Hi there.
Yeah, and there are cruise ships stuck in the Persian Gulf right now. The State Department's global warning, Scott, to travelers is taking a toll. Cruise lines getting pitched. Now, Carnival famously refuses to hedge its fuel, and this week especially, I've heard lots of analysts questioning that decision. Viking is pausing its sailings in Egypt until March 31st, but said in its earnings call today that its customers are well educated geographically and they trust the cruise line with their safety. Norwegian is still suffering from its earnings report yesterday. It was more about the Caribbean. And on the call, missteps were mentioned over and over and over. That stock has been down a lot over the last 2 days. Royal Caribbean caught in all these worries about rising gas prices as well and how it might cut into consumer discretionary, whether people will still feel safe in their
Okay, the New York fangs are easing off the highs for the most part. Amazon's holding the high. Amazon.
Blackstone story. Its shares under pressure today on those record redemptions. Our Leslie Picker following the money there. Hi, Leslie.
Hey, Scott. Yeah, off the lows of the session, which I saw were down about 8% at the lows, but still declining about 2%. Biggest laggard of the alt managers today, down nearly 3%. But still, you could see the biggest laggard of that alt manager cohort. This another private credit redemption story with Blackstone announcing that in the first quarter, redemptions for their semi-liquid fund known as BCRED were nearly 8% of the shares outstanding, up from 4.5% in the fourth quarter. The film is fulfilling all of those redemption requests. BCRED with $82 billion in assets.
Amazon looking for a break higher. Amazon, watch Amazon here. Looks like it's trying to do something. Amazon might get a move. Might pop through this area. Here goes Amazon. Watch Amazon here. Amazon trying to push above the 50-day, 200-day rather. 200 days overhead. Or is that just a trend line? That's a 21-day. That's a trend line. I just put that there. Okay. Amazon. Okay, Amazon breaking out.
themselves. It doesn't mean there won't be individual credits that get in trouble. It's not investment grade credit. It doesn't mean that there's not disruption.
Amazon breaking out.
But the underlying low leverage loans here and the performance of those loans, that's what's going to stand the test of time.
Now, this is interesting, Scott, because while both Gray and some executives from Blue Owl largely blaming negative press for redemptions and outflows, Apollo CEO Mark Rowan saying at a conference today that he's actually expecting a shakeout for private credit, noting he doesn't think it will be, quote, short-term. Scott.
Almost alluding to the commentary that we got from Lloyd Blankfein the other day, Leslie, when he talked about a reckoning. Those were the words that he used.
That's exactly right. So you've got these schools of thought. Obviously, when you have a retail product and there are a lot of negative headlines in a space, you would expect to see redemptions tick up. And a lot of these managers say you have the redemptions ticking up, but then look at what's going on with our loan book right now. It's not showing much in the way of deteriorating performance. There are some, BDCs out there that are having some struggles, but broadly speaking, things have held up okay. But as Faber pushed John Gray earlier, he said it's the potential for the future. It's the software exposure. If that gets significantly,
All right, trying to rise up a bit more. Let's see if we can't get a bid here in the market. There goes Amazon, pushing a little bit more.
Underwriting standards, are they there? All of those questions are really circulating. So
Okay, Pinterest looking good. Pinterest.
Headlines, but also, there's the mark question, the market question. Are we trusting what
Pinterest.
we're seeing? And there's just the future. What does the future hold? And will I be able to have liquidity
Through the 20-day. Pinterest looking through the 20-day. Pinterest. Looking good. Looking very similar to a lot of other positions we've taken recently off the low. Microsoft. Microsoft coming off the low. Big day for Microsoft. That's one of the best days we've seen. And it came on a day where we were down 2%. That's pretty amazing. Microsoft. Market's down 2%. Microsoft decides to start moving higher. So they were buying the low.
We're bottomed yet, but this is what looks like the makings of a bottom, right? That you get bad news and the markets are taking it in stride. And more importantly, I think we've had a position reset. And so on the other side of this, I think is going to be a lot of opportunity.
What would give you the confidence to say, that's a sign of a bottom? What do you need to see?
Well, some things like if we go back to April, a simple thing would be the VIX making a spike to over 40. Last year was 80, but we won't get to 80. And then, of course, retracing. That would be a clean sign because that's so much de-risking. Another sign would be we get another scary headline and gold continues to sell off, and then stocks actually turn green on the day because that means we've washed things out. I think we're pretty close.
You're watching oil as closely as everybody else is. I thought it was interesting. Some of the notes today. UBS says we expect only minimal or a brief disruption to global energy supplies. We therefore stick with our
S&P turning back up. Amazon.
Will produce good gains this year. Katie Huberty over at
Amazon. Okay. Apple. Little fade there on Apple. Little fade. It looks worse than it is. It's the 1 minute chart. 1 minute chart. Okay.
Things that kind of made sense to me. Spiking on closures,
Google.
Potential closures of the Strait of Hormuz, but the response from Washington. And I think that's maybe more important. That I don't think Washington wants high oil prices into the midterms. And of course, it's very unpopular with Americans. I mean, it's a big burden. So I'm going to be in a camp that I'm watching the price action. I think it's encouraging that oil's not surging into the close.
And part of the Huberty note focuses on the AI trade, which has been really interesting, I thought, over the last couple of days. Back, some might say, to the safe haven type price action. I mean, look at right now. Microsoft's up, Meta's up, Amazon's up, Nvidia's traded better over the last couple of days. What do you make of that?
Well, in our view, March was the makings of a bottom because the software, the Mag 7, and the cryptos we thought were like 90% through to their winters or declines. They are outperforming, and I think that's a sign of leadership. But fundamentally, you're absolutely right. If we get global trade disruption, you still need AI, and you still need a Mag 7. So I think they're actually good fundamental stories.
There's a technical side to this story, too. Stay with me just a second, because certainly one of the key questions facing investors, what to do in the markets given the unrest in the Middle East and the uncertain road ahead. Our next guest, in fact, is watching the charts for some clues. BTIG's Jonathan Krinsky joins us now. It's good to see you. A note from yesterday said, quote, "When missiles fly, time to buy." Expand on that thought, if you could.
Yeah, good to see you, Scott. So, I mean, I think, if you look throughout history, geopolitical conflicts are rarely a long-lasting negative catalyst for markets. They tend to be short-term isolated events. And, once we get some clarity on the event, the de-risking kind of tends to reverse. And there's some things you asked Tom, what do you need to see a tradable bottom? So there's things we watch similarly to kind of give us clues to that. One thing you mentioned the VIX, we look at the VIX curve. So looking at spot VIX versus the second month future, that was inverted by about 4 points. That's the most since last April up the lows. So there's certainly room for it to invert more, but that's a sign that you're probably in the later innings of the sell-off when you finally see that inversion. As far as oil goes, we look at the energy stocks relative to oil. So this morning, crude oil was up about 8%, but the energy stocks, if we look at the XLE, was unable to take out yesterday's high. And in fact, it traded red well before the recent headlines that caused oil to give up its gains. So those are two
All right. Nokia. And okay. Yep. Looking good, Nokia.
What's not. We kind of have a first in, first out with areas like software, which has been, that was one of the first groups that went green this morning. So it seems to us like that is fully washed out. And then finally, they're finally selling the leaders, right? The memory stocks, I think, were kind of the final holdout in this bull market. We saw
Robinhood,
which is an area we were cautious on last night, down about 7%. So a lot of the memory names trade in sync with Korea. So we're finally seeing
Charter,
last holdouts kind of get sold, and I think that's another sign that we're probably towards the later innings here.
All right, we'll make that the last word. I appreciate you joining us with a really good look and a simple to understand one on all things that are happening from a technical standpoint, perhaps within the market. Let's bring in now the Wharton School Professor of Finance, Wisdom Tree Chief Economist, Jeremy Siegel. Fundstrat's Tom Lee, of course, is still with us. Professor, it's good to see you. Love your thoughts here on what you make of these market moves over the last couple of days based on your experience.
Yeah, well, when I sent my notes over at noon, Scott, I said we have to keep the Straits of Hormuz open. I said that was critical, and the news we got over the last hour is really good about that. I certainly expected the U.S. to provide insurance, but we need the escorts, and I think success on escorting tankers through would be a big political victory for Trump. Some of the early developments that we had hoped for, the rising up of
Google trying to break out now too. Google trying to take out the high of the day.
That would negotiate with Trump. That has not happened so far. So I think the next step is if we can keep that straits open. Iran has said, we're going to prevent tankers from going through. That would be a political victory, and I think that would be very, very positive for the market. But that's going to be something that I think we all want to see over the next week or so.
Professor, you've seen a lot of markets during times of turmoil, certainly war and other events that have shaken investor confidence at times. Are, in fact, those moments what the charts have suggested to Jonathan Krinsky? Missiles fly, time to buy?
Yeah. Generally, the fright of war and the angst of war has been a time to buy. When World War I started, people, the exchange was so nervous that there was going to be a total collapse. They closed the New York Stock Exchange for 6 months, which is the longest period of time in U.S. history it's ever been closed. But the war actually happened to be good for the U.S. economy. So when they reopened it, stocks were rising.
Okay, S&P fading a bit. S&P.
Soared up to new highs.
Let's see, Apple, Amazon, Google. Google trying to go. Google trying to go. Okay, I have to take a 2-minute break. I'll be right back.
New York Stock Exchange, and this is the watch list. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to Market on Close. I'm Marley Caden coming to you live from Chicago alongside Sam Bottas at the New York Stock Exchange. Want to welcome in our next guest. Joining us now, Zed Francis, the CIO at Convexitas. Zed, thanks for being with us today. Always love having you. A lot of interesting moves in the market today. We started the day significantly lower, still lower across all of our major indices, but seeing a bounce after this announcement of the potential protection of some ships traveling through the Middle East. I'd love to just start with your thoughts on the market action that we're seeing so far this week in the events of this weekend.
Yeah, I mean, I was going to kick it off with something that maybe sounds surprising. So 5-day realized volatility in the S&P 500, so that's, close to close, how much is the market moving, is only a 5. And to put that in, where does it fit in historical standards? That's like 18th percentile over the last year. So what's actually happening day to day, close to close, has thus far been very, very quiet, been much quieter than your average week. And what's included in that is not only obviously the geopolitical events of the last handful of days, it also included NVIDIA earnings. So a ton of events and very little movement close to close. But I think what's happening underneath, the surface, especially in rates and credit markets, are starting to get kind of interesting, and people should be starting to pay attention to that rather than the S&P kind of bumbling around to nowhere at the moment.
All right, now I want to talk about both of those things, but first I want to talk about this sort of volatility or seemingly lack thereof, or why we're seeing such a tepid response to events that appear to be major market catalysts and are simply not showing the metrics that they are. NVIDIA's earnings being one, a major geopolitical event not showing the kind of response. I had a guest on Trading 360 earlier today that said the action we were seeing this morning, he would have expected on Monday when we opened, not today.
Yeah, I mean, I think there's probably two things going on. Well, the first one that's obvious is rotation. So we keep having different sectors every day go up and different ones go down. So it's definitely smoothing the return profile at the top. I also have a little bit of a sense that retail investors in general pretty well invested in risk assets, but institutional investors are a little less so well invested. So they might be taking advantage of some of these pullbacks to get to a little bit more of a neutral seat. I think it's helping the idea of us kind of seeing this constant bid to markets every time we get one of these wiggles. But I think those two things are kind of helping stabilize things for the moment. But I'd say the most interesting item that I've been paying attention to between yesterday and today was actually gold. So gold was, had a healthy return day yesterday, which you sometimes see when you have geopolitical events. But it's having a very nasty day today, which just is at least signaling to me, like, are we getting to a little bit of that point where people just need liquidity? Like, is it forget, like, this is what I should buy, this is what I should sell, or just, I got to trim everything. And it's always easier to trim things that you're likely up on. Looking at that chart on the screen, it's almost hard to have screwed up, being up on a gold position. So, I think we're starting to get a little bit more stress filtering through people actually reaching for liquidity of any kind rather than necessarily making specific decisions on what to buy or to sell.
All right, and I want to go back to some things that you brought up in your first answer. You're talking about the move that we've seen in rates. What are you noticing in terms of that? What's it signaling to you?
Yeah, I mean, obviously, oil going up is signaling the potential for inflation. Not only for a short period of time, but possibly longer, and that's dragging rates higher. But it was a pretty substantial move globally yesterday in rates, and it really was across the curve. Like, something of a quick geopolitical event causing a spike in oil that should move rates in the short term, but 10 and 30-year rates having the pretty significant move they had yesterday, it seems a little interesting. Again, it kind of happened globally. So, I think the rates market is not agreeing necessarily that this is a short-term issue in terms of the price of oil, and are pricing in a little bit more of a higher inflation picture for not only the short term, but the medium term that's actually driving those interest rates higher.
And Zed, what is your viewpoint on what we're watching right now, what we're dealing with? Is it a short-term issue, or do we need to be prepared for this to be a longer duration issue?
Yeah, I mean, I have the same ability to guess as kind of anybody else, but I would think it's a difficult situation to start and end quickly when specifically talking about oil prices. I think that's probably, out of all the things on the list, the one that's going to be difficult to have a significant, backtrack to kind of where we were, as causing issues in terms of distribution of oil is probably the easiest lever anyone kind of involved can actually pull. So that's probably going to be the hardest one to fix. So I'm kind of agreeing with the rates market here, saying that there's this increase in oil prices, obviously causing an increase in inflation expectations and following through into the rates market. That's probably a reasonable move that the rates market is making, for an opinion.
All right, and earlier I think you said you referred to equities as churning to nowhere. If I heard you correctly, from your viewpoint, are we looking at a healthy consolidation here, or is there something under the surface that we need to be paying closer attention to?
Yeah, I mean, I think the interesting one today is the winners were definitely being sold. So you look to Korea as a broad market ETF that was getting a lot of volumes, like pretty healthy down move today. The semis market that's been basically one of the best performing sectors year to date, it's not really recovering with the rest of the market here this afternoon. And even in the semi space, the names that had the healthiest returns are definitely weighing things down. So I think for the moment, this is a little bit of a, maybe I should get a little dry powder, and everybody is, it's easiest to reach for things that you actually have made money on. So I think that's what's happening at the moment. But it's very impressive that between the move on the back of NVIDIA last week, even though the earnings themselves didn't have anything too dangerous in them, and then what's happening, the geopolitical events, but yet we're still kind of 2.5% of all-time highs. I would take the opportunity to make sure you rethink your portfolio construction to be ready if this actually turns into something more major.
And Zed, I want to touch on the last thing that you mentioned was credit. I see in the notes you sent over, you called it a one-way train since January, and you say it's been leaking for a month here. What are some of the early warning signs that you're keeping an eye on in the credit markets?
Yeah, I mean, just using high yield as an example, we're nowhere close to historical average. We're much tighter than that. Like, rounding numbers, high yield CDX over the last dozen or so years, average spread is about 380. And we're at 330 right now. So it's not saying, it's saying we have less risk than the average, frankly, at the moment. But it's basically kind of drifted wider every single day since the end of January. And I think this is finally the issues that we've been seeing over the last maybe year in private credit kind of making its way into the pricing of publics. And once that kind of starts, it's difficult to stop in terms of having that kind of a retracement event. So, credit's been sleepy, frankly, since 2020 at the end of the day, but it should be something that's be putting on everybody's radar as a little bit of a potential signal, whether this is just, churning to nowhere, or do we actually have a real problem in front of us.
Well, Zed, always a pleasure to talk to you. Thanks for being with us this afternoon. Hopefully we can see you in person next time. Zed Francis, the CEO and co-founder at Convexitas, and I'll send it back to Sam in New York.
Thanks so much for that, Marley. Well, coming up next, we will be joined by the team from ServiceNow after the company launched an autonomous workforce that thinks
fast food like Go on to the 2% target.
Google,
And oil prices
Netflix,
not only gasoline prices, but also how people think,
Netflix.
and what their inflation expectations may be.
Was looking pretty good there for a while, and then it just kind of went into a sideways range. Looking for Netflix to do something. Netflix. All right, so it could have been a lot worse. Could have been a lot worse. The whole issue with Iran could be a lot worse than it is. Seems to be getting better every day. With the other close countries that are very close proximity, Iran shooting at them now. They're basically against Iran, so that's all these positive things happening. Just don't see Iran being able to hold out much longer, knowing the state of the U.S. military. Nokia, Microsoft.
And I know Kevin knows that history. So we're just going to have to
Looking for a follow through, pushing higher.
the members of the FOMC, because as the former vice chairman of the Fed said, John Trump, is a little bit caustic in his criticism. Yet he's got great personal skills. And I think he has a chance, but please bear in mind, he's got to think of what it's going to look like when he's 70. He's only 55. He may be the longest Fed chairman in history. And it's that legacy that he's going to have to be aware of, and I'm sure that he is. And remember the example of Truman and Jesse Martin? It didn't turn out the way Truman wanted. He wanted lower rates. He wanted an accommodative Fed, and they didn't give it to him as soon as that man was appointed.
Appreciate your insights as always. Thanks for joining us, Richard. We'll see you soon.
Thanks for having me. I appreciate you.
Richard Fisher. Yep, you're welcome. Coming up, quite sloppy optics. OpenAI CEO Sam Altman defending a lightning-fast pivot to secure that contract with the Defense Department. Sloppy, those were his words, not mine. More details when we come back.
So Saudi Arabia is looking to strike Iran too now, inside of Iran. Just looking at all these news things that can go wrong. Okay, New York Fangs look good. Top 10 on the NASDAQ going into the last 30 minutes. Workday. Thomson Reuters, number 2. That's really wild. Thomson Reuters continues to trend higher. Okay. Pretty big bullish day. It's off the high of the day for the time being. Let's go to the 5 minute. 1 minute's a little bit too noisy. 5 minute. Okay, Google was trying to break higher. Google, that's at the high. Amazon, near the highs. Apple turning back up. Apple turning back up. Love to see Apple close above the 50-day. It doesn't look like it's going to happen today, though. Microsoft had a good day. Microsoft. Okay, coming out of this base. Microsoft. Maybe the next couple of days we can finally start to see some blue skies for Microsoft. They'll start to add to our MSFU shares at that point. I don't think I have calls. Microsoft, I don't think I have calls, do I? Yes, I do. Okay. But those are out in June. June calls, 425, 430. Microsoft, that's a ways off. June calls. Those are profit. So when did I buy these? Let's see. View trades. I bought them on February 25th. Okay, so the 25th, Microsoft. That day? That's the 24th. 25th was that day, right? That was a Wednesday. Okay, bought them on Wednesday. We're higher today. Looking for a follow through. nice profit so far, and also have him as SFU shares. So I'm looking for Microsoft to get with the program. I bought way out in June. I told you why earlier. I wanna have less risk on the market, but yet still be involved. So that days like today, I don't like suffer largely because I have mostly shares. I wanted to get out of that risk. So that's the way I did it. Go to debit spreads and straight calls. Looking for upside without being exposed to 1,000 shares of Microsoft on a dump. Once the markets start trending, it's got to get above 7,000. Once we're above 7,000, start trending again, then we can start to get back to owning shares and selling covered calls. Also selling iron condors for earnings. I haven't done it that much this month, February rather. I sold very few iron condors and very few credit spreads, only because the markets were super risky, especially on the downside. Especially these big cap names, you got to be very careful what you're buying because you have to make sure that you're not buying a weekly option. They've introduced all of these, was it Monday, Wednesday, Friday options now on stocks like let me look at Apple real quick. Apple, for example. You want to buy something that expires differently than you think. You can caught owning shares, especially if it's performing well. Let's see. So we got March 4th, March 6th, March 9th. March 4th, 6th, 9th. Okay, so March 4th is tomorrow. So Wednesdays. 4, 6, 9th. Yeah, so Monday, Wednesday, Friday. That sucks. I don't want to do that. Makes it easier for institutions to be able to assign you shares if they want to or whatever their reasoning. I'm sure it's not the real reason. Never is. Okay. They're always gaming the system. Once you figure out the system, they're gaming it so that you don't do as well unless you know what you're doing. Okay, Amazon's trying to break out here. What is Vinny talking about? He's just rambling right now. Don't mind him. He does that sometimes when he's not paying attention or when the markets are doing funny things. Netflix looks like it wants to go too. There goes Amazon. It's about to run. Amazon's about to run. He answers himself too. You ever do that? You ever talk to yourself and answer yourself? Okay. Best Buy. Best Buy was very surprising to see Best Buy on the top of the NASDAQ and the S&P. S&P 500 was at the top of the list this morning. Amazon with Best Buy with earnings. Okay. Surprise. Minus 60 million. They came in at 15 cents. No, they came in at 261. They surprised by 15 cents. 6.15%. Okay, so the gap up is we're still in a downtrend. Still below the 50-day and 200-day. So Best Buy trying to do something, but it's on the top of the list. It was deceiving. Workday, Akamai, Palo Alto Networks, PANW, Palo Alto. That's turning, but it's below the 921.50 200-day. Okay. Trade Desk. What else looks good there? What's the top of the NASDAQ? Workday, Thomson Reuters, Team Atlassian, Palo Alto, Zscaler. Let's see what Team looks like. Team. Back below the 50-day Team. That's not Team. That's TEAM. Team. All right, there we go. That's better. Coming off the base. And not crazy about that. Microsoft looks so much better. Microsoft looking better. Fading into the close. Still a pretty bullish day. Palantir looking for that to follow through. Palantir about to take out yesterday's high after dipping below yesterday's low into this gap, turning back up. Palantir looking good. Okay, we got 22 minutes to go. The day has just flown by.
Scott, so Sam Altman is now very much on the defensive, in defense mode, really. OpenAI CEO says his company shouldn't have rushed its deal with the Department of Defense. This was in a memo sent around last night. It was on social media. He says that we were rather genuinely trying to de-escalate things and avoid a much worse outcome, but he says that he thinks it just looked opportunistic and, quote, sloppy. Altman did also outline new, more specific contract language around some of the surveillance and autonomous weapons questions versus what was communicated first on Friday. OpenAI has seen backlash since then from employees, also the broader public. After it did win that contract you mentioned, the rival Anthropic would not agree to. You've also got Anthropic seen some backlash as well, taking its share of the heat. The AI company was designated a supply chain risk by Defense Secretary Pete Hegseth, and the president said last week he was directing the government and all agencies to stop using Claude, that's Anthropic's AI model. Despite that,
Netflix looks like it wants to go right here. Watch Netflix closing near the highs. This is a good close. Okay. Netflix trying to go here. Netflix.
Appreciate that reporting. That's Kate Rooney. For more reaction, we're joined now by Big Technology's Alex Kanchowitz. He's also a CNBC contributor, and he's here with us.
Netflix is about to go here. Here we go. Netflix. All right.
Sloppy aside.
Who cares?
It was opportunistic for OpenAI to sense an opening that it might have had, and it bounced.
Without a doubt. Absolutely. No, it was definitely opportunistic. Now it just seemed maybe nakedly so that the moment that Anthropic and the Department of War couldn't agree to a deal, OpenAI was there, swooped in, and agreed to that same deal. But this is million dollars that Anthropic and the Department of War were talking about.
Thank you, Nick. Take care.
Supply chain risk. This is potentially now for OpenAI every government contract.
Yeah, Netflix. I like it. Netflix.
Not only that, it is the suppliers that we're working with the U.S. government.
Netflix going.
Work now, Anthropic. If this goes through, and that's still an open question, it can't do it. So OpenAI has a chance there. So opportunistic, without a doubt. Sloppy. Sam Altman said it himself. Can they clean this up? I think
Coming out of a squeeze. ABCD pattern. Netflix.
Beautiful picture for OpenAI.
What about the bigger picture then? If you want to talk about that, the idea that some have said
Netflix.
that this was OpenAI, not only selling
Netflix.
Anthropic, but others in the industry.
All right, we got a few minutes to go.
Some level of control.
I was hoping for more of a run up. I was hoping for more of a run up today into the close.
Well, I think that this is a moment where this technology is moving fast, as Dario put it. But I don't necessarily think that that's enough to blow up a contract with the government. A lot of this has been over hypotheticals. I don't believe the government was building a big surveillance database and using the LLM data to stock it. Not only that, I spoke to people who have knowledge of what goes on in the government in terms of Anthropic's use there. And it's not like in the autonomous weapon situation, Anthropic has like hands on the kill switch there or is shooting weapons. Maybe it was used in this attack on Iran, but it's not like it played a pivotal role there. So for the companies to not be able to make a deal with the government, I don't find this language to be consequential enough to blow that up. And it's on Anthropic and the government, I would say, to not be able to reach a deal.
Okay, you said something interesting. Technology is still reasonably new.
All right, Netflix is going.
We see almost a week-to-week development of different tools that are being used by different businesses, and thus you've seen the fallout in the market in various sectors as a result. I asked Low Tony about that very question yesterday, how new this technology is and how the industry is trying to get its arms around that and how it can be used. I want you to listen to what he said. We'll react on the other side. Here's Low Tony.
I think it's really more of a point now that we're seeing that's more specific to AI in particular, and the fact that these companies are scaling so fast they're starting to have a need to address situations much earlier than we've ever seen before. And so, I think what we've seen now for AI is we've moved beyond AI as experimentation, and we've now moved to AI as, in this case, being part of our national defense infrastructure. And so now things get a lot more complicated.
Interesting thought there. It's like, wow, we're growing so fast. We didn't realize that these types of issues would come up as soon as they have.
So I think there's a distinction that we have to draw. So is it moving fast? I believe it is moving fast. Is it going at an exponential rate? That's the open question.
Well, the companies themselves clearly are growing at an exponential rate. Look at their valuations and how quickly they are increasing and how fast their technologies are evolving.
The revenue is growing exponentially, but the question is the technology's capabilities growing exponentially? And that is really where this dispute between Dario and the Department of War came in. His belief that this isn't exponential was part of the problem because he wanted to then limit future uses. And I think the jury is still out about whether it is moving on an exponential. The technology is moving fast, but if you're in the tools, as I am every day, you see that it's still very buggy. I mean, Claude Code is amazing. It can build programs for you, but you have to revisit over and over to work out the bugs, to be like, you missed something.
Netflix. Okay, so that looks good for Netflix.
No, but if you are
Coming into the closing bell.
as a company and your technologies that the United States government
15 minutes to go. Netflix going. There it goes. There she blows.
You've evolved pretty fast, pretty quick, to a sophisticated standpoint that I think the industry itself is trying to get its arms around.
Yes, they've definitely made it into production faster than almost any technology in history. I won't take that away from them, but I just want to emphasize that the role that they're playing in the
It's actually over here. A's over there.
that we have going on there, it's there, but it's not
Very nice.
yet. That's what the people who are close to this technology say.
I could say this is B, right? B. This is C.
Working in the military, but it's not
C.
central technology. And I think that distinction is really important to make because we shouldn't come away from this thinking that without Claude, the military wouldn't be able to make pinpoint strikes.
Very quickly, story breaking just in the last few minutes from the Wall Street Journal that Meta is creating a new applied AI engineering organization, ultra flat structure as it's described, up to 50 employees to one manager. What does that mean to you?
It means that Meta is trying out yet a new way to manage in this AI world. Now, you could say because they have AI, maybe they're able to manage with much smaller amounts of middle management. I think that's going to be a trend we're going to see in the tech world more broadly. Ultimately, you could also see it as Meta saying, all right, well, we've tried one version, another version. Let's just try something else and trying to see what works.
All right, good to have you here as always, Alex. Again,
14 minutes to go.
Up next, we track the biggest movers into the close. Christina's back.
All right, so kind of deflated at the high of the day. Netflix looking okay. Netflix looking fine. Netflix, nice pop.
Perhaps to the downside somewhat. There are some bright spots.
Nice follow through on Netflix.
Which we'll talk about in the
Palantir is about to take out the high too. Palantir.
So there is kind of perhaps that expectation for some broader movement.
Palantir. Look at that ABCD pattern on Netflix.
We've got there that index that we've got in the middle. That's suggesting there's a little bit of a bullish divergence as this price comes into this earnings announcement. That could signal the possibility of some upward potential movement if it can break out of that diagonal trend line that it's been running into as a resistance level for the last month and a half here, Marley.
All right, so let's move into some of that options action that we're seeing today. Are we seeing greater activity than normal in terms of volume? Is it skewing one way or another? What are some of the takeaways that you've noticed?
January call flies on Microsoft. January call flies. Let's see what January call flies. Microsoft January.
saw on that 1-year chart, that implied volatility line, implied volatility sits at about the 63rd percentile. So it's above its midpoint, but it's not extraordinarily high, especially going into the earnings announcement. Seems to be a characteristic of this particular stock, so it's kind of bleeding off a little bit into the earnings. But that doesn't necessarily change what's been going on. Not a lot of really unusual size. The largest trades that have happened over the course of the day have been in the 400.
Okay, January call flies on Microsoft. Let me see what they got going here. I should write this shit down. Sorry. Let me write this stuff down. Okay. Microsoft. 50,000 of the Microsoft MSFT. Okay, 50. Okay, what do we got here? We got the 575. 575. Okay. Where's the other ones? Where's the other ones? 575. Ooh, 630. 575, 630. And what's the other one? 675. 675. Let's see what that goes for. Microsoft. Microsoft, let me buy January. Okay, let's see. Buy a butterfly. 675. What's the other one? 630. 630 is the middle. No, wait a minute. 575. 575, right? Yeah, 575. 575. 630. 675. 630. 630.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Microsoft, let's see what we can get into that for. $2.17. Okay, limit to 18.
It's everything in one place. It's like all in one place. Come again? Yeah, invest, trade, get full service and anything in between.
I think I'm going to be sick.
We have to buy that now.
Invest your way with Schwab.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Thanks, Jason, for that one. Okay, let me thank Jason.
Welcome back to Market on Close.
Microsoft call flies, 50,000 of them.
It's time now to take a look at some overlooked stocks, and we're watching shares in Ziff Davis rallying to a new 52-week high. So let's figure out why, and welcome in George Siller, Senior Markets Correspondent. So I see this as a vertically focused digital media and internet company, so much so that the stock seems to have gone vertical today, up almost 50%. Just talk us through exactly
625, 625.
Yeah, I think this is a case of a special situation. I'll explain all the details in a sec, but I didn't know this company beforehand, but I think a lot of folks understand.
Netflix, nice move there on Netflix.
I mean, ideally, it's a digital media and internet company. It's really known for its two technology news sources, PC Mag and CNET. The company also supplies or has multiple brands under its umbrella. So it's really a digital media conglomerate that's made about 90 acquisitions since 2014.
Low deferred line is 800.
Other websites and media content product websites.
Okay, we're dropping off here.
Health and wellness domains. Now, if you look at the news today, there was a significant catalyst, obviously, with the stock price hitting, some more than double price action relative to yesterday, at least earlier today. It was really based upon the company divesting of about 16% of its total sales, which accounts for about $1.2 billion in terms of what the company received from Accenture. So what they ended up doing was selling essentially their connectivity business, which includes Ookla, which is essentially one of these websites if you want to test the speed of your internet. That's one of the websites you most likely would go to. But basically, it's selling the assets off the balance sheet, raising cash, and if you look at the market capitalization
of the business yesterday was around $1 billion. So this effectively brought in $1.2 billion in terms of cash, which has supported significantly the stock price based upon the divestiture. So they essentially divested about 16% of their sales, which is approximately $232 million as of last year, for basically double their market cap. And that's why we see a significant jump in the stock price as a result. Now, what they're going to do with that cash is still unknown. The price is obviously going to move first, but some speculate that they're going to do some sort of capital repatriation plan, either some sort of share buyback, maybe a special dividend. They already have about $600 million in cash on the balance sheet, so this essentially increases that by twofold to about $1.8 billion. But essentially, one of the things you got to keep in mind is that this is why I call this move today sort of a one-day wonder, because it's a special situation. It wasn't really a catalyst based on a full acquisition of the business, but essentially a partial acquisition. It was very accretive to them because one of these the challenge with some of these internet and media conglomerates is they get really big and become very inefficient. The business itself in total really isn't growing all that much, about 2.5%. EBITDA is around 1%. And the stock really was trading yesterday at around 4 times forward multiple. Very cheap, but not necessarily cheap for a business that isn't growing very much. So I suggest today this is a really good move if you're a shareholder, but context matters, because if you look at the last 5 years, the stock is down about 60%. And I think that speaks to the challenging business environment the company's been in, especially with sales and earnings being in decline over the last 5 years. And even if you go back just a little while ago when they reported their last quarterly earnings, they missed both on sales and earnings. They actually pulled their 2026 guidance. And they talked about really some weakness in the tech and shopping digital brands, infrastructure names. And essentially today was sort of a reward for shareholders who have been patiently waiting for some sort of a value unlock, and that happened today.
Yeah, and I mean, putting it into context, it was trading up about $140 at the back end of 2021. So it's come off quite a bit since then, but certainly a significant move today. A bright spot in what is otherwise a broadly down market for us today. So thanks for getting us across this company. George Silla's there. I'll send things back over to Marley.
Okay, we got 5 minutes to go. 5 minutes to go. Coming into the closing bell.
The action in the morning did feel very kind of flushy liquidation type activity, where the winners for the year getting sold very hard, the shorts actually improving over the course of the day.
Netflix, nice little pop into the close. A little profit taking there.
Software ETF, it's going to have like 50% above average volume today as it goes higher. Microsoft, of course, the biggest software company, is going to have only like 65% of its daily volume. So
Workday closing at the highs of the NASDAQ 100 and the S&P 500. Workday today. New York Fangs look a lot better. Got a feeling we're going to hear more good news over the week, overnight.
Take us around the world and across all the asset classes, including private credit, to assess where we are.
Oh, good booking. All right, we'll see you then, Mike. Thank you. CrowdStrike, Seema, is one of those names that a lot of people have their eyes on, given what's happened in software, even in cyber.
For sure. I mean, this is a stock, Scott, that is down 17% year to date. So the company tonight will need to prove to Wall Street that Anthropic cloud security tool is not a threat and that their customers remain locked into long-term contracts. The latest channel checks conducted by Barclays and Piper Sandler suggest strong demand at a time when cyber warfare is becoming a bigger concern amid a heightened...
Okay, Google trying to go. Google now.
The need to secure AI agents as
Google's trying to go. Watch Google. Okay, Google. Pop in. There goes Google. Need to get above the 50-day. Apple turning up now. Apple with 3 minutes to go. 3 minutes to go. Apple trying to turn up. Netflix. Nice, nice. Not a bad day, huh? Could have been a lot worse.
Very similar to what Seema spoke about. Box shares down 19% year to date as investors really worry specifically if Microsoft and Google are slowly eating its lunch through bundling. But the bull case is relatively real. Box is positioning itself as the intelligent content management layer for enterprise AI, where companies can just run custom agentic workflows on top of their own data. Leading indicators just last quarter, like bookings, billings, RPO, all pointed higher. The key metric today is enterprise advanced adoption. So management says
roughly 80 to 90%.
What did the shippers do today? Shippers like STNG, Scorpio, STNG. Let's see how they're doing. They probably bounced, right? They probably bounced thanks to the U.S. Navy helping escort. Okay, so we got a bounce. These were, 2 days down. Now we're starting to see a bounce. Buyers coming in. TK, TNK tankers, TK, DSX, Diana Shipping. Okay, that's back up to highs. Diana Shipping. Walmart, and Target. Target, I missed my opportunity on Target. I have Walmart. Target. Okay, a little bit of selling at the high today. Tomorrow, we might have an opportunity to do something with Target tomorrow. Target had a really good day today. Okay. Target. GE, looking for that bounce to follow through. GE looks fine. Constellation Energy. Okay, pulling back from the 200-day. 2 steps forward, 1 step back. Kimberly-Clark, KMB. Okay, big move on Kimberly-Clark, pulling back. Did I sell that? I think I did. Kimberly-Clark.
I think it's a time still to be patient, but it's a time where I think.
Yes, I did. Good. I took off Kimberly-Clark. I think like Thursday or Friday last week. Kimberly-Clark. So that's good. Software, IGV looking for higher. Robinhood looking for higher.
The market can only take so many hits at once and still high elevated valuations. I think it's still intact, but we do need to see resolution.
Palantir closing at the highs of the day, above yesterday's high. Palantir, okay, PLTR, Palantir. Nice close. Palantir. Nice close. Okay, we've got 20 seconds to go. Palantir, nice close.
Got about 20 seconds left. It's, if nothing else, given the mega caps, a little bit of a look again, as a bit of a safety place.
Yeah, that's right. I think we're seeing outperformance, at least relative outperformance of the Mag 7. I think you're seeing software positive on the day again. That's an unexpected divergence.
Okay, that's a wrap. Got a hard stop, folks, so I had to get out of here. Get out of here. Have a great evening, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com at the closing bell. It is Tuesday, March the 3rd. Have a great evening, everyone. Take care. I got to run. We'll see you tomorrow. Ciao.